exchange. We're watching shares of Toll Brothers, which has earnings after the bell today. The stock's up more than 20% since its last report. The numbers follow last week's revelation that Berkshire Hathaway has taken new positions in fellow homebuilders D.R. Horton and Lennar. That support from Berkshire coming as investors continue to believe the Fed could cut rates at next month's meeting, potentially adding some fresh fuel to the homebuilders. For much more, let's bring in Peter Bookvar, Chief Investment Officer at One Point BFG Wealth Partners, also a CNBC contributor. Peter, good to see you as always. Good morning.
Good morning, Frank. Thanks for having me.
That was quite the title on the new company, by the way. I had to read that one a couple of times.
Same company, just a brand new name.
New title, sorry, new title. All right, I want to get to the story here. So a lot of people think that a dovish Jay Powell could do something for the housing markets. You disagree. Why?
Well, I just think long-term interest rates are going to remain elevated, just as we saw after the Fed cut 100 basis points at the end of 2024. Long rates went straight up and have been around those levels since. I think there's a global aversion to taking on long duration, and long-term interest rates are higher across the world. Yesterday, the UK 30-year gilt yield closed at its highest level since 1998. So I think those looking to buy a home should not necessarily bet that they're going to get rate relief with the cut in short-term interest rates. Now, if you buy an adjustable rate mortgage that's more sensitive to the short end, then maybe. But if you're looking to lock in a 30-year, I don't think you're going to get that much relief upon rate cuts.
All right, so right now 30 years at about 6.59, basically 6.6. What do you think could move rates lower, or is there some other catalyst for the housing market that could create more movement in the housing market where people are willing to sell and move to new places?
You really need a pickup in the supply of existing homes. And to really be big picture here, you really need baby boomers to downsize. That is where most of the existing home supply needs to come from. Yes, the builders like Toll, like D.R. Horton, we need more supply, but the affordability challenges remain, and I don't think the builders can add enough supply to really normalize this market. It has to come from the existing home market. But on the other hand, if we did get a more existing home supply, if we did get a decline in home prices, which would actually stimulate the demand, well, then that would be a negative for our earnings of the home builders. So it's sort of a catch-22 here with this industry right now. That's sort of upside down economically.
Right. So, Peter, I'm sure you understand this. There's so many people with a mortgage under 5%, even under 4% right now, including baby boomers. It's really hard to move because your mortgage is going to go up, even though you're quote-unquote downsizing, as you're saying. So that doesn't seem like a likely setup, at least not in the near term. What do you think of Berkshire Hathaway is seeing in these home builders without any clear relief? And again, as you mentioned, even if we see this, the most dovish Jay Powell we could see, that's short-term interest rates, which may not directly impact mortgage interest rates.
Well, I think Berkshire and other bulls on the builders are hoping that you do get lower mortgage rates that would stimulate the demand. The problem, though, is the lessons we learned over the last 20 years, if you just stimulate the demand for housing via low mortgage rates without a coincident increase in supply, all you get is higher home prices that offset the benefits of lower mortgage rates. You need both lower mortgage rates and more supply at the same time in order to increase the activity in terms of transactions in the housing market.
Peter Bookvar, always good to see you. Thank you very much.
Thank you, Frank.
All right, sticking with the real estate sector, senior living seen for a long time as an under-the-radar real estate player with a sometimes sketchy reputation and actually could be on the edge of a boom, a baby boom to be exact. Our Diana Olick joins us now with this week's Property Play. Diana, good morning.
Good morning, Frank. Yeah, more than 4 million boomers will hit 80 in the next 5 years, and occupancy at senior living communities is hitting new highs. I sat down with the CEO of Ventus, a senior living REIT with a $31 billion market cap. You can see the stock up around 14% year to date. Deb Cafaro has been at the helm for more than 25 years.
We're buying billions of dollars a year in senior living, and we're seeing returns in the sevens going in with low to mid-teens unlevered IRRs. So there's significant growth in the assets, and we're buying below replacement cost. I've never seen that combination of investment characteristics in my long career in real estate. And so we're fully taking advantage of all of that.
And Annual inventory growth at senior living facilities in Q2 of this year dropped below 1% for the first time since NIC began tracking this in 2006. There were fewer than 22,000 senior housing units under construction in the fourth quarter of last year, the lowest in over a decade.
The reason supply continues to be constrained is a multitude of factors, but really the costs of construction are extremely high. And the costs of construction labor, the scarcity of construction labor, the cost of materials, and rents right now, what residents pay to live in our communities really isn't high enough to justify a development return in real estate lingo.
Now, even if we got the highest level of new development in senior housing that we've ever had, she says the population growth more than offsets that. Now, you can hear more from Deb Cafaro in our Property Play video podcast and newsletter. They are dropping this morning. Please sign up, cnbc.com/Property Play, or use that QR code. Frank?
So, Diana, the supply-demand situation sounds ideal for the current owners, but what are some of the risks?
Well, it's the risk that you see in the rest of the economy. It's high interest rates. It's whether or not we're going to see stagflation or what the broader economy looks like. I spoke to a lot of developers in this space, and they said they would love to build more units because they would make a lot of money doing that, but they simply can't pencil it right now with the cost of land, labor, materials, and of course the cost of capital right now to put these senior living facilities up. So that's the biggest hurdle to getting more units out there, to getting, to meeting even some of this demand, which is just increasing exponentially.
Diana Olick, thank you very much. Good to see you as always. All right, coming up here on Worldwide Exchange, tackling one of the most hot button issues in Washington, details on the new plan to keep Social Security up and running. We're going to be right back after this. Turn our attention now to Washington and a new effort to tackle one of the most hot button issues in the Beltway, Social Security. Emily Wilkins joins us now with how lawmakers looking across the aisle to keep this program funded. Emily, good morning.
Good morning, Frank. Well, yeah, look, as we've discussed before, Social Security recipients, they face a roughly 25% cut to their benefits within the next 7 to 8 years if Congress doesn't act to keep the fund solvent. So now we have a bipartisan group of senators saying that they found a solution, a sovereign wealth fund. It would borrow $1.5 trillion from the Treasury to invest in the stock market, in private equity, and other high-yield investments. Senator Bill Cassidy, who is working on the measure with Senator Tim Kaine, said the proposal would preserve benefits and keep the current age of eligibility.
It's too easy for Congress to say, let another Congress deal with it. We only have 3 more Congresses before this happens. And the longer we wait, the harder it gets to fix.
Cassidy said the fund would have strict guardrails to prevent political influence on the investments. The proposal also seeks to minimize any disruption to the stock market. $300 billion would be invested every year for 5 years until they got to that $1.5 trillion, and the fund would not be able to hold more than 15% of the stock market. Social Security is set to be depleted in 2033. That's according to a June report from the program's Board of Trustees. Yet proposals to cut benefits, increase taxes, or raise the age are non-starters, Cassidy told me.
For everybody who criticizes us, I say come up with a better option. Typically, the better option is to cut benefits significantly or raise taxes significantly. Well, lots of luck doing that. We've been trying to do that for 4 decades and it hasn't happened.
Cassidy said that he is working with committee chairs to hold a hearing on the proposal and hopes that with the bipartisan support they have now, they could wind up getting this actually passed on the floor. Frank?
So Emily, I want to go back to one point that you mentioned. You said that the fund would only hold 15% of the stock market. So is that only 15% stocks in this fund? Where else would lawmakers look for possible investments under this plan?
No, Frank, it's a great question. So from what I understand in this proposal, it basically would be that the fund could not hold more than 15% of the entire stock market at any one point. And Cassidy said that other investments could be things like private equity, anything that basically has that high yield so they can make up the difference in what we're going to see from Social Security taking in versus what it's paying out. And Cassidy was very clear, a lot of concerns about DEI investing have been up on Capitol Hill. Cassidy said that the investments would be handled by private entities, that there would be audits, and that basically the only responsibility would be to make sure that there is a fiduciary duty there for American people.
Emily Wilkins, live in DC. Emily, good to see you. Thank you very much. All right, coming up here on Worldwide Exchange, the apparel giant, our next guest says, is his top investment idea, saying he sees a technical turnaround. We're going to reveal our mystery chart coming up right after this. Stay with us. Excuse me. Welcome back to Worldwide Exchange. We close on the 6 a.m. hour. Check on a few big stories that we are following this morning. We begin with Reuters reporting NVIDIA is developing a new AI chip for China. The report says the model will be based on its latest Blackwell chip and be more powerful than the H20 model currently being sold in that country. Bloomberg's reporting Apple is expanding its iPhone production in India at 5 factories as it looks to ease its reliance on China-made models. The report adds the company is producing all 4 iPhone 17 models in India ahead of their expected debut next month, marking the first time that all variations of a new device will ship from India. S&P Global affirming its credit ratings for the U.S. The firm says it expects revenues from President Trump's tariffs will offset the fiscal hit from his recent tax cut and spending bill. And the Air Canada flight attendant strike has now ended. That's according to a Facebook post by the Canadian Union of Public Employees. The tentative agreement ends a 4-day strike by more than 10,000 workers and a refusal to follow a federal order to return to work. All right, turn our attention now back to the markets. For more on the trading day ahead, let's bring in Jay Woods, Chief Global Strategist at Freedom Capital Markets, also a CNBC contributor. Jay, good morning. Great to have you here.
Good morning. Great to be here.
All right, got to start off with some news today.
Okay.
The Intel news, SoftBank buying a 2% stake, the possibility of the U.S. government maybe taking a 10% stake. What does that make you think about Intel and just the chip sector in general?
Yeah, Intel's been getting help from the government, whether it was the CHIPS Act or now the Trump administration. And what is it, Ronald Reagan that said, you know, the one thing you don't want to hear is the government, we're here to help you. I don't know if this is going to be the turnaround that Intel needs. It could be great for investors because I think we have a floor now. This $20 level seems to be it. But let's see what happens. Too many people seem to be circling this stock like vultures, and I'm not jumping into it based on this news. That's for sure.
All right, looking at Intel shares right now, up about 6 1/3%, almost 6.5% just a short time ago.
Yeah.
I want to get to your word of the day. It's evanescent. So
yes.
What's evanescent?
Well, it's the feeling that we get when we have some optimism that could quickly fade. So as we go into Jackson Hole, we're trading at all-time highs. The most hated rally ever. It's slowly starting to turn, and that evanescence feeling will be something that optimism that quickly turns, quickly fades. Last time I was here, the word was digestion. We're still making new highs, but that momentum is fading. And I think, given the seasonal factors, September, October, or August, September being the 2 worst months, and seeing we're, not rallying on this possible peace news, a solid earnings season, I think it's time to give a little bit back. But to me, this will be an opportunity. But I think Jackson Hole, knowing Powell, knowing how that meeting has gone in the past, interesting things happen, and I have a feeling he is not going to just give us the roadmap to a rate cut.
Right.
He's going to make it a little tricky.
So you have some strong feelings about this, very clear. You clearly gave it a lot of thought. I want to bounce something else off of you from Evercore ISI. Julian Emanuel out with a note saying that a data-dependent Jay Powell, even though we know he's going to be a bit data-dependent, but not dovish enough, basically, because some people in the market want a 50 basis point cut, and signs we're going to get more cuts. He believes, his thesis, if Jay Powell comes out and signals a 25 basis point cut and a data-dependent outlook for the rest of the year, we could see a pullback of as much as 15%. Between 7 and 15%. Do you agree with that take?
I don't think the pullback will be that drastic. I agree with the take. I think we're going to see a roadmap to a 25 basis point cut, the old data-dependent lines, and a pullback. But there are great levels to watch. To me, the 20-day moving average is what the S&P 500 has been climbing since April 23rd. We've only closed below it 2 times. That's 53.73. I think we're going to test that break and probably see a test of the 50-day moving average, maybe a 5% pullback. If we go back to the 200-day moving average, there's 7.5%. I don't see 15%. I think there's too much good news coming. The tariff tantrums seem to be dying down. So to me, I think we're going to see a bit of a pullback, but a good buying opportunity as we head into Q4.
Speaking of tariffs, your pick for today is one of the stocks that's really impacted by tariffs. We're going to reveal our mystery chart. It's Nike. We're also going to show the 50-day and the 100-day moving average. So you have a technical take on this company, and it also has some fundamental issues that you think it's working through under its new CEO?
Yeah, Elliot Hill's come in. He's finally put his stamp with the Win Now platform. He's bringing the athletes in focus back. He was known for helping with that Jordan brand. Wait till they tap into Caitlin Clark. That has not even begun. And then when you look at the inventory concerns, those seem to be fading. And then the tariff concern, Vietnam, we finally got some resolution there. Let's see what happens with the China tariffs. But right now, the fundamental story starting to turn. He's putting his stamp on things. And then technically, you go back 5 years, this has been a consistent downtrend. We got a nice breakout gap on earnings last time. We've held that gap. If we can close above 80 we probably have a few more weeks, months to go before we break out. That is a breakout of a 5-year downtrend, 4.5 years to be exact. To me, that looks good.
Your pick for us today is Nike with the technical take as well. Thank you very much. Always good to see you. Before I let you go, one more look at futures. We mentioned earlier, kind of a mixed start to the morning now. Futures, well, actually back to mixed. The Dow looks like it would open up about 20 points higher. S&P and NASDAQ fractionally lower. Squawk Box starts right now.
Good morning. President Trump says he's working now on a meeting to try to arrange it between Ukraine's President Zelensky and Russia's President Putin after yesterday's gathering of European leaders at the White House. Intel shares are jumping, the company getting a multi-billion-dollar investment from SoftBank. And the government still reportedly interested in taking a 10% stake. We're going to talk about that and much more, many other things with Treasury Secretary Scott Bessent at 7:30 Eastern Time. And get this, second quarter results coming from retailers today. These guys are usually right out of the box, so to speak, big box. Home Depot, Tuesday, August 9th, 2025. Squawk Box begins right now.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan and Andrew Ross Sorkin. And this morning it looks like the U.S. equity futures are a little bit weaker. Dow futures down by about 43 right now. NASDAQ off by about 8. The S&P futures down by less than 4. And then if you take a look at what's been happening with the Treasury market, you'll see that right now looks like the 10-year is sitting at 432, the 2-year at 375. As Joe mentioned, we are looking for the big box retailers to report their earnings today, and we are just getting second quarter results from Home Depot. Let's take a look at those numbers right now. Looks like earnings came in at $4.68 a share. That was a miss of the street's expectations of $4.71. Revenue came in at $45.3 billion. That was just slightly light of what the street had been expecting, $45.35 billion. And then you have comp sales, which were up by 1%. The street was looking for 1.3%. That 1% was for total company sales. Home Depot is blaming foreign exchange rates for the miss on comps. They had a negative impact of about 40 basis points. They say if you look at U.S. comps, it was 1.4%. And that they say is a little better reflection of what you're seeing there. But despite that weakness, they are saying for the full year that they are reaffirming their guidance across the board. Right now, that stock is down by about 1.2%. I can add a little bit of context to this. I spoke to the CFO, Richard McPhail, and he said that the miss that you're seeing on earnings per share, really, he said, was because of expenses, the timing of expenses last year in the quarter, a benefit they had in that last quarter of the year. They had 7 weeks also of SRS in the last quarter, in the second quarter of a year ago versus a full quarter of SRS results this time around after that acquisition. But we'll see how the street takes some of these things. I will tell you a few things he told me that are not in the release. First is if you're looking at the same store sales, they were up by 0.3% in May, 0.5% in June, and up by 3.3% in July. So that strength that they saw that grew throughout the quarter, and then also the breadth of it across all of their different departments, he said that gives them the strength to go ahead and reaffirm their guidance for the full year. That's a pretty big deal. If you look at the increase in same-store sales throughout the month, he said part of that was weather, but you did see a very big number in July, up by 3.3%, and that gives them confidence with what they can expect to be doing with this. Big questions are going to be what happens with the tariffs, if you're seeing an impact on those levels. He said they have not changed their pricing structure in all of these things. That's not to say that there's no price increases in any places, but Home Depot does source more than 50% of their goods in the United States. They are trying to get to the point where they have no country outside the United States that they rely on for more than 10% of their products. And they think they're on a path to get there by early next year sometime. So they are less and less reliant on China and any other singular country. And that they think has helped them with some of these things. Now, they do say that they're talking to their pros. And when you do talk to the pros, they say people are still putting off some of the big ticket renovations. However, they say they're not canceling them. They are waiting. The higher rates has been something that's been a real issue for Home Depot and for Lowe's. people not starting new big ticket items, but they did say that when you look at some of they're very pleased with some of the things that are out there. For do-it-yourselfers, they've seen strength in larger ticket items like patios, grills, outdoor power equipment, and appliances, and that gives them some real confidence in what they're seeing too.
I didn't get a call. Andrew, did you? As one of the pros, one of the guys that really.
I didn't.
I didn't even get a
Maybe
call
by
for
my phone.
I didn't even get a call for a do-it-yourselfer. I wonder how there's pros, do-it-yourselfers, and there's something here. No, then there's got to be some way light bulb changers that even screw that up would be sort of. We're Lowe's people anymore. Bed Bath and Beyond people more correctly is where we're much more comfortable.
They're still not doing so hot.
Right. So the currency, everybody knows, it didn't take Home Depot or analysts could have looked at the dollar and adjusted there. So that's always kind of a weird excuse to use. But with same store sales going up, and I don't think it's just, wow, let's do something because it's July. I think it has to do with weather, but also if you're feeling better about improvements and stuff.
Well, you've also heard this from another of other industries where the consumer strength did pick up
Now it's down
for
again.
May, June, July, and we'll see. They have a lot
While
to
you were
talk about on the call.
While you were talking, now okay, Becky, stop talking. Now it's
Well, they'll have to see.
back down some.
They'll have questions. They'll get on the call that comes later this morning.
Yeah.
We'll hear what analysts have to say about some of these things because, again, the CFO will tell you that it's really not that big of a deal. The earnings per share miss. But we'll talk to an analyst ourselves a little later today and see what he has to say about some of these things.
It had been one of the great performers in the Dow, and then it stalled.
It's underperformed the Dow this year.
Yeah, it has stalled, but between.
If you're looking at year to date, it was up about 2% versus up 10% for the S&P, at least as of a couple of days ago.
Yeah, right at the end of the pandemic, I guess it was when people were really feeling like no one was going to move. You're going to do some home improvement during the pandemic. And I think it was up over 400.
It's outperformed
420.
Lowe's over the 1 year, the 2 year, and the 3 year marks. But Lowe's outperformed it over the 5 years. I think over 5 years, Lowe's is up by 39% versus, I'm sorry, 58% versus 39% for Home Depot at that time.
I mean, Andrew, it's either a website or a TV show or something where women actually are looking for handy guys. I mean,
Guys.
Yeah. No, it is. It's like if I'm going to
Wouldn't be
Not
looking
Love,
at.
you're
I'm
not
gonna
talking
be-
Love Island, right?
if I'm gonna be swiping and looking for someone, I wanted to start with someone who's handy and good around that. I mean, that would just for us, we will never have plans again.
Raya of being
We'll be
handy.
home every night. We're going to be home. President Trump says he's begun making arrangements for a meeting between Ukraine's President Vladimir Zelensky and Russian President Vladimir Putin. In a post on Truth Social, Trump said that after Zelensky and Putin meet, then he'd want to have a trilateral meeting with the two men. He's been sort of waffling. I watched a lot of it yesterday. I think, he said, yeah, if you want me to come, I'll come. I'll be there. But I sort of understand that if he goes to the initial meeting and it doesn't work, then
Right.
it's going to be his fault. So if there is reason for him to go to the second meeting because they get along and maybe they have some common ground. Common ground's a weird term to lose.
Well, you heard the hot mic up moment.
Yeah,
He thinks that they're
exactly.
pals
Right.
or something.
It's I don't know. Watching the whole dynamic. We're going to have Scott Besson on, and he's the closest thing we can get to someone in the administration. But just to hear about the whole dynamic, we're sitting around with all these European leaders that we just, have been sort of using a carrot stick for tariffs. So we're changing our whole, the whole global trade ecosystem. We're changing, and they're not all probably happy about it, but everybody seemed to be getting along pretty well. It was kind of weird.
I was the body language there,
Yeah.
the pictures that they took with some of these things. It was like,
Right.
wow, okay. If they can make progress on this, it'd be amazing. And Scott Besson was in the room with Putin Friday.
Yeah. The Journal has just a short piece, an op-ed piece, but it just says that President Trump calls him Emmanuel, and then President Macron calls back to him Mr. President, and that's sort of I guess that's probably the way Trump would like it, but it's just a little. It is a little bit awkward, but it's in the United States, and it's he's convened it and everything else, so he naturally would be thought of as the person like leading the discussion, but it's still President Trump telling Zelensky that the U.S. would help guarantee Ukraine's security in any deal to end the war between his country and Russia, though the extent of that guarantee is unclear. Before talks began, Russia's foreign ministry ruled out the deployment of troops from NATO countries to help secure a peace deal, and Zelensky said that Ukraine offered to buy about $90 billion worth of U.S. weapons it's buying, not getting those. And there's also been some back and forth about exactly whether Putin agreed to a NATO, what would you call it, type, a NATO light, some type of security guarantee. Witkoff, the president's envoy, insists that he did. Others are saying that they find it hard to believe that because that's the whole NATO.
That's been the whole
thing.
But that's been the whole thing for Putin the whole time. He doesn't want NATO, and
he doesn't want anything close to NATO, probably.
Right. Well, and the reason is, does he want to keep going later? That's the whole question.
Yeah. Yeah. And what's the end game, and can economic consequences, since we're going to talk to Scott Best, security and economics are always linked. The Venn diagram for those two things, for the economy and whether you feel safe, and what they inform each other on policy. Can you be tough enough with a stick or a carrot to get Putin to do what you want him to do? I don't know if you can get him to do that.
Well,
he thinks in a 100-year period. He's already said that. I think in 50, 60, 100-year, and Mother Russia. So what can you?
And the problem is Putin has agreed to things in the past that he has completely violated.
Exactly.
On every one of these. So can you trust him with what he does?
And that's the argument for having a NATO.
I don't think there's any way you can just say, yes, we can trust him.
No, you can't.
Like back to Reagan, trust but verify, and keep the pressure on.
Right.
There's a way to
Why do you
pressure
need teeth?
You probably understand it. Where you take them out of the banking system or something. What's that called? The
SWIFT system?
Yeah.
No, the only thing, I think the only last pressure is a NATO-like thing. That's the thing.
Right. I don't think economics work.
That's the problem.
We have troops all over the place. Would we really have them in Ukraine? I mean, how long have we had troops in South Korea? Think about that.
7 years.
Huh?
We got a lot more coming up on the show. We're going to talk about this and a lot more with Scott Besson and a number of others as well during the broadcast. We've got some details to bring you on SoftBank's multi-billion-dollar stake in Intel, plus much more on the markets as we await this week's Jackson Hole Fed gathering. And don't miss complete coverage. It starts tomorrow. Our own Steve Leisman will be there leading up to Friday's big speech by Fed Chair Jerome Powell. Do not go anywhere. Squawk Box, come right back.
best. The Air Canada flight attendants strike has now ended, and this is according actually to a Facebook post by the Canadian Union of Public Employees. The tentative agreement ends a 4-day strike by more than 10,000 workers and a refusal to follow a federal order to return to work. The airline says it will gradually resume service as early as today.
Meantime, SoftBank investing $2 billion in Intel. This, of course, coming as the Trump administration reportedly considering taking a stake of 10% in that struggling chip maker. Christina Partsinevelos joins us now with the latest on all of it. Good morning.
Good morning. This is, I would say it's really just a lifeline from the private sector. SoftBank is going to pay about $23 a share. Intel tells me just last night it's a, quote, primary issuance of common stock, so that's 87 million new shares, giving SoftBank 2% of the company. And shares are up over 5% this morning because it's seen as a major vote of confidence in Intel, far outweighing any stock dilution concerns. The deal also builds SoftBank's broader U.S. expansion, including the Stargate data center project with the OpenAI and Oracle, and also a recent deal to buy Foxconn's EV plant in Ohio. Intel, like you said, has also had talks with the Trump administration about a deal that could make the U.S. government its biggest shareholder, a potential 10% stake using CHIPS Act funding. Intel wouldn't comment on this possible government investment, but nonetheless, the rumors have been milling for quite some time. But Intel's foundry unit won't break even until 2027, and that's where the problems come about, and they need external customers to generate billions of dollars in revenue. The company posted a $2.9 billion loss just last quarter. They laid off, or going to lay off, 15% of their workforce this year, and they threatened to halt advanced manufacturing processes without any external customers. As Wedbush notes, cash alone won't solve Intel's problems. The real game changer would be if the administration encourages customers to use Intel's capacity through policy initiatives, for example. So bottom line, Intel needs customers, not just capital, to turn around, guys.
So here's the thing that I can't figure out about all of this. The only way that Intel is going to succeed to some degree is if it finds some genuinely new customers. And I don't know if you remember, but Gina Raimondo was reportedly back, this is in the Biden administration, was reportedly out pressing some of the big tech companies, Amazon, Apple, others, Google, to try to use Intel chips. That was sort of part, she became a salesman almost for Intel. And the truth was that the chips were never good enough. And so if you were Amazon or Google or Apple, you said, I don't want this. This is not the product that I want to be buying. And so now, and maybe you could argue that this administration and President Trump is either a better salesman or more forceful salesman. What happens when the administration calls Tim Cook up now and says, hey, I need you to buy, 100 million chips from Intel. I know you want to buy them from, NVIDIA or XYZ, but this is how you have to do it.
Yeah, there's a difference between the Biden administration and the Trump administration in terms of the overhang for all of these companies. There's no major threat of, anywhere between 25 to 300% tariffs on semiconductors. There's no threat of, hey, we're going to take 15% of your China sales revenue if you don't invest here in the United States. So I think there's a lot more pressure on these companies to invest in Intel, and now you have to see it as more of an R&D investment. So we're going to invest in Intel. We know that their most advanced chip manufacturing process is still not up to par, but hopefully it will help us in the long run when we need to build on American soil, and there's more of this sovereign push, to create here.
I guess
but you are right.
Where I'm going with the question is, are they going to be forced to buy products they otherwise don't want to buy? It's one thing to force them to invest in a company that they don't want to invest in. That's one thing. To actually buy product that you don't want to buy because you don't think it's good enough actually then has ramifications on the customer.
I don't think it would be a force to buy, because then you would have had SoftBank say we're going to use Intel right now to build out ARM's future chips, right? Because ARM is SoftBank's a major investor in ARM. ARM is said to be building their own individual CPU chips that would eventually compete against AMD and Intel. So I think it's more about investments at this point. I don't think that these companies are being pushed to actually use all of the products from Intel just yet.
Andrew?
they need to do something soon because the foundry business is going to flounder.
Andrew, you're not giving government enough credit, I don't think. If the government invests and then it becomes involved with the running of the business, they could improve the quality of the chips. I imagine an Amtrak and what they've been able to accomplish there, or the air traffic controllers system. Yeah, the government.
Go on.
No, the government does not have a great record of knowing how to run a private business. But the other thing, and it's pointed out, as I said in the journal, it helps when companies that are really bad are allowed to fail. And Intel, the reason they're laying off people and not using the chip money they got, there's no demand for them. Why would they?
The demand issue.
Right. Why would they build more manufacturing facilities when no one is buying their chips?
I believe the next part of the story is the jawboning, if not something worse.
Well, what if it was a carrot?
What if it was
What if it was a carrot? What if it was a carrot instead of a stick? In other words, some type of
We'll pay
induced. Put this piece of crap in your stuff, and we'll pay you instead of no. That.
But by the way, then you infect the entire ecosystem.
Right.
The entire technology business.
You really get me agitated.
I go back and forth because I agree with everything you guys are saying on these points. You get back to this idea of we don't manufacture any chips here. We are completely reliant on Taiwan. If anything happens to Taiwan, we are hosed.
It'd be nice if SoftBank would keep putting in more money.
Somebody else would.
Yeah, right.
Well, and then there's a separate issue, which is you have SoftBank putting money in right now.
Yeah.
Part of their gamble is that the taxpayer in America is effectively going to subsidize their investment
Because of the 10%.
Correct.
Yeah.
So how should we feel about that?
It opens up a lot of.
Although when the government did put money into the auto manufacturers during the financial crisis, it worked out very well. When you put the money in, you took it as a first investor who gets paid before anybody else. You got a preferred dividend on it. The government made money on all of those deals that they did during the.
Do we have a great auto sector now?
No, but we made money. The point is the U.S. taxpayer did not lose money on those deals.
But it did. I don't want to call it mediocre, but we still.
And the government was heavily involved with all the big
subsidized sort of mediocrity.
I mean, things were falling.
If things went south
again, as you know, I always thought we needed to rescue the banks. I wanted to rescue the automakers too. So made a call on me. However, it also created a cultural backlash that I would argue to some degree has lasted even to this day in a sort of massive way. And so I just wonder, does this
and it also created the problem where investors think you don't have risk, and that has lasted to this day as well, that the government's always going to bail you out.
Yeah, you know what, you probably have to say it was good that the automaker, because the quality's improved, we need that industry in the United States. It may not be, you may still say Japanese or Korean automakers make. The quality's improved. I like my American.
By the way,
I'm glad we have that industry.
I would probably oddly have more time to pull a Fannie Mae, Freddie Mac situation on this whole game.
Yeah.
Just take over the whole thing. Just take it.
Right.
Just take. Who's made? You want to know where the real money has been made for taxpayers?
Right.
That's where the real money's been made.
And Freddie.
And there's massive pressure right now for the government to get out of those businesses from the investors who want to make
Correct. Correct. And so you get into this quasi.
But the question becomes, if you do that, will you be able to get loans for home mortgages? Because they subsidize such a huge part of it.
That's a whole different ball of wax. Christina,
I think the answer is we don't know the answer.
Christina, thank you for joining us this morning. We're going to talk a lot more about Intel and possible government stake in the next hour with the man who was involved to some degree with negotiating all this. Secretary Scott Bessent is going to be with us to help answer some of these questions.
All right, let's take another look at the futures. We are moving closer to the flat line. The Dow futures right now only down by about 7 points. I'd like to take a look at Home Depot and see how that has impacted things. It's the Dow component out with earnings, and initially it was down, still down by about 0.4%, but we are looking at the Dow futures improve somewhat. Joining us right now to talk about what she's seeing in the markets is Joanne Feeney. She's a partner and portfolio manager at Advisors Capital Management. And Joanne, I don't know if you were listening to this last conversation we were just having about what to think with the chips, what to think with Intel. Where do you come down on this as an investor?
Yeah, Becky, good morning. Well, it's interesting that Intel, the new CEO, Luc Buchanan, decided to undo a lot of what Pat Gelsinger was trying to do, which was to stand up manufacturing in advance of having foundry customers. He realized that they didn't have the capability yet to serve foundry customers. Intel struggled for years to try to move in that direction. They simply don't have all the different components, the libraries as they're called, to give to customers. Say, here, these are the components you need on a chip. We've got the library for that. They don't have that library, that set of libraries that TSMC has built over decades. So Lip-Bu-Tan said it's not in our best interest right now to build this manufacturing. So the Intel incentive was, don't build more capacity. Now the government's going to try to come in and say, you know what, if you want that, that subsidy we're going to provide, I suspect they're going to say we need you to build that new capacity. So you have a real dichotomy between the public interest, which is, as you said, Becky, don't want to be totally reliant as a country on Taiwan Semi, and the private incentive. So that suggests it's not really a great thing for shareholders in the end. You can't force Intel to innovate and solve their design problems and their manufacturing problems.
So you would not be an investor who would be fond of this, who would invest alongside the U.S. government with it?
I just think it leaves too many uncertainties out there. Does it change the trajectory of their innovation capabilities, right? That's what we all need to know if you want to be an investor in Intel. Will the government have a say? Will they have a seat on the board, right? These are relevant questions to Intel investors. And it's hard to just point to a group of engineers and say, fix this problem, fix it faster than you were going to. The extra money will certainly help if there is extra money beyond what the CHIPS Act was going to provide. And that could be a good thing for Intel's trajectory. Certainly the SoftBank investment helps.
All right, let's talk about the American consumer, because we've got retail earnings this week. We heard from Home Depot this morning. They missed on the bottom line, $468 versus the $471 that the street was anticipating. The company CFO did say that sales picked up every month of the quarter. I think same-store sales were 0.3% in May, 0.5% in June, and then 3.3% in July. How does that match up with what you are seeing and hearing and thinking about the consumer right now?
Yeah, I think the consumer is under pressure, going to be under increasing pressure as more and more of these tariffs move from affecting the PPI, the producer price index, over to consumer prices, and we're likely to see more of that in coming months. But Home Depot is kind of a special situation because they're benefiting from the demand for improved housing from a lot of folks that can't afford or don't want to get out of their current low interest rate mortgage and move someplace else. So they're continuing to do those renovations, albeit at a slower pace than they were before. You look beyond that to the broader retail segment and you have a really different set of questions. How much is the consumer budget being affected? And again, here we really emphasize that you have to separate the consumer into the high and mid-high range to the lower end. Lower end clearly under continuing pressure because of past inflation and coming price increases from tariffs. The high-end consumer is still in pretty good shape. So when you look at retail, you've really got to parse those names. Williams-Sonoma is a strong name. Lower-end retailers are going to be more pressured.
Okay. Does that include the likes of a Walmart, which has actually done pretty well?
Yeah, Walmart is a special case too. They have a lot of groceries. So one question we're asking is how much will that Amazon announcement of doing more grocery deliveries affect them? A company like Target we think is interesting here because they've really underperformed the retail segment. Since that Liberation Day, retail is up about 35%, and Target's up about a little bit more than half that. So while other names might be a little bit precarious because they've run up so much as they come to report their earnings, we think Target, having built up those inventories early, which hurt them and hurt the stock, actually now is relatively well positioned, especially now that the back-to-school season starts to pick up. We are seeing some good numbers there.
Joanne, I want to thank you very much for joining us this morning. We appreciate your time.
I think the government
That's what I'm just looking at right
did
now.
lose money. They lost
GM,
$10 million.
they lost $11.2 billion on the bailout of GM.
GM.
And $1.2 billion on the bailout of Chrysler.
That's the one you like. What they did make money on is the one you've been railing about your entire life.
Which one's that?
The airline bailout. Remember how much you hated that? That they did make.
I did not love.
But the overall, wait a second, the overall.
No kidding. That used to be all we talked about for 3 years.
Okay,
That's
so
all.
2 more points on this.
Because
The
of babies
overall-
crying in first class.
The Troubled Asset Relief Program, TARP, which did include the auto bailouts, generated a profit of $15.35 billion.
Right. But for GM, it's
hugely because of Fannie and Freddie.
And Freddie on
But
that.
for
And by the way, the
GM,
bailout is also credited with saving about $1.5 million.
when they finally sold the last tranche of GM shares at $10.5 billion. So is that worth it to save GM?
Is it worth it to save the jobs? I think probably. Because remember, it wasn't just the jobs at GM. It was going to be the entire supply chain and all of those jobs that went
We're
with
still
it.
flying commercial. All of us are.
We're going to discuss that and more after this. Coming up, longtime investor Ron Barron looking to branch out to actively manage ETFs, plus a similar move coming from Vanguard. We're going to bring you details about all of this after the break.
So we're back. So other than Fannie, there's Ron Barron. He'd be interested in this. So other than Fannie and Freddie, we've never made money. On the airlines, we didn't.
The airlines, we
lost even more.
We weren't trying to.
TARP.
But we weren't trying to make money.
We wanted to save the industry.
We were trying, and the way it was structured from the beginning, and the reason why I used to
because we could have made
about it.
We could have made money.
Yes, and the point was, if you wanted to take a larger stake in the airlines at the time to bail them out, you could have made money. It was possible, but we decided that we were effectively just going to give them the money, like wholesale, and the warrants were always so
like
small
little kiss,
that you could never make enough money to make up for it. Look. If you go back
to... was the theory that they didn't want to scare out private capital down the road? I mean, look, a loss is a loss if we lost money on it.
It was just a completely different theory of the case, which was...
Well, that was the same thing with automakers.
Well,
they wanted to save the jobs there.
But the theory of the case with the automakers was they did think that they had a path to try to make the money back, which was different. And with the banks, the theory of the case was, we're going to give you this money, and we believe we can make it back, and we can make the whole. We can make the
it's just about,
taxpayer
it
whole.
was almost like
With
it's
the
a
airlines,
utility.
we didn't even try to make anybody whole. The goal was not to make anybody
It was
whole.
to save the industry because
It was
we
to
needed
save the
travel.
industry because we felt that it was so important. And the
Right.
question then was, you could have saved the industry if you wanted to, and you would have owned the
But
industry.
you wanted to sacrifice shareholders and management.
Not necessarily management.
Even though it wasn't their
Wasn't
fault.
even about management.
Even though it wasn't their,
It wasn't even about management.
No, but that's what the government rationale was. It wasn't their fault, so you don't need to sacrifice the shareholder. But this is more, we do a lot of industrial policy that we say isn't, but we do it anyway. And it usually
And once
doesn't
you
work.
start it, it's really hard to unwind the unintended consequences from all of this
Right.
stuff, which is why we're still living.
I just will note that if you looked at,
With so much
the bailouts for the airlines, the way those were structured,
Yeah,
was structured.
so that they weren't trying to
That
make
was,
money.
right, and that was by the Trump administration.
Well, if you-
They did that. And you could also go back and look, the bailouts of the cars, automobiles,
Yeah. It needed to be
and the
done.
banks were, well, the banks and the
Right.
cars were a combination
Right.
of the end of the Bush administration
The beginning of
and the
Obama.
beginning
But
of
it
the
needed to
Obama
be done.
administration.
If I were an airline CEO, I wouldn't let you on any of the flights.
Okay.
That's what I'm saying. So you can drive with screen, well, your kids are growing up now. They still might be screaming. I don't know, mine still do. But so you can drive 14 hours in a car,
Okay.
stopping at all your charging stations.
What is Ron Barrett
Veteran
have to say?
investor Ron Barrett is working on launching 5 actively managed ETFs. An SEC filing details focuses ranging from small and mid-cap companies to financial stocks to tech. Separately, filings show investment giant Vanguard is planning to debut its first actively managed U.S. stock ETFs this year. Wow,
That is weird.
That
is
is
such
weird.
a turn
After
from what
being
John
so
came
right.
up with and what he
So
designed this
sanctimonious
entire
about never
company to be.
never trying to beat
Right.
the market. Now
Right,
they are.
because you can't do it, and
Right.
it's not worth the fees, and people get ripped off for it.
It's different this
It is-
time. They got the perfect person to run it, maybe. Vanguard plans to roll out ETF versions of 3 of its existing mutual funds. The company says the strategies will focus on growth stocks, value stocks,
That's so
and dividend
But
growth.
this is a change in the law. So part of what's happened here is
Mhm.
you couldn't do this before.
With an ETF.
Yes, all of this lived
Right.
within the wrapper of a mutual fund. You weren't allowed to be an ETF.
Jack
Now
Welch
they've
never did
effectively
this, though.
allowed the creation of these ETFs. The other piece of this is they all carry higher fees.
Right.
Why do you want to be in the actively managed business? Because of the
you
higher
get
fee
the higher
structure.
fee
Because you can
structure.
claim
That's what
that
it
we're
is.
doing
It's the
something that's
opposite of
unique and
what
different.
Jack Bogle preached for forever, and what he did at Vanguard, and the reason it came about. It is way different.
Coming up, NVIDIA looking for its next foothold overseas. A report saying the company developing another chip for the Chinese market. This time, we'll tell you what it is and what it all means after this. Interesting. Welcome back to Squawk. NVIDIA reportedly working on a new chip for China that's more powerful than the H20 chip it's already allowed to sell there. Reuters reporting that NVIDIA's new chip is based on its latest Blackwell architecture. Its design will likely deliver half the computing power contained in the company's more sophisticated B300 card. Now, sources telling Reuters the company wants to deliver samples to China for testing as early as next month. I imagine they have to send samples to the White House as well if they're going to be sending this stuff that direction.
As they should, in a state-run. We're going to talk to Scott Besson about this. He should have some. There are one-off situations. That's the problem I have. Like certain metals that we need, certain pharmaceutical constituents that we need. How do you do that? How do you make sure that next time that there's a problem, we have access to that? Chips. Is there a place for industrial policy?
We look at how quickly we get shut down to the rare earth metals.
That's what I mean.
China,
Yeah.
right? How do you?
Coming up, we're going to talk about fighting for investment returns at the state level. The man mounting the first challenge to New York State for that position as a controller, New York State controller for the first time in nearly 20 years, is going to join us. We'll be right back.
Welcome back to Squawk Box this morning. Now for a conversation that may feel local, but I'm saying it's national.
No.
Because it has some big implications. No, for the way so many states operate.
Comptroller?
First time in 18 years, New York State's controller or comptroller, it's called comptroller here in the state of New York. Other people may call it a controller. Thomas DiNapoli has a challenger. This concerns investments affecting millions of New Yorkers. Joining us right now is that challenger, Drew Warshaw, candidate for New York State Comptroller or Controller. We can decide later what it is. He has not had any competition, and you have a take on what's going on here in the state of New York that I think actually may be relevant, as I said, for the rest of the country, frankly.
Yes. Well, thank you for having me. And first of all, look, the one reason I am running for New York State Comptroller is New Yorkers cannot afford to live in New York. And the state comptroller, the state comptroller, has been there 18 years, and he oversees our taxes, he oversees our spending, and he is the sole fiduciary, he is the sole trustee of the third largest public pension fund in the United States of America, $275 billion. And for the last 18 years, he has done nothing to address the affordability crisis. And I am going to show that the New York State Comptroller can and will address this crisis.
So you've done a study that's looked at his performance. So part of being a controller of any state like this is managing and overseeing the assets of that state and investing those assets. And you believe that he has either mismanaged those assets or you believe that he has invested them in products that carry fees that we shouldn't be as taxpayers paying. And I imagine this is probably true of New York, but as I said, could be true of many states.
That's right. Taxpayers fund the public pension fund. And it is a rare thing to be able to quantify the performance of an elected official. But this guy's been there 18 years. And so that's exactly what we did. We looked at his investment history. And over the last 18 years, he has paid $11 billion in our property taxes and our state income taxes to a bunch of bankers, literally hundreds of bankers, to try and beat the market. And guess what? They didn't even come close. They underperformed his own benchmarks by 37% and cost the taxpayers $55 billion in the process. And this is the DiNapoli tax that we need to get.
How much? Okay, but just so I understand, and by the way, there are lots of states that are sending money to different private equity funds, venture capital funds, and the like. They're not all, we were talking about passive, funds at Vanguard, for example. Most states are not doing it that way, I don't think.
Yeah.
What percentage of New York pension funds are being sent, as you would say, to Wall Street at these high fee products versus ETFs or things, and what would you do differently?
Yeah, and this is why I agree with you that this could be a national issue, because we have an opportunity to cut out the Wall Street middleman that is sucking value from our taxpayers. And we're talking about an affordability crisis. We need to keep our property taxes down and our state income taxes down. And why are we trying to beat the market? First day of
Why are we trying to beat the market? I want you to beat the market.
First day of Columbia Business School, what do they tell me? You can't beat the market net of fees. So what has this guy done? He's hired 378 different investment managers, and last year alone, he paid them $1.1 billion in taxpayer fees to try and do something that
is this
fundamentally
the 2 and 20
enough.
piece of it? And by the way, it sounds like you're saying there's not the 20 piece of it is not as big as it should be.
The which piece?
The 2, I said 2 and 20.
Yeah.
2% for the management fee. I assume a lot of these guys are getting paid.
Yeah.
And then they're getting paid 20% of the profits.
Yeah. He's paying 50 basis points. We can pay 3. That's the fundamental.
By doing what?
By investing our money in simple index funds. We need to radically simplify the investment approach, and we need to spend our time focused not on trying to pick the pickers, not trying to pick which bankers are going to try and beat the market. We need to focus on solving the affordable housing crisis.
No.
We need to take these guys. We need to audit Con Ed. We need to audit NYSEG. We need to audit these public utilities that are jacking our electricity rates. That's what we should be spending our time.
Let me ask you a different question. This is maybe a larger philosophical question since you've looked at all of this.
Yeah.
Right now, there is a movement afoot among the consumer class, actually, to democratize, what they would say, democratize investing, to give retail investors access to the private equity funds and venture capital funds that you're saying effectively, I think, you don't want to put, you think this state should not be putting money in. I ask because, as you know, there's a move to actually even put or give access to retail investors to put these things in 401k plans.
Yeah.
Do you think that's a mistake?
That's right. Donald Trump wants to allow retail investors to invest in private equity and to take their money and to light it on fire in the form of fees. That is what Tom DiNapoli has done. He has quintupled the amount of investment that the third largest public pension fund invests in private equity. And as a result of that, he's taken our property tax money and our income tax, and he's lit that money on fire.
Okay, but what about like the Yale Endowment, which famously made a small fortune by investing in things like venture capital and private equity?
Yeah, and you know what they're doing now? They're selling it all. They're selling all of their private assets. They literally just a couple weeks ago announced one of the largest secondary market private equity sales. For the last 15 years, interest rates have been zero. Cash money has been flowing into the private equity asset class, right? Making that market more and more efficient. They are not getting the returns. We have to stop thinking that we can beat the market. We got to cut out the Wall Street middleman, save taxpayers' money, and just earn the market rate of
We're going to
return.
have DiNapoli on at some point because I assume he has a retort to all of this.
You should ask him because he's been there 18 years and he's been doing the same thing over and over and over again and expecting different results, and he's underperformed the market by 37%. Cost taxpayers
This is a terrible question.
$55 billion.
Do you believe that the average New Yorker understands the issues that you're describing? Our audience, I think, probably does.
I think the average New Yorker understands that they are paying too much in taxes and their costs keep going up. And one of the fundamental reasons is because their tax dollars are going downtown to hundreds of Wall Street bankers who are fundamentally not doing their job. And if we didn't do our job for the last 18 years, we'd be fired.
Yeah,
and these guys keep getting paid.
That's
where Donald Trump comes in. He'd say you're fired.
Right, and they're so smart they're going to elect Zoran Mamdani as the next mayor. That's how smart they are.
Look, he has put his finger on the affordability crisis.
God almighty.
And
We
that,
know that.
and that is what we need.
Joe was liking you for a while.
No, that's the knee.
But Joe, here's the thing.
That's the knee-jerk
Can I say-
reaction that every
Can I say one
enabling
thing?
politician
Can I
says
say-
about Mamdani. Instead of saying, no, I reject
say one
him
thing?
completely. Yes.
People look to the mayor to solve the affordability crisis. They look to the governor and they say, ma'am, what are you doing to solve the affordability?
All right, raising taxes.
Exactly no one has looked to the state
You just
controller
said-
over the
you
last
just said there's
18
too many
years
taxes and
to
then
solve the
and now you're-
affordability crisis. Why aren't we using
Didn't
the
you
state
just say taxes were way too high? So you want to elect this guy
Why
now?
aren't we using the state controller's position to address the affordability? This guy is sitting on all this power and all this
And now you're
money,
back to DiNapoli.
and he is doing nothing to solve this crisis.
All
And we
right.
can and we should and we will.
Okay, but just to be clear, who would you be supporting for mayor of New York City?
He is the Democratic nominee. I'm supporting the Democratic nominee for mayor.
And does that make economic sense to you? His economic policies?
Give me an example.
You know what they
free,
are.
free buses.
Free-
I believe he wants to take out $70 billion
supermarkets.
of debt to pay for all sorts of things in the state.
So
You're talking about
So he's talking
economic.
about affordable housing. You know what I want to do? I want to take $10 billion of this $275 billion public pension fund. I want to start the largest affordable housing fund in the United States. Why isn't any of this money? This money's going to hedge funds. It's going to private equity money. Why
But
isn't
would you
it
be
going
prepared to
into
go into
homes
debt?
that people?
You'd be prepared to go into debt for that?
This is why, guys, we're sitting on $275 billion. Why don't we start there and start investing that money, earn a great rate of return?
We're going to run out of time. We got to go. But this is a larger debate.
We should keep
Maybe we'll do
talking
like a
about it.
full-on debate on the. Maybe get DiNapoli here. Get the next mayor here. We'll do a whole
Let's do
thing.
that debate. I would enjoy
Okay.
it.
Thank you, Drew. Appreciate it. Squawk coming right back after this.
for certain.
We're coming up on 7 a.m. right here on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan and Becky Quick. Among today's top stories, SoftBank investing $2 billion in Intel. This is it tries to expand into the U.S. chip market, and the move coming as reports say the Trump administration considering taking a 10% stake in the struggling chip maker. It's going to be one of the topics we're going to discuss and tackle with Treasury Secretary Scott Bessent. That's going to happen at 7:30 a.m. Eastern Time. Meantime, the Air Canada flight attendant strike has ended. A tentative agreement ending a 4-day strike by more than 10,000 workers and a refusal to follow a federal order to return to work. The airline says it will gradually resume service today. And Starbucks will reportedly give its salaried employees in North America a 2% pay raise this year. Starbucks attempting to keep a lid on costs under its new CEO, Brian Niccol.
One more thing.
Yes, sir.
Our friend Paul Hickey.
Okay.
He spoke Capitol.
Yeah, what does he say?
The federal government bailed everybody out with no strings attached during COVID.
This is true.
Why should the airlines have been treated any differently? You know what the total, it's hard to estimate all in what the bailout costs, adding up Trump and the CARES Act, and you know what the estimate is?
What?
I'm going $5 trillion.
It's exactly what the estimate is, $4.5 to $5.2 trillion. So.
Thank you.
No, well, you're welcome. But so the airlines, why do you have to pick on them so much?
So
everybody got bailed. Everybody got
bailed.
bailed. It wasn't their fault.
It wasn't.
No.
Did you get a bailout? I didn't get a bailout.
A lot of people did.
A lot of people did.
But you could have for your varied and sundry businesses. You didn't get any PPI stuff?
No.
Was it PPI? What were those things called? PP something.
Well,
remember all those?
Well, there's PPE, which is PPE was protective.
All those loans, all the, but implied
PPP.
Guaranteed. Yeah. 3 Ps. Our next guest is going back to school after
Paycheck Protection Program.
Right.
Yeah, paycheck protection. After enrolling in advanced machine learning courses at George Mason University last year to better understand the technology, he's now tasked with helping Congress regulate AI. Joining us now, Virginia Representative Don Beyer. He is the co-chair of the AI caucus. How's it going back there? Do all those young people like look over at you and point and sort of whisper and stuff, or are you going to keggers and stuff?
No, not going to keggers. I think they mostly ignore me. You know, for first days of class, they'll look at the tie and the weird stuff, but after that, I just blend right in. Well, I don't think I blend in, but they ignore me.
Are you really trying to just get a better understanding than most of us have? I mean, you're not going to write any algorithms for sentient machine learning, right?
No, I actually hope to be able to use it. In the meantime, it's studying linear algebra, and right now we're doing machine learning for the machine. It gives me a place in the dialogue and the conversation on Capitol Hill about what we should be doing with artificial intelligence. And that's been the big part. Not learning how to code, but rather being part of the conversation on AI policy.
You've got private sector experience. Not everybody in Congress does. What do you think? How do you think we're handling AI right now? Is it completely unshackled? Is that the way it should be so we can win? Or you're a Democrat? You're looking for guardrails? What is your...
Yeah, I'm very much looking for guardrails. The Biden administration made safety a priority. The Trump administration has kept the Safety Institute at NIST, the National Institute for Standards and Technology. But on the other hand, I think one of the major mistakes the president's made this year is allowing AMD and NVIDIA to sell the really good chips to China. That's the competition with China, and yet we're helping them. By the way, it also violates the Article 1 of the Constitution. We're not supposed to have export taxes. Those are unconstitutional. It's also, I think, very unwise to be helping non-democratic countries in the Middle East build data centers. It's one thing to have all the data in a democracy, but in a non-democracy, who knows what that data will be used for.
Just overall, and what we saw to China notwithstanding, should it be open? Should it be basically the wild, wild west, or you think even in this country with the way we're developing it, we need more oversight, more, I mean, look at the biotech industry, and look, I'm not blaming that for the pandemic, but there certainly could be another pandemic with as dangerous as some of the techniques and tools are.
Yeah. There's a growing number of very sophisticated computer scientists, way smarter than I am, who are deeply worried about the existential risks. In the short run, Dario Amodei, who is the founder and president of Anthropic, the Claude large language model, says in the next 5 years, we could eliminate up to 50% of the entry-level white-collar jobs. Even if that's double what actually is, that's millions of jobs that are going to happen right away, disappear. But then the existential risk is when we build something that's way smarter than we are, why we have no idea how to align artificial superintelligence values with our values, the so-called alignment problem. And a lot of very smart people are deeply worried about what that means for the future of humanity. That doesn't mean we stop, but it does mean we start to think about guardrails and including engaging other countries like China in the discussion about what happens when we lose control of AI.
You point out one of your factoids that in 2023, more information was generated in all the information since the birth of Jesus Christ. So in AD, since zero, the year zero, in 1 year more was generated than in the prior 2,000 years. And that begins, you start to think about the singularity, because it's going to go up exponentially next year, the year after that, the year after that, and we're going to be at a power of 10 number of how much information is being generated every year. We have no idea what that means and what the consequences are.
It is exciting in the sense that with AI, for the first time, we can see connections that are beyond the powers of mere human beings. Lots more. The ability to solve biological problems, physics problems is exploding, which is great.
So what if your AI doctor says, yeah, I can figure out what you need, but we have billions of people on the planet and I can't afford to give you what you need. I mean, that'd be an easy decision for an AI doctor to make.
Yeah, well, that's parallel to what we have right now. We have, even though overall our healthcare doesn't match up with some of the most developed world, we still can cure remarkable things in America today while billions of people go hungry. We make those decisions now, often sadly, which completely parallel, which is why getting rid of USAID was such a tragedy.
Oh boy. Yeah, okay. All right, Congressman, we appreciate your time this morning. Thank you.
Thank you very much.
All right.
All right, coming up, today's biggest pre-market stock movers, Squawk Box. We'll be right back.
inside wealth.
Welcome back to Squawk Box. I'm Frank Holland with your morning movers. We're going to start off with an earnings mover. Take a look. Shares of Palo Alto Networks up over 6%, still riding high after earnings after top and bottom line beats. The cybersecurity vendor also hiked its guidance for the quarter and for the full year. Palo Alto also said its founder and chief technology officer is retiring. Shares again up over 6% year to date, up about 2.75%. Medtronic making some changes to its board now that Elliott Investment has become one of its biggest shareholders. Right now in the pre-market, you can see shares are pulling back almost 1%. Now, according to a report from the Journal, the company also announced plans to form a special new committee focused on growth and operations. Again, shares pulling back just about 1% year to date, up more than 15%. And a new note from Deutsche Bank is suggesting a turnaround's in play for Salesforce. Taking a look at shares right now, they're up about 0.5% in the pre-market. Year to date, though, you can see here, pulling back more than 26%. Analysts say that the fears around software stocks, they're just overblown, and earnings in October's Dreamforce conference can change the narrative for Salesforce. Deutsche Bank has a buy rating on Salesforce and says there's an opportunity for value. Again, shares up just about 0.5% right now. Becky, back over to you.
Frank, thanks a lot. Great to see you. We'll talk to you a little later. When we come back, we're watching shares of Home Depot after the company reported results. We'll check in with where things stand and get an analyst take on what he thinks about it right now, too. It looks like the stock is actually up by about 1/3% now. Treasury Secretary Scott Bessent will be our special guest. That is coming up at 7:30 a.m. Eastern Time, and we have lots to cover with the Secretary, everything from trade and tariffs, interest rates, what he thinks about the negotiations that he's been so closely involved with. Stay with us. Squawk Box will be right back.
.com.
All right, as we've been talking about Home Depot reporting earnings this morning, the company missed on the bottom line, but did show improvement in their U.S. comps over the last 3 months, every month of the quarter. Joining us right now for his reaction is Brian Nagel. He is Oppenheimer's senior equity research analyst. And Brian, just tell me what you think about what you saw from this release.
Well, good morning, Becky. Look, I think it's largely more of the same from Home Depot. I know we've been talking about this for a very long time now. But Home Depot is managing well. I mean, this is a very well-run company in a very solid sector. But what's lacking here is that sales momentum. Now, I don't think that happens. I don't think we get sales momentum at Home Depot or through the home improvement channel until we get rates more accommodative. But when I look at this quarter, it's more the same. I mean, you're right. You know, what they're talking about is sales getting a bit better, sales growth getting a bit better as the fiscal quarter progressed. I think that's a lot of weather. You know, what we saw is the weather turned more summer-like as the quarter progressed. So I think Home Depot probably benefited there, but you're still really lacking that true sales momentum.
So for Home Depot and for Lowe's, I know you think both companies are well run. If some of this is out of their control and it has to do with the rate structure, A, do you think we're going to get a cut in rates soon? And B, if we do, would you buy these stocks?
Well, look, I mean, that's the big question. So I'm going to be watching, very closely your next segment when Secretary Bessent is on and maybe some hints there of rates. I mean, look, my personal view is yes, rates will move lower. The timing of that move, I think, is still questionable. I personally believe that we're running above neutral. I mean, that's not necessarily my job to make that forecast, but I do believe that. But probably the point that to really answer your question, is covering Home Depot and knowing Home Depot very well. Yes, I very much believe that as rates move lower, as mortgage rates become, so to say, more affordable, that you're going to see a sales reacceleration at Home Depot. And frankly, the longer this dynamic, this stagnation in the U.S. housing market persists, the more pent-up demand builds. Okay, so again, as we get rates moving lower, it's still questionable when that happens. I think you're really going to see a resurgence, and that's the time. That's when you want to really own Home Depot. Now, I talk to our clients every day. There are clients that are positioned ahead of that. I mean, my advice is to wait on the sidelines a bit longer. But I do think I do think that will be a big positive for Home Depot and the home improvement space.
Richard McPhail, the CFO there, just in my conversation with him, said that they see a healthy consumer. They've been talking to the pros who use them, and they are still seeing delays. People putting off really big renovations, but they're not canceling them just yet. They think they're waiting for lower rates as well. How much of a move do you think you'd have to see? Is it 50 basis points? Is it more than that before some of those projects would actually come to fruition?
Yeah, it's okay. It's a good question. So, the 30-year fixed mortgage rate right now is just roughly 6.5. We talked a lot. I mean, the way that, like you're talking about the rate structure in the United States. I mean, if someone has a mortgage right now, that mortgage is probably at 3%. Okay, so you've got to get that 6.5 closer to 3. Now, we're not getting to 3. Okay, that's not going to happen. Okay, but I think, again, this is somewhat of a guess, but I think we start seeing a 5 handle on that 30-year fixed mortgage rate, something close to 5. I think there will be a big unlock dynamic there. Now, that's mortgage rates. Okay, that gets housing moving. The other piece of this on the shorter end of the curve is the HELOC rate. And so the typical dynamic is, there's a lot of equity out there, historic equity right now in homes. We want homeowners to start pulling that equity out to basically fund these bigger remodel projects, the bathrooms, the kitchens, the decks, whatever. So there we're probably, as the Fed moves, we'll probably see that happen quicker, and you can start to see that will really help to fuel that remodeling demand.
So between the two, we're going to hear from Lowe's later this week. Which do you prefer? I know you think both companies are well run. How does valuation play into this? How does performance? How does, who has the better relationship with pros? How do you kind of figure out between the two of them if you can only buy one?
Yeah, look, I've said, I think the better investment play here is Lowe's. I do. And I say that for really 2 reasons. One, there's still more operational slack in that business model. For years, Lowe's was mismanaged. Today, under new management, the company is much, much better run. And they're basically, their operations are now very close to Home Depot, but there's still a little more slack there. So I think that's a positive. The second is, despite all the improvements that have happened at Lowe's, the valuation gap between Lowe's and Home Depot has remained very wide. So I think that's a long-winded way of saying Lowe's is cheap. So I think Lowe's is the better investment play. Home Depot is still the better company. They're making better moves, bigger moves in that complex pro, that big pro business. They're ahead of Lowe's there. I think that could be attractive long term. But right now, if I'm owning one stock, I'd own Lowe's.
We got the Treasury Secretary coming up, but I'd be remiss. I have mentioned your sports coats before. You got a closet full, right? How many do you got about? I mean, you step out a lot, right? Got
That is, I'm actually wearing more of my summer attire now because I want to make sure I
That's
stay
what I mean.
correct.
But you missed it. You know what Dan Ives is doing, right? Another one of our guests. He launched a clothing line. Did you know this?
Really?
Okay.
Oh, I know. I didn't
Dan
know.
Ives launched a unisex clothing line
Blazers?
with No, I'm not joking. With Brooklyn-based designer Snow Milk. The collection is called Snow Milk times X Dan Ives collection. Features streetwear and graffiti-inspired graphic, and he's very excited about it. And I'm not saying you need to do this, but I think I talked to you more than I talked to him about his. You see it?
I'm looking at the stuff right now. This is not like what he wears on the air, though.
He wears some crazy stuff on the air. Brian,
This is streetwear.
So did I give you an idea, Brian? What do you think?
Well, I'll check out what Dan. I appreciate the way what Dan brings to the fashion world. I do. I put him and I joke about that quite a bit, but I think I'll stick with my analyzing Home Depot, Lowe's, and other consumer stocks. I think that's my lane, so to say.
Yeah. Yeah, maybe you do I don't know, a Formica line or something like that for they paint. All right, Brian. Thank you.
This is really
Thank you. Nice
cool.
That's what I mean. So I broke some news for you guys.
Yeah.
Wow.
Pretty kind of
There's
cool.
some real news.
There's some real news.
Real news you can use.
Yeah.
Still to come on Squawk, some real news you can use. Treasury Secretary Scott Bessent's going to be with us. He's going to join us at 7:30 a.m. Eastern Time. So many questions for him. But first, we are getting in bed with 8 Sleep, the company using AI to optimize your sleep. Now it's expanding with a new round of funding, and this product has some notable users: Mark Zuckerberg, Elon Musk, yours truly. Squawk Box, come right back after this. Welcome back to Squawk Box. 8 Sleep, which calls itself the world's first sleep fitness company, is on a mission to transform your bed into an AI-powered device for sleep optimization and health prevention. The company announcing today it's raised $100 million in new funding backed by notable sports figures such as Ferrari F1 driver Charles Leclerc and McLaren's F1 CEO Zach Brown, among other names. The capital is going to help the company expand into the medical sector and international markets like China. also getting involved, I believe, with all sorts of AI involved in all of this. So we got to get into this. Matteo is here. He is Matteo Franchetti. I always mispronounce your last name. I apologize. Sleep's co-founder and CEO. And we were talking about how Mark Zuckerberg has one of these things. I think Elon Musk does. I've had one since the pandemic. I think I found you.
You were one of the
I think
first.
I found you on Instagram.
Yeah.
And I don't have an affiliate link. I get nothing for this, but I feel like I sell more of these beds than anything else. It is like a life-changing, crazy situation. So for those who don't know, let's just explain. Your bed actually changes temperature during the night based on your own temperature and sleep
Biometrics.
sleep metrics.
Yeah, we invented a technology that you can install on top of any bed and mattress, and it will improve your sleep by up to 30%. And we do it in a couple of different ways. We change your body temperature in real time based on your biometrics. Each side of the bed can have a different temperature. And if you snore, we can elevate your head and you will stop snoring.
So I don't have that feature. I always tell people this did save my marriage because my wife and I are different temperatures. Most people are different temperatures. My wife runs her side like it is a freezer over there. I mean, an absolute freezer. Wow. I like a little bit of warmth. If you, TMI, if you ever wake up sweating in the middle of the night, never again. Never. Really? Right?
Yeah.
That's part of the situation.
We actually launched this feature that is called hot flash mode. And so if you have hot flashes in the middle of the night, particularly for women during menopause, you can just tap the side of the bed and it will start cooling you down. And now women in menopause or anyone with hot flashes, even people going through chemo, now they can use this feature.
Okay, so explain this though, because the next sort of stage of all this is you're going like medical grade on some of this.
Yeah.
What does that mean?
So there are two major areas. One is medical grade, so we are filing for FDA for a couple of different features, particularly in sleep apnea, which is connected to snoring, and potentially also for menopause, for hot flashes. And so we want to get FDA approval to diagnose sleep apnea and also to mitigate sleep apnea with some of the new products we're working on.
What are those? Can you tell us about them?
It will be connected to the current products, so through elevation and posture, we can fix sleep apnea without you wearing a CPAP machine. It will be mainly designed for light and mild sleep apnea.
And then you said there was a second piece of this.
The second piece is AI. And so we are doubling down on AI, and we're working on two new products, which will be obviously software. One is what we call a sleep agent. And so the sleep agent will be able to simulate your night before you even go to sleep. And it will start optimizing all our products and all the whole environment around what will happen during the night. And it will keep adjusting it while you're asleep.
How will it know what's going to happen during the night?
Well, first, based on your history, so all the data we have from the past.
Right.
Plus, we are connected to Apple Health and any other source of data you will share with us. And so you will be able to simulate what is going to happen before you even go to bed.
Do you worry at all? So my wife and I talk about this a lot, whether there's too much data. And there's sometimes where I do this thing, and it's not good. I'm so excited to see the data that I think like I should actually go back to sleep for maybe like an extra half hour on a Saturday morning, but I kind of want to know what happened. And I should just know because I should feel what I know. But instead I actually want to look at the data, which I shouldn't do. So no, there's some people who say that the data unto itself can stress you out, which means that you even get less sleep.
You also get your brain in, those...
Well, blue light and all the things.
Looking at it wakes you up.
Right.
I never look in the middle of the night. It goes off, and I feel like I should look, but
I think the key difference here is if we were just reporting data, I would understand your point. But the way we use data is to do things for you in the background. That is the key difference between us and the wearables. Because the wearables, they just tell you, okay, last night you didn't sleep.
You mean I wear an Oura Ring too. By the way, I compare the data.
Yeah.
Do you have data that's fed back to you about everything that's happening in someone's bed at any moment?
In an aggregated, anonymized way, we have data about how people sleep.
What they do in their beds?
What's that?
She's going into a very dark place.
Well, you can get the vibrations from somebody snoring. I'm guessing you can pick up other vibrations.
No, the focus of our algos is just on the key metrics that we report, and then is where we follow just the industry standards.
Yeah.
But going back to the data, there is another thing we're working on in AI, which we call the longevity twin.
And so substantially what we are creating is thousands of digital twins for each 8 Sleepy users that they simulate your health outcomes 10 and 20 years down the line.
Okay.
And they come back to you with recommendations about what to do and what not to do to make sure that you will live a longer and healthier life.
Okay, here's the big question. This is a relatively expensive product. Back when I first got it, I think it might have been even
You got in early.
$1,500. $2,000?
It was $2,000.
$2,000, okay. It's now basically, I believe, $4,000, maybe with all the...
It starts around $3,000.
But with all of the stuff, you can get up there,
Yeah.
right? Okay.
But it's a better mattress than it used to be, right?
It has got it. It's improved. It's improved from the
More
original one I
features,
had.
right? We didn't have snoring originally.
So my question to you, though, is how big a market do you think there is for this product? And is there a way ultimately to get the price down? Would you want to have much bigger volume at a lower price point? Or do you think of this as sort of a luxury product? What long-term, what does this look like?
Yeah, it's a great question. I really think in terms of a portfolio strategy, if we were Tesla, this is our Model S. And so you should expect over time we'll come out with the Model X and then the Model 3.
Okay.
But at the same time, there will also be the Roadster. And so you should expect the new products, they go down with price and also they go up.
We got to go. We got the Treasury Secretary coming up. He could probably use one of these mattresses just because he's...
Yeah, we should give him one.
We all need some sleep.
Yeah,
This
we
guy's
do.
been traveling around the world, so thank you.
Thank you so much for having me.
You bet.
Bye.
I can AI design bed to do more than just help me sleep, my friends. All right, we're still on. We're still on TV.
We're still on TV.
Yeah, we're still on.
We'll get them.
To be more than just sleep. Trapeze or something. I mean, I'm going to get a. Anyway, kidding. Joining us now, Treasury Secretary Scott Bessent. You never know what you're going to hear before you come on, Mr. Treasury Secretary. It's always a pleasure to have you on. Good morning.
Morning, Joe.
We have talked in the past about whether you wear different hats, and you have always said, I wear the Treasury Secretary hat. But can we talk about the meeting yesterday with the European leaders and with President Zelensky? We haven't talked to an administration official yet. Is the reporting correct that there will likely be a bilateral meeting and then perhaps one that includes President Trump? Is that where things stand right now?
Well, Joe, let's go all the way back to Friday because I want to set the record straight on what went on in Alaska. Alaska was a show of force by President Trump. He invited President Putin to land that the Russians used to own. He displayed a huge amount of military hardware and then did a flyover. It was kind of like inviting your uncontrollable neighbor to your house and showing him your gun case. So then the President Zelensky, we had a very good meeting with him and his team in the Oval for about an hour and a half. And then we met with the European leaders. It was an incredible group to have in the White House, all led by President Trump. And yes, the culmination of that was a call with President Putin. And my strong belief is that there will be a bilateral meeting between President Putin and President Zelensky. And that's the only way to end this conflict is to get the two sides talking.
There's such a large intersection between security and economics. I would think that any thing that we arrive at or that Ukraine arrives at with President Putin, to get him to I don't know, for lack of a better term, to behave or to live up to all of the promises that are made, what type of economic considerations would be involved there, whether it's carrots or sticks? Because we've talked about, he's made promises in the past that he hasn't lived up to, and there's a feeling that he's going to have to be induced to live up to whatever pieces is arrived at.
Well, I think the sense is that both sides are ready for this terrible conflict to end. And one of the ways to make President Putin want it to end is on the economic side. The Russian economy has 20% plus inflation. Right now, it is a war economy. I think more than 25% of the GDP is coming from the military buildup. So, you know, it's a very imbalanced economy. There are the frozen Russian assets, the runoff from those. is now being used to finance the war. So there are a lot of moving pieces here, Joe. And then there's the Russian oil. We have planned to up the tariffs on India. These are secondary tariffs for buying the sanctioned Russian oil.
It was interesting watching just the dynamic with the president and the different leaders from Europe that were there. We had just finished a lot of negotiations on tariffs and trade, and everybody seemed to be getting along. It was a little bit surreal, was it not?
Well, Joe, it was a optimistic, great day. Everybody's looking forward. The tariff discussions behind us, and that was very successful. Well, with Europe. And that's a very successful negotiation that President Trump completed in Scotland a few weeks ago. And now we can look forward to getting this terrible conflict solved.
Treasury Secretary Bessent, just in terms of already being done with those deals, I mean, there's still things that are popping up. The Financial Times had a story this week that pointed to the Digital Services Act and the Europeans really wanting to preserve the Digital Services Act and still be able to go after with that, and those are some of the non-tariff barriers that you all had been trying to negotiate and get rid of. It sounds like that is still there. Do you think this cooperation, this potential cooperation when it comes to Ukraine and Russia will end up affecting some of those economic talks that you've been having and will continue to have, I'm certain, for years to come?
Well, Becky, what you're talking about is the digital services tax, the DST, which is an unfair tax where some, not all, European countries tax our great internet companies. And it's unfair because it's very specific to our companies. But again, Europe very often has a collective action problem. The tariff negotiations were with the EU. I can name a few. I believe it's Italy, France, Spain have the DST. Germany, Poland, others do not. So that's more at the national level than at the EU level, and the tariff negotiations were at the EU level.
But will the Digital Services Act be something that this administration pursues actively? I guess is question one. And question two, because of this cooperation that you see on areas like defense and national security, will that bleed into any of the conversations that are taking place on the economic side? I mean, I think it's key that you, as the Treasury Secretary, are involved in all of these conversations.
Yeah, I think that the DST is very different than security guarantees for Ukraine. Everyone wants this conflict to stop, and we're not going to let the DST stand in between that. But we are pushing back. We're pushing back on countries around the world. And the problem with the European countries doing it is once the European countries do it, then they set a global standard, and countries like India, Turkey, Brazil think it's okay to do it.
Mr. Secretary, we would never have enough time, obviously, and I just heard how much time we have left. So in terms of, there's a letter being sent by some Democratic senators about security concerns with the H-20 chip. There's talk about export taxes de facto with the NVIDIA and the AMD 15% or whatever sharing revenue, taking a stake in Intel. For lack of a better term, industrial policy, which is anathema typically to Republicans. Would you put any of these things that we're doing right now under that umbrella of industrial policy, which rarely, according to most people, works out?
Well, I would put I'd put them under security policy. And look, what we discovered, the only good thing about COVID was it was a beta test for what being cut off on the key industries looks like. So whether it's chips, pharma, steel, several other rare earths, many other industries, we've got to become self-sufficient. And this administration is determined to do that. I think there is a group of us in the administration that if we leave office in January 29 and have not done that, we will consider that we've failed.
But that doesn't explain the NVIDIA and the AMD. I don't know what you'd call that. It almost, some people have referred to it almost as a shakedown. You give us, some revenue sharing, and you can sell these chips that formerly there was some concern about whether China should have access to these advanced chips. And now it seems like if there's money involved, suddenly it's okay.
Well, Joe, again, on the H20s, I think H20s are now pretty far down the NVIDIA stack. So it's
more advanced. Yeah.
It's not a national security risk. And what we would like, and what the industry has made a very strong case for, is for China, for the rest of the world, including the global South, to develop the U.S. standard as the global standard. I remember when Japan led the world in cell phone technology, and it didn't become a global standard. And for a long time, the Japanese technology got very isolated. The last thing we want is a Huawei Belt and Road, where Huawei is selling chips to the rest of the world and U.S. technology is excluded.
Mr. Secretary, I have a couple of questions. One is, there's a new report out, it relates to NVIDIA, about a new chip they're trying to build called the B30A, which apparently is more sophisticated than the H20, which they want to sell to China. Have they come to you about that chip?
That would be, Andrew, that'd be through Commerce. I haven't seen that yet. I was watching you earlier this morning, so I'm sure we'll be discussing it, and it will require a license to do that.
Well, then weigh in on this, since you did, it sounds like you heard maybe some of the discussion we were having earlier, and it relates to Intel and the potential 10% stake that the U.S. Might take in that company. And what steps you think either the White House or the administration might otherwise take to try to persuade or aggressively sell Intel chips to U.S. companies? Because one of the biggest issues about Intel thus far has been that they're not selling as many chips as they should. And the Biden administration actually tried to put some pressure on big tech companies to buy these chips, and a lot of those companies said, we don't think the chips are good enough.
And the last thing we're going to do is put pressure, is take a stake and then try to drum up business. The stake would be a conversion of the grants, and maybe increase the investment into Intel to help stabilize the company for chip production here in the U.S. There's no talk of trying to force companies to buy from Intel.
But no concern that, if you prop up a company that deserves not to make it, that it's just another example of almost too big to fail. Is Intel in the past, the government hasn't been great at picking winners and losers, but you think because of the foundry that Intel has, it's that important that the government actually helps to keep that viable?
Joe, there are industries that we have to onshore. I think you and I are the only ones in this conversation old enough to remember the Arab oil embargo in the 70s and gas lines. And I would say that the single point of failure for the global economy is that 99% of the advanced chips in the world are made in Taiwan. And for national security, we have to stop that single point of failure.
Mr. Secretary, have you had any, just changing, once again, like I said, we try to get as much as we can in. Have you interviewed anyone for Jay Powell's replacement in recent days? Can you give us any light on where that stands? And after the PPI numbers we had last week, do you still think that this is the time for a 50 basis point cut, or at least 25 at the next meeting?
Well, Joe, a lot of things there, Joe, so let's dissect that.
Okay.
In terms of the interview process, we've announced 11 very strong candidates. I'm going to be meeting with them probably right before, right after Labor Day, and to start bringing down the list to present to President Trump. And it's an incredible group. It's people who are at the Fed now, have been at the Fed and private sector. So I'm looking forward to meeting all of them with a very open mind. And then on PPI, first of all, since President Trump came into office, there were 5 very tame PPI numbers, and a big component of this month's PPI number was investment services, which just means the market went up a lot.
Right, in terms of, since a lot of it is 2 and 20 or whatever, I guess maybe that
Well, even just 1%, if the portfolio is up 10%, then it's up.
Right.
Mr. Secretary, you started at the beginning describing President Putin as your uncontrollable neighbor. You kind of brought over and showed your gun case too. I know part of what the administration has done has tried to make it tougher for Russia to be able to sell its oil. It cracked down pretty tough on India, which is importing a lot of Russian oil, but not so much when it comes to China. Is China in the wrong for importing so much Russian oil as well? I think they import just as much as India does.
Well, let's go back and look at the history though, Becky. And China importing it is suboptimal, but if you go back and look pre-22, pre-invasion, 13% of China's oil was already coming from Russia. Now it's 16, so China has a diversified input of their oil. If you go back and look now, I believe India had less than 1% of their oil, 1%, and now I believe it's up to 42. So
wow.
India is just profiteering, or they are just profiteering. They are reselling. They've made 16 billion in excess profits, some of the richest families in India. So this is a completely different thing. Like this India, what I would call the Indian arbitrage, buying cheap Russian oil, reselling it as product, has just sprung up during the war, which is unacceptable.
Mr. Secretary, just to touch on another topic that I think we have talked about, at least I think maybe we talked about with actually the president, but I'm curious where you landed and just how it would be effectuated, this idea of using some of the tariff money to effectively create a dividend for American citizens. A, are you an advocate for that relative to using that money to pay down the debt? And B, if you are, how would it work in practice?
So, Andrew, I think President Trump has talked about that, but he and I haven't, and I think at a point, we're going to be able to do it. As you would have seen, U.S. Ratings were affirmed last night because of the tariff income, but President Trump and I are laser focused on paying down the debt. So I've been saying that tariff revenue could be $300 billion this year. I'm going to have to revise that up substantially. So I think that we're going to bring down the deficit to GDP. We'll start paying down debt. And then at a point that can be used as an offset to the American people.
You said you might have to revise. Is it up? How high?
I'm not prepared to give you the number now, but it could be substantial.
I know you have an 8 a.m. I was going to ask you. I can't help myself. Ask you about inflation. We had someone on the other day that looked at the revised employment numbers and said you could almost make the case that there might have been a lull, but it's starting to turn back up. Is that what we want, or does that make it harder for the Fed to cut? What do we? I guess we want full employment with low inflation so that the Fed can cut. I can answer for you, I guess.
Well, that's a good answer, Joe. So I think we can go back to. I think that we could either go back to the 90s where we had good low inflationary growth, or back to President Trump's first term. But I think the real problem here is we're seeing some distributional aspects to the higher rates, as your earlier guest said, especially in housing and in for lower income households with high credit card debt. So we're seeing this big CapEx boom. Part of it's AI, part of it's the tax bill. And so CapEx is doing well, but households, home building is struggling. And you were asking me about interviewing Fed candidates, and there's the ability. Everyone has the ability to look at the current data, but let's just think about if we keep constraining home building, then what kind of inflation does that create 1 or 2 years out? So, you know, a cut here could facilitate a boom or a pickup in home building, which will keep prices down 1-2 years down the road.
All right. Once again, I know we went long. Thank you. Apologize to people that schedule these things for you, Mr. Treasury Secretary. Thanks for all your time. Appreciate it.
Good to see you.
Okay. A programming note. We're talking about the purview of some things being with Commerce. Well, Commerce Secretary Howard Lutnick is going to be on Squawk on the Street. And Andrew, you can send those guys your question about that more advanced chip.
Yep.
Yeah, and ask the Commerce Secretary.
All right, when we come back, we've got some deal news. Nexstar Media Group is buying rival Tegna for $6.2 billion. The purchase price of $22 a share represents a 31% premium to Tegna's 30-day average stock price before the reports of a possible deal. There is some news of a potential spoiler in this, but Nexstar's CEO will join us later this hour. Squawk Box will be right back.
You download Dave.
Coming up, Nexstar founder and CEO Perry Sook on his bid to buy rival Tegna and a possible spoiler to the deal. And later, Skybridge Capital founder Anthony Scaramucci is going to join us from the second annual Wyoming Blockchain Symposium, where the state is launching its own stablecoin. More on that in the crypto markets coming up at 8:40 a.m. Eastern Time. We're coming right back after this.
We are approaching 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. And among today's top stories, we are just about 30 minutes away from housing starts and building permits data. We'll have those numbers and the instant reaction. Starbucks is going to be giving all salaried employees a modest 2% raise this year. The company telling Reuters that this will apply to all corporate staff, workers in manufacturing and distribution, and store managers. Under the CEO, Brian Nichols, Starbucks has cut some jobs, tightened dress codes, and is trying to keep costs under control as it invests in reducing wait times and improving the customer experience in stores. And OpenAI has launched a subscription plan in India priced at $4.57 a month. That is its lowest price globally. That new plan is called ChatGPT Go. It provides expanded access to the latest model, GPT-5, also some other features at a lower cost.
Let's check the futures this morning. That may have something to do with Home Depot up now, or where is it still down? And then it's in spite of Home Depot. Actually, it is up now. It's up 5 points. For that, the Dow has really been kind of buffeted by the move in Home Depot, Frank Holland, because it's a $400 stock, basically. So, a 2% move is pretty big and affects the averages. Good morning.
Absolutely. Good morning again, Joe. Absolutely. You're front running me, though. So we're going to start with Home Depot. As you can see right here, shares are front Home Depot. They're up about 1 1/3%. Home Depot is sticking by its full year outlook, even as the company came in just slightly shy of estimates for both earnings and for revenue. The report's Home Depot's first since May of 2014 to fall short on both of those metrics. And the company is signaling it's still waiting for a kind of a greater pickup in home improvement activity, maybe a rate cut that might juice the housing market. But that's a long story. Right now, shares are up about 1 1/4%. Year to date, shares are up about 2 3/4%. All right, one of your top stories today, Japan's SoftBank buying $2 billion worth of Intel stock at $23 a share. Intel saying will be, quote, a primary issuance of common stock. That means 87 million new shares, giving the Japanese owner about 2% of Intel. You can see shares are up about 5 1/3% right now. Shares are also up before the bell, showing that SoftBank's vote of confidence is really outweighing any concerns about share dilution. Moving on, Evercore is upgrading Caterpillar and bringing a very hefty price target increase along with it. Analysts are raising the target more than $100. It was $373, now it's $476. You see the company's trading at about $420 right now. The firm also added Caterpillar to its 5 favorite stocks, and the company's volume leverage and geographic mix is a bright spot in a difficult construction segment overall. Shares of Caterpillar right now up about 1 3/4%. Year to date up nearly 16%. Back over to you.
All right, Frank, thank you. We appreciate that. We were listening, but we have, we multitask. We were talking about some other stuff too.
And we're sorry, we didn't mean to front run you.
No, we didn't mean
it. Guys, listen, you have a big deal on local TV to talk about. You guys got to get to it.
Okay, here we go.
Right. From Frank, who started in Alaska.
We got a broadcast deal to tell you about, and a possible spoiler as well to talk about this morning. A short while ago, Nexstar Media Group said that it's going to buy rival Tegna in a cash deal valued at $6.2 billion. The transaction still subject to regulatory approval and Tegna shareholder approval. Meanwhile, late yesterday, the Wall Street Journal reporting that Sinclair, one of the nation's largest owners of local TV stations, wants to merge its TV business with Tegna. So there's a lot going on here to unpack. For more details, we are joined now in an exclusive interview by Perry Sook. He is the founder, chairman, and CEO of Nexstar. Good morning to you. You have a deal, but maybe not. Where are you at this point?
Well, the deal was voted on and approved unanimously by both sets of boards of directors of both Tegna and of Nexstar last night. So we will begin the regulatory approval process as soon as this morning. And as you know, that requires FCC license transfers and other regulatory approvals. So it's probably a 6 to 9 month, perhaps even 12-month approval process. And that's what we begin work on today.
We'll get to the Sinclair piece in just one moment, but just walk through the numbers, the math of why putting these two companies together makes sense in your mind, and how we, the public and the investor class, should think about these two industries or these two companies amid an industry that I think a lot of people are concerned about.
Well, first and foremost, Nexstar has chosen to focus on the local part of the media ecosystem, which I like to say is the least sexy but most sticky part of the media ecosystem. You know, we produce local news, and the combined companies will produce in excess of 450,000 hours of local news on an annual basis. And we help local businesses sell stuff. Nexstar alone has relationships with over 40,000 SMBs across the country. And we believe that that business is durable, and those touch points and local relationships are very important and also very sticky. So we believe also that broadcast news is essential to this country and a free democracy, independent local news, and that broadcast TV is basically the last bastion of local news at the local level. And our goal is to become a big company, a bigger company, and hopefully be able to compete on a level playing field with big tech that is pervasive in all aspects of media, advertising, programming, sports rights. And so this is our goal, both to play both offense and defense, to maintain a vital industry for America and a vital source of information.
Perry, how do you think regulators are going to look at this deal? By my count, and maybe you have a different count, there's about a dozen markets where there's overlap. And so there's a question, of course, about what happens to the news or the two news networks, if you will, that compete in those markets, for example.
Well, there are 35 markets in this transaction where both Tegna and Nexstar operate television stations. So there will be a combination of those into one facility. Think of it, if you will, as operating two newspapers off of a single printing press. And again, our focus here is on increasing the amount of local product, giving us, with two stations, more time period flexibility when we can air local programming and local news, and basically meet the viewers where they are, whether it's on a broadcast or digital platform, with our trusted product. So Nexstar has a track record of doing this. About half of the markets that we operate in today, Nexstar derives an economic benefit from more than one television station through a series of sharing arrangements where historically outright ownership of more than two stations or two stations in a market has been prohibited. And as you know, the Eighth Circuit Court basically vacated in July the two-station rule, or the two top big four station rule, that prohibited an operator from owning two of the top four rated stations in a marketplace. So we feel, as we move through this regulatory process, that we're meeting deregulation kind of where it is at this point. We think it's evolving, and we think our case is compelling, not only for removal of the national ownership cap, which keeps broadcasting to 39% of the U.S. population, when we compete with big tech that is pervasive and able to reach every screen and every backpack, living room, and office in America. And so we just want to level the playing field.
Right. How much autonomy do the different units locally have? And the reason I ask is, I don't know if you recall, is actually Sinclair stations, not any of yours, I don't think, where there was sort of a repetition politically of, I don't know if you remember this, so many of the sort of messages that were coming from dozens of local markets. The reporters, if you will, would sort of say very, very similar things. And there was a question mark about, in a national, here we are talking about local news, but clearly controlled by one big national enterprise, and how we, as the American public, are supposed to think about that.
Yeah.
It's an interesting development. We are, we're trying to, I think we might have just lost Perry for a moment there. We're going to get him back in a moment. But do you remember this? There were, you'd see, they literally show each local market basically saying the same words.
The same words.
Exactly. And therefore, even though they're local, is it a good, from a public policy perspective, a good thing for one company to control all the local markets,
Andrew,
right?
It's perfect as a reason for my app that you're still working on.
Oh, yes.
Because it's a conspiracy. You missed it.
I am coding. I am
to screen out all the mainstream media liberal bias from news.
I am vibe coding an app.
I try to do that. He's going to do it so you can pay $4.99
vibe coding an app
for it.
Called the Kernan MSM Truth app.
Yeah.
Which basically looks at every national story and then gives you the most conservative view of that story.
That's like the jerk reaction.
We might change it. Maybe we're going to change it to the Kernan MSM Now app.
Oh, wow.
MS
I think we might have gotten Perry back. Perry, you with us?
Maybe we talked long enough to get it back.
Well, okay. I think
Oh,
we're
no,
going to get him back. We have a lot more questions, including about, we were talking about Sinclair with this example, but Sinclair now trying potentially to jump into this deal and what that would mean for the price tag of the
I want to
deal.
talk to him about the retransmission content revenue streams that he's the godfather of. They've come under attack, so I'd like to get his thoughts on where we're headed.
Okay, let's do this. Why don't we take a commercial break,
Yeah.
and maybe we can get him back,
Okay.
see if the technology gods will help
I'm
us.
back on board with local news.
Well,
NBC at 5. I can't watch anything else anymore. I just can't. It's too much. It's too much what happens at 5. So I'm back to watching weather.
Okay.
Yeah, I love Janice.
We'll come back.
Oh,
Oh,
see?
wait.
Guess what?
See?
We might
You
have
got
gotten
it.
him.
I told you if I talk on.
Perry, you're back. The technology gods have helped us.
The
with us?
gremlins of the broadcasting television business. I'm here.
Okay, so Perry, here's where we were going with this. We were talking about it actually while we were trying to hook the link back up. So I don't know if you recall, but there was a whole brouhaha actually around Sinclair. This is many years ago about how, and went to the question about autonomy among local channels and how much control the sort of national business has over these local channels. And Sinclair, it sounded like, was effectively messaging out, and you saw their broadcasters actually in all sorts of markets saying very similar things about politics in the country. And I was curious how much autonomy you want the local news units to have after a transaction like this.
Well, we are first and foremost a local service business, and so the tastes and needs of the community in Portland, Oregon are different than Tampa, Florida, where we operate stations. And so we delegate authority and autonomy to our local market managers and our local newsrooms, and I do not dictate content. No one in the organization dictates any content. We work together on group projects, but no one's handed a script and said, here, read this, and it goes across all of the markets in which we operate. Right. The only times we've ever coordinated coverage is around public service or telethons or things like that, but certainly not in the editorial product of the newsroom.
Tell me, to the extent that Sinclair actually does jump into this, what that means. We could talk about breakup fees and the like, but what the chance is that there really is a spoiler involved, and to the extent that some shareholders are going to say, how much higher can you go, sir? How much higher can you go?
Well, I spoke with the chairman of TEGNA when the unsolicited offer came in. It was an unnamed and unspecified offer, but he said, we received this, but we are committed to completing the transaction that we are in the midst of with you. And we have a completed transaction, signed documents, ready to file for regulatory approval. Anyone else would be at the front end of that process. I think you also would have to look at balance sheet capability, financing. We have committed financing from Bank of America, JP Morgan, and Goldman Sachs. So I think the board considered all of that in their deliberations last night and voted unanimously to support our transaction.
Perry, let me ask you about the retransmission of content revenue stream funds that you really kind of invented. You were the first one to come up with these fees. People call you the godfather of these fees, and it's been a big issue that the major companies have kind of been pushing back on the local stations. In fact, Brendan Carr, the chairman of the FCC, wrote a letter directly to Bob Iger to Disney earlier this year saying, reporting indicates that certain of ABC's affiliate agreements are set to expire at the end of this year. My understanding is that ABC is attempting to extract onerous financial and operational concessions from local broadcast TV stations under the threat of terminating long-held affiliations, which could result in blackouts and other harms to local consumers of broadcast news and content. He goes on to say that this is not how Congress envisioned the retransmission consent process working. Where do things stand right now? This has been a pretty important lifeline for local TV stations. How are those negotiations going, and what's happening with the FCC and Congress on it?
Well, they're generally two separate negotiations, Becky. First of all, there's the television station owner or operator dealing with the cable or satellite company to negotiate for the revenues, then turn around and negotiate with the networks for the split of that revenue, or how much would be then tributed over to the networks. And we pay the networks for two things: their programming, and historically we've paid for geographic exclusivity in a local marketplace, whether we're in Tampa or in Abilene, Texas, the exclusive right to air that programming from that network in that geographic area. Well, exclusivity has, for all intents and purposes, gone away with things being ported over either simultaneously or with minimal delay to streaming platforms. And so my discussions with the networks have been the less exclusive your programming, the less valuable it is to me. My bread and butter is my local news, and that's where I continue to focus my time and treasury. So it's contentious negotiations on both sides, always has been. It's a business of scale. Distribution revenue is a business of scale, and dealing with the networks is a business of scale. This company on a pro forma basis will be the largest affiliate of each of the big four, as well as CW Network. And with that scale, I think comes the ability to leverage the negotiations to a much more equitable place.
So the future looks good as long as you have enough heft to be able to stand up in those negotiations?
I think that has played out over the last dozen years or so as our company has gotten bigger through the acquisition of Media General and then Tribune in 2019. And so we see it play out in the marketplace on a day-to-day basis. And these are private contractual negotiations. And we appreciate Chairman Carr asking the question. We appreciate Chairman Carr's leadership in examining the national ownership cap. He has a refresh the record proceeding that's open at the FCC right now on the national ownership cap. And we also think that the in-market restrictions that have heretofore been in place due to antiquated approaches to what actually is television or what is a market will also be examined and we feel updated during the pendency of this transaction, not only with the Eighth Circuit Court ruling, but also the FCC's initiative to eliminate outdated and outmoded regulations.
Okay. Perry, we want to thank you. We'll leave it there. We'll get the transmission gods to help us in the future. We hope to continue to talk to you as the deal progresses. Thanks again.
Thank you very much.
You bet.
When we come back, the next step toward peace between Ukraine and Russia. Former NATO Supreme Allied Commander Wesley Clark will join us. Squawk Box will be right back. The White House says it's working to schedule a meeting between Russian President Putin and Ukrainian President Zelensky. Joining us right now is the former NATO Supreme Allied Commander Wesley Clark. He's a retired four-star Army general and now chairman and CEO of consulting firm Wesley Pay Clark and Associates. And General, let me just ask what you thought. I don't want to be leading the witness. What was your takeaway from what you've seen over the last 3 or 4 days?
Well, I think it's a good thing that the dialogue's underway. Everybody obviously wants the fighting to stop, and got to commend the president for taking the lead and trying to bring people together to get it stopped. But the question really is, what is Mr. Putin's ultimate aim and strategy? And so where we are right now in this is that we've given up on the concept of a ceasefire, apparently, so the fighting will go on. The bombardment of killing of civilians in Ukraine by Russia will go on. Meanwhile, we're talking about security guarantees and details, and President Zelensky wants a personal meeting with Putin. Honestly, most of us don't understand why President Zelensky is demanding a personal meeting with Putin. It seems to me that the first thing that has to be explored is what is the nature of the security guarantee that Europe and the United States will provide. Thus far, it's very, very sketchy. When the Europeans say they'll put some troops on the ground in Ukraine, but in the western part of Ukraine, that's no security guarantee. Everything about this requires detailed work. And so the bottom line assessment is you're going to get a bad agreement if you push the pace up at the rate we're pushing it without a lot of detailed examination of what are the conditions that will invoke the security guarantee. What is the security guarantee? What is the U.S. role? What is the preparation of the United States to fulfill that role? What is the binding legislation in the United States that will compel us to do it? You know, you go back to 2014, the little green men came into Crimea. Everybody knew they were Russian soldiers. The Ukrainians asked the United States for help because we had signed a pledge in 1994, the Budapest assurances that we would protect their borders. President Obama said, no, let them have it. We'll try to deal with this diplomatically. Don't provoke Mr. Putin, or words to that effect, privately to the Ukrainians. That's what they did, and here's the result 11 years later. So everything here is about the details, and you've got to assume that Mr. Putin, who spent 25 years bemoaning the failure of the Soviet Union and seeking a way to recreate it, is going to certainly work the details against us. So we're a long way from done on this.
Okay, so that is the interesting part. It's very hard, if not impossible, to trust Putin, knowing what he's done in the past, knowing the agreements he's signed and then violated time and time again. How would you go about doing this agreement? You know, a NATO light sort of agreement. What should it look like, and how would you get it passed through Congress too?
Well, first of all, a NATO-like agreement is not. It's not foolproof. It doesn't commit you to go to war against Russia. It says you'll provide assistance as you deem appropriate, essentially. And that assistance might be, as just as President Obama did, said, we'll call Putin and tell him to stop. So it's not exactly the way it's being portrayed. That's the first thing. Secondly, if you were in Ukraine's position and President Trump's position, you want a just, sustainable peace. It's a matter of putting the military forces forward, not west in Ukraine, but right up on the ceasefire line.
General, it sounds to me though like what you're saying is no agreement is ever going to be safe. Basically, it depends on who the commander-in-chief is and whether Putin is going to be afraid of that person or not. If Obama looked the other direction, as you just said, so you're only as strong as the commander-in-chief.
That's right. And, you know, we've been lulled, for, I hate to sound like an historian on this, but, you know, we started the Cold War with strategic nuclear superiority, and President Trump is exactly right to be concerned now about our strategic defense in the United States, because in a multipolar world, mutual assured destruction does not provide the level of deterrence for the United States that we thought it did during the Cold War. And so the idea that the United States is going to backstop everything You've got to put your cards on the table. If we're going to do this, put some U.S. troops there. Put them east of Kyiv so that Russia can't sweep forward across the broad, wide open steppes of Ukraine and take the rest of the country. Because as long as Mr. Putin says he's going after the root causes of this, the root causes are he doesn't control all of Ukraine, the Baltics are independent, and NATO is a strong alliance providing security in Europe. Those are the three root causes he's going after. So we've got to be careful that this agreement doesn't just slide us into the next period of conflict in Europe.
General, I think it's been just about 2 months since we dropped a couple of ordnance on, or more than a couple on Fordo and some of the other facilities, and we talked about it. And I just want to revisit that. And I have the benefit of hindsight, obviously, and you never know how these things are going to work out. But would you say that was there's just no way that at least the worst case scenario didn't come to pass? And do you have a different view of it now? Was that successful? And do you think it was, in hindsight, the right thing to do at the time?
You're talking about the Iranian operation that we ran with our stealth bombers, right?
Right, and we had a kind of a heated, I was saying, talk's one thing, we've been negotiating for so long, maybe it's time, maybe it won't result in some horrible, another never-ending war, and maybe that there are times when it makes sense, and I'm just wondering whether you think maybe I was right at this point. I don't want to...
I just remember you're asking a lot of questions to me and getting very heated over it.
No, you got heated because I was challenging a general. No one's ever challenged it. By the time you get to be a general, I think everybody's afraid of you, and I am too.
But I've been challenged at every stage, and especially when I'm in office. But look, the truth is that I think we did the right thing. I think Israel did the right thing. Iran was weak. We should have gone in there. I wish we'd let Israel continue the job. The Iranian regime was on the brink of collapse as the Israelis began to take out the police stations, and they panicked. They sent their foreign minister to Moscow. We don't know what that resulted in, but immediately, we stopped the Israelis. We called for a ceasefire. Maybe we've set the program back 2 or 3 years, but we still have a hostile government in Iran, a government that's trying to reconstitute its defenses through its militia in Iraq and in Syria even. So look, my view on it is when you commit U.S. forces, you should be decisive. Now, we tried to do this against the Houthi. Turned out we weren't decisive even under President Trump. We were effective in a military operation against the Iranians. We've set back their nuclear program. But have we ended the hostility in the Gulf? And the answer is no. And so I would have kept it going for another few days.
General Clark, want to thank you very much for being with us this morning. We look forward to talking to you again soon.
Thank you.
Still to come, July housing starts data. Then Skybridge Capital's Anthony Scaramucci joins us live from the Wyoming Blockchain Symposium. To discuss the crypto markets. Let's see, Wyoming in the summer could be worse. They all do that, don't they? Nobody goes to, Pennsylvania. As we head to break, check out crypto prices this morning. Huh?
Shares of Palo Alto Networks trading higher this morning. The cybersecurity software company beating on both the bottom and top line expectations for its fiscal fourth quarter. It also gave first quarter earnings per share guidance that was above what the street was expecting, and full year profit and revenue guidance that was above forecast as well. That stock right now up by about 6%. Palo Alto Networks saying that its founder is retiring. He currently serves as Palo Alto's chief technology officer. Don't miss an interview with the company's CEO that's coming up at 10 a.m. Eastern time on Squawk on the Street. Nikesh Arora will be there. Good guy to talk to.
And NVIDIA reportedly working on a new chip for China that's more powerful than the H20 chip it already is allowed to sell. Reuters reporting NVIDIA's new chip based on its latest Blackwell architecture. Its design likely delivers half the computing power contained in the company's more sophisticated B300 card. Now, sources telling Reuters the company wants to deliver samples to China for testing as early as next month. We talked to the Treasury Secretary about that chip. He didn't know about it, suggested we talk to the Commerce Department about that. And our good friends on Squawk on the Street are going to have that opportunity in just a little bit with the Secretary of Commerce, Howard Lutnick, coming up in the 9 o'clock hour.
Market flash for you as well. Shares of Robinhood, check it out. Bernstein raising its price target to $160 from $105. That stock is well above the firm's old price target. It's now trading above $115. It's nearly doubled over the last 6 months and is up over 460% over the last year.
We're just seconds away now. In fact, about 5 seconds from housing data, and Rick Santelli standing by at the CME in Chicago. Rick, how are the numbers, please?
Good morning, Joe. Yes, we're looking for housing starts for the month of July. Permits, just a preliminary first of two we'll get for July. Starts expected just a whisker under 1.3 million, come in significantly stronger. 1,428,000. That is a nice jump from 1,321,000, which was last month, and that was the lowest since the previous month, which was 1.2 plus million, but the numbers have been on the downside. This really is a strong number. It's the strongest number going all the way back to February, and it would mark the second strongest pace of the year for starts. If we look at the permit side, a little bit light, 1,354,000. That's about 30,000 light. And it follows 1,393,000, so it's still a bit on the light side. And if we look at this number, it comps to the same place last month's did, to June of 2020. So permits are light, which means maybe down the road we're not going to get significant building. Many are paying attention to the inventory levels of single family, which are actually on the high side, and pointing towards potentially more aggressive tendencies towards the multifamily side. We know affordability is number one issue, and even though we've seen mortgage rates briefly move down into the 660s, by historical standards that might not be too bad, but if you look at history over the last 10 years, well, it is definitely on the high side. Interest rates, well, as that number came out, not a significant change. We're hovering at 432 and a 10. That's down 1 versus yesterday's close, and around 375 in a 2-year. That's down a couple of basis points. The big driving force this week may be the minutes, but also Jackson Hole. But in the end, many believe that the very significant percentages for a rate cut at the September meeting are overplayed. But if that's true, keep an eye out for major guidance from Jackson Hole, because the Fed doesn't like to disappoint the market. Joe, back to you.
All right, Rick, thank you. Let's get to Diana Olick, joins us now with more after all those numbers. Hey, Diana.
Hey, Joe, and Rick mentioned it. Look, it's multifamily. When you break out the single family versus multifamily in July housing starts, multifamily is the clear driver, up 11.6% month to month, up 27% year over year. Single family up 2.8% for the month and up nearly 8% year over year. So why is multifamily driving when we know in the last couple of years we have seen a really historic supply of multifamily units come onto the market? The reason is demand. It is still strong. Absorption is strong, and we're seeing rents start to turn higher again also. Why? Because people aren't buying homes, so they either stay in their rentals or new household formation is rental formation. So that's why you're seeing this growth. In the permit side, again, for single family, you're just not seeing much at all. It's down 2.8% month to month, same down year over year. And that's again because the builders are looking at higher costs, they're looking at higher mortgage rates. And while Rick did mention that mortgage rates are down just over 6.5%, that happened in August. These numbers are based on July, and rates were still higher in July. They came down really the last few days of July and then into August. And again, as he said, they are not historically low. So at this point, affordability is really rough. You know, Peter Boothfar was on our air this morning, and he noted that even if you lower interest rates, it's not going to help the builders get to the point where it's really going to change the housing market or make it a supply-demand balance. What you need is more existing homes on the market, and that's not happening because sellers aren't getting the price. They don't want to trade up for a higher mortgage rate, and affordability is just really tough. You need home prices to come down to really jumpstart this market. Mortgage rates, even lower mortgage rates, are not going to do it. Back to you guys.
Right, Rick, Diana, thank you both for that.
Okay, coming up next, Treasury Secretary Scott Bessent expecting a jump in the housing industry if there's a rate cut. We're going to get reaction to that in just a moment. Take a look at the futures right now ahead of the market open. A little bit of green on the screen in terms of the Dow up 85 points, but the NASDAQ looking to open off about 19 points. We'll call the S&P 500 relatively unchanged, almost flat right now. Squawk Box coming right back after this.
Betterment.
If we keep constraining home building, then what kind of inflation does that create 1 or 2 years out? So, you know, a cut here could facilitate a boom or a pickup in home building, which will keep prices down 1-2 years down the road.
was Treasury Secretary Scott Bessent in the last hour talking about the housing market. And joining us now, Logan Mohtashami, HousingWare lead analyst. And I guess the first thing you can talk about what the Treasury Secretary alluded to, or just respond to the numbers that we just heard from the federal government.
You know, single-family permits have been going lower and lower for some time now. The big publicly traded builders can still buy down rates to get below 6% to move product, but the smaller builders are at a disadvantage here. Multifamily construction has already had a very big crash in starts, so they're working from a very, very low level. So when you see these big housing start prints, they're very volatile. Simply put, mortgage rates are too high to get things moving again. If you can get rates down to just a 6%, the builder stocks are starting to outperform a little bit. Housing does tend to act better towards 6%. It's just being able to hold it there enough to get things going. So it is a rate story. And if the economy gets a little bit softer, maybe on the labor side, you can maybe get rates down to 6%. But outside of that, we've just been basically stuck at very low single family permits for some time now.
It's, for some reason, Logan, six seems to be the level where no one's saying it 5.5 or 5 at this point, like anytime soon.
Yeah, it's really hard to get sub 6% mortgage rate with Fed policy where it's at, and especially where inflation is. But in the last few years, when mortgage rates go from 6.64 down towards 6%, new home sales tend to act better, existing home sales tend to act better. We're still very low on the existing home sales side, but the new home sales market is still at 2019 levels, right? They've basically been in a sale range since 2018. So there's demand there, but whenever rates go back up to 7%, we see it fall. Whenever rates go back down to 6%, we see it do better. I know Home Depot talked about, people are pausing on their reconstruction or renovation projects. So residential jobs are starting to roll over now. That's not a good sign with the economic cycle that we've seen over the last 4 or 5 decades. So just getting down to 6 is the most realistic thing we can get in this kind of environment where Fed policy is. So it'll help a little bit. It won't be a housing boom or anything in that regards. But you can grow new home sales a little bit. You can grow existing home sales just to get the single family permits going again, because it's going to take time to get these homes starting to build and get them out there as real supply.
You said that with current Fed policy, are we guaranteed that if we cut, we'll get a point for point drop in the mortgage rate based on what we do? That doesn't necessarily mean we can get below 6% if the Fed starts cutting, does it?
I think a lot of mortgage pricing getting better recently has already anticipated that. We had a 2% move from 2023 from 8% down to 6% in 2024 with no rate cuts. So really the bond market tends to get ahead of the Federal Reserve. Federal Reserve always tends to play catch up in that. So I think a lot of the good pricing so far has been put in. To get lower mortgage rates with Fed policy here, you need weaker labor data. If labor data starts to pick up and core inflation starts to pick up, you can move up a little bit more, but we're kind of where we should be with mortgage rates and where the 10-year yield is. The positive story in 2025, though, that wasn't the case the last few years. Mortgage spreads have gotten better, even as the 10-year yield has risen the last few trading days. Mortgage pricing hasn't been hit so much. That is a real positive story going out, not only for the rest of this year, but for 2026. If spreads could just improve a little bit more, you don't need that much help from the 10-year yield to get low 6 mortgage or get rates down to 6%.
Logan, none of this sounds great for if you're a young home buyer or a young family. It seems like everything's going the wrong way. Is it over for them? I mean, we always say that, but
in real terms, let's think about it this way. We have near 5 million total home sales. In the peak of the last decade, it was near 6 million. So we're missing roughly 1 million mortgage buyers. If you look at the history of housing economics going back decades, there's always been periods of times where home sales crash, they stabilize, wages grow, household formation grows, rates go lower, demand picks up. We just basically rinse and wash and do it all over again. So it's not over. We had a similar situation in the 1980s when affordability was worse there. But over time, wages grow, household formation grows, dual household incomes came in. as long as price growth cools down, it looks a little bit better going down in the future. And again, we don't need 3, we don't need 4, we don't need 5. But if you want to get single family permits going again, you want to get housing construction going, you want the jobs that are being lost to reverse, you probably need mortgage rates just to get down to 6% and hold it with duration. And now that mortgage spreads have improved, that's going to be a positive going out in the future. It's just that last leg down.
Yeah, we didn't even talk about nobody can get a job, and that's now. That's even before AI really kicks in. It's rough. All right, Logan, thank you. We'll hope for 6. See you later.
I think that's part of it. Harder to get an entry-level job
I definitely think that's part of it.
now.
Yeah.
All right, up next, Bitcoin backing off recent highs and trading in the $155,000 area. We are at $115,000.
Yeah.
To make that.
Yeah. Yeah, for now.
For now.
Until next
okay.
week.
Wait a few days.
It'll either be 55 or 155.
We will hear from Skybridge Capital's Anthony Scaramucci and find out if new highs are on the horizon. He joins us right after this next break. Squawk Box will be right back.
Mike Squawk, Director of National Intelligence, Tulsi Gabbard saying the UK dropping its demand that Apple provide a backdoor for authorities in Britain to be able to obtain user data. Now, Gabbard made that announcement in a post on X late last night. U.S. lawmakers have criticized the UK order, saying it could be exploited by cyber criminals and authoritarian governments. Apple has said it won't build that type of access into its devices. The company had also challenged the UK's water. Meantime, crypto investors and policymakers gathering in Jackson Hole this week for the second annual Wyoming Blockchain Symposium. It's hosted by Salt and Kraken. And joining us right now, first on CNBC, Anthony Scaramucci, founder and managing partner of Skybridge Capital. Smart to do this almost as a shoulder event to Fed Chair Jay Powell.
That was the plan. That was the plan, Andrew. And interestingly enough, under the Biden administration, no Fed officials accepted the invitation last year. But under the Trump administration, we've got 3 or 4 of them, including Fed Governor Waller, coming. So we're very excited about that. We've got a gathering of about 500 people, but lots of C-suite people here. So we're hoping to make this an annual event.
You just mentioned one of the names that may be a potential Fed chair. Before we get into the crypto side of things, do you have a take on the next Fed chair? We just had Scott Besson on. He said he's going to be conducting interviews post-Labor Day with a group that may be as many as 11 right now, but sounds like some of the guests that are at your event may be on that list.
Well, I think there might be 1 or 2, but I'm really, to me, I obviously outside of that decision-making authority, and listen, I mean, President Trump picked Jerome Powell 8 years ago. I think the chairman did generally a very good job. It's an imperfect process, of course. Not saying that mistakes were made, but I think he's done a generally good job, and I expect the president to pick another good Fed chair when the time comes.
Well, you're long Bitcoin. No wonder you love him, Matt.
Well, that's what I was going to say, Anthony. Interestingly, a dovish chair is good for your business. Is good for crypto, right?
Well, listen, I want the mama bear chair. I don't necessarily think a dovish chair is good, because if you get an overheating in inflation, you're going to disrupt all of the ways that we consume. We're going to disrupt the housing market, which you guys were just talking about. I would prefer mama bear. I think Bitcoin specifically is going to be fine in any scenario, but I like the mama bear Fed, so hopefully the president will pick the mama bear.
How are you thinking about Bitcoin right now? We're looking at the price tag right about $115,000. We've had conversations probably when Bitcoin was at $15,000. Right now, in your mind, what's the window? What's the base case, and how high can it go from here?
I mean, listen, there's been pain and euphoria in the Bitcoin markets over the last 5 years. I think what's happening now is lots of consolidation and institutional adoption. So if you went to a conference like this 3 years ago, it was mostly retail investors and CEOs working in the layer 1 blockchain space. Today, it's lots more institutional investors. So that's finally starting to happen. If you look at the numbers on something like the BlackRock ETF, the IBIT ETF, you can see now, Andrew, there's lots of institutions coming in. So what's interesting is that some of the whales have been selling. So I know I've seen your interviews with Michael Novogratz and the 80,000 Bitcoins that sold last month. And so there's a consolidation story happening. There's a change of ownership story happening. But I think we're going higher. Just because you just look at the math, there's just way more demand than issued supply of Bitcoin, or existing overall supply in the marketplace. So we still maintain our price target between 180 and 200,000 by year end, and I think that's a cautious price target. By the way, I think there are people that are way above us those levels, but I just think it's a function of buying and only 450 Bitcoins being made by the network per day.
How do you feel about buying Bitcoin directly these days versus folks buying ETFs versus folks buying, some of the products that Michael Saylor is selling, for example?
Well, listen, I mean, they're all linked to Bitcoin, IBIT being the purest link to Bitcoin. I think what Michael has done is absolutely extraordinary, as evidenced by all of the copycats that are out there. And again, not just copycats for Bitcoin, but for Ethereum, Solana, Avalanche, and others. And so it's different strokes for different folks. Michael, you're probably getting a little bit more of a kick to your Bitcoin exposure. IBIT, I think it's a pure play, and I would just point out that places like JP Morgan will actually lend on IBIT, and so it's a very secure asset that people trust. I own a lot of Bitcoin and hold it in storage, Andrew, for myself and for Skybridge. And so there's different, different ways to approach it. I think the institutions will likely go into the ETFs. And of course, there's a lot of institutions that quote unquote can't own Bitcoin, that they end up owning Michael stock or synthetics like that.
And where do you land right now in the stablecoin arena? We've had Mr. Allaire on recently from Circle. That's really the way people are playing that in the public market at this moment. But there's a whole bunch of new stablecoin companies coming into the public market. And I keep wondering sort of how that all shakes out longer term. That feels different to me than what's happening with either the Bitcoin as a currency or Ethereum or whatnot.
Well, I mean, and also the state of Wyoming is announcing this morning their own stable coin, so you can add that to the mix as well. Congratulations to the state. I just think that that's generally good. I share Secretary Besson's view of this, that's generally good for the U.S. dollar. It means, more treasuries, more short-term treasuries, demand for those securities. But I also think it's going to bring a wave of technological innovation. At our last conference in Bermuda, we did a drop of stable coins into people's phones where they could spend, I guess it was $100 at the different tourist shops on Front Street in Bermuda, and it worked beautifully. And I think you're going to get to the point where we're transacting using stable coins. It may bypass some of the credit card fees and some of the other ancillary third-party confirmation fees that we've charged historically in the marketplace. So I generally think it's very good. I think those companies will consolidate. And I think one of the discussions here at the Wyoming Blockchain Symposium is going to be about a central bank digital currency. And I stand with President Trump on that. I don't think we need that. I think it could be, from a libertarian perspective, too intrusive from a privacy matter. And I think the private companies are doing a great job in this area. And so I'd like to just stay in the private company realm as it relates to dollar-based stable coins.
The piece I can't figure out in this context on the stable coins is, if everybody's playing in this, how much margin is there really, right? And therefore, in the stable coin arena.
Well, remember, they're not allowed, because if you look at the last legislation, there's no yield on the stable coins, Andrew. So if you're converting dollars into a stable coin, there's going to be a spread there for those guys naturally. I don't think the competition is going to impact that, unless we switch up that yield mechanism.
Let me ask you a different question, and maybe it's a political question, but it's a business question. You obviously had your couple of minutes in the Trump.
I never talk politics, Andrew. That's, I'm not.
You never talk politics.
Not in politics anymore. But go ahead. I can take a political question.
He tweets it. He podcasts it. He does all of that. I'm just curious if you just weigh in on the sort of larger industrial policy question in terms of the way the country's moving. We're talking about Intel. We were talking about NVIDIA earlier and the AMD deal, and whether you look at all of this and you think of it as, a very positive, affirmative approach, the way the country should be dealing with these things, or you look at them as shakedowns for corporate leaders. Which one is it these days for you?
I'm developing such a good relationship with Joe Kernan. I almost don't want to answer the question, but I am going to answer the question.
We don't love everything. We don't love everything, but we certainly didn't vote for Kamala, or at least speaking for myself.
Okay, let him answer the question.
All right. Well, I'm gonna answer the question. I appreciate surgical tariffs where we need to protect our private companies against government-sponsored companies overseas that are dumping into our markets. So I'm all about that. I don't like the massive macro tariffs. I think they're long-term damaging. I think the companies have exhausted their ability to absorb the prices of those tariffs, and they get passed on to the consumer, Andrew. So
Anthony,
ultimately,
I gotta thank you.
It's going to disrupt
we're
the economy.
A longer conversation. Right. It's great to see you. Squawk on the Street begins
West.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with David Faber, Mike Santoli here at Post 9 of the New York Stock Exchange. Kramer has the morning off. Futures fairly steady as consumer retail earnings kick off this week with Home Depot and a decent diet of news on mega-cap tech. NVIDIA, Intel, Apple, Palo Alto. We'll get to it. Housing starts were good, but permits down for a fourth straight month. Our roadmap begins with Intel getting this $2 billion investment from SoftBank. The Trump administration reportedly also weighing a stake in the chipmaker. Commerce Secretary Lutnick's going to be with us in just a few moments to talk about that, trade, and a lot more.
Home Depot misses earnings estimates. That's the second straight quarter it's done that. It is sticking with its outlook. We'll keep an eye on that stock. And NVIDIA reportedly working on a new AI chip for the Chinese market that outperforms the H20. This coming as OpenAI CEO Sam Altman warns about China's next-generation AI threat.
Let's begin with these stories about the Intel and these stakes. There's the SoftBank side, Mike, and the government side. And, of course, the Journal op-ed page talking about the nationalization of Intel, as they put it.
Right, with these reports in particular that perhaps the stake from the government in Intel is being contemplated as essentially converting the CHIPS Act grants that were earmarked for Intel into it, as opposed to a new infusion of capital. I know the details are not yet set. $2 billion from SoftBank. I mean, I don't know if that's a good thing that the stock is up 6% on a $2 billion investment. It's like 2% of the company. Intel spends $25 billion annually already on CapEx. So in other words, what moves the needle here, changes the story in terms of manufacturing capacity, having a market for whatever it does build, or as has been reported, SoftBank much more interested in kind of the chip design side of Intel, obviously with the big holding in ARM. So interesting that it's in play along multiple fronts here. And the stock is, as you see on that chart, kind of kicking around these levels for quite a while.
Yeah, I mean, there does seem to be some, and it's funny, I picked this up, and, you know, there's a lot of dinners that occur out in Long Island now, because everybody's out there, that there seems to be at least a hope that the turnaround of Intel is a possibility. And there may even be some investors who are willing to actually climb on board for that. You can see the month to date. But to your point, Mike, it's a long way to go, and certainly $2 billion is not going to change the story at all in terms of, it is new equity, by the way, just making the point. It's not like SoftBank's buying on the market. They are buying new equity, so 2%, you know, dilutive as well, potentially, but to a small amount.
What was it, at 24 or 23?
Yes, 23, I think, right? A little lower than where the stock is, but in that range. But to your point, the bigger question, and one obviously we'll spend some time with Commerce Secretary Lutnick on, is what exactly are the plans the U.S. has for the money that has been promised Intel, not yet delivered to them under the CHIPS Act, and what is going to happen in terms of whether that becomes equity. And then, you know, you got any number of people who weigh in on the basic theme that, listen, and Stacy Rasgon, a frequent guest here, the lead semiconductor analyst over at Bernstein, talking about, you know, the goal is to help Intel build substantial U.S. capacity. $10.9 billion from the CHIPS Act is not really enough. And he still wonders how much force the administration can or needs to bring to actually deliver products that can meet spec and on time and find customers.
Right.
Because that's the part. Like, and you know, the Treasury Secretary talks about our dependence on Taiwan Semi, and it's true, and it is potentially a national security issue, hence the CHIPS Act. But the question, Carl, becomes, can you force them, being customers, to actually come to Intel to buy the chips from them?
Yeah, Stacy also says companies recognized about $2 billion in CHIPS Act grants to date, and you could argue that given the delays, they probably were going to get the rest anyway. Let's talk more about the possibility of this government stake with the Commerce Secretary, Howard Lutnick, who joins us, I believe, this morning from Washington. Morning, Mr. Secretary. Good to see you.
Good morning. Nice to see you guys.
Can you help us understand sort of the calculus behind this move?
Sure. So for national security, we need to make our own chips here. We cannot rely on Taiwan, which is 9,500 miles away from us and only 80 miles from China. So you can't have 99% of leading edge chips made in Taiwan. We want to make them here. So that's a key part of our initiative. That's part of the deal we did with Japan. That's part of the deal we did with Korea, to have the infrastructure and economic capacity to build those chips in America And of course, one of those pieces is it would be lovely to have Intel be capable of making a U.S. node or a U.S. transistor, driving that in America. That would be lovely. That's not necessary, but as I said, that would be a really good thing to have, would be American participant in the semiconductor space.
So, Mr. Secretary, how do you view then the CHIPS Act funds that have yet to be committed but have been promised, and the idea that that might be then converted to an equity stake? Is that how we should view it, that ultimately that's what you're talking to Intel about right now?
Yes. I mean, the president figures out that America should get the benefit of the bargain. I mean, that is exactly Donald Trump's perspective, which is, why are we giving a company worth $100 billion this kind of money? What is in it for the American taxpayer? And the answer Donald Trump has is, we should get an equity stake for our money. So we'll deliver the money, which was already committed under the Biden administration. We'll get equity in return for it, get a good return for the American taxpayer, instead of just giving grants away. Donald Trump views we should get benefits for the economics that we put out.
Yeah, I love your response then to, I mentioned this analyst, Stacy Raskin, because he's written on it. He's one of the top analysts who follows this company for years. He says that we note the company's recognized $2.2 billion in CHIPS Act grants to date, and suppose one could argue that given the delays, they probably aren't going to get all the rest anyway, that being another $8+ billion. Nevertheless, trading 10% of the company for what it now seems worse than the prior agreement, in which basically they were getting the money for free. Do you not put Intel in a better position?
Of course it's worse.
Do you not put them in a better position to compete? Is that, should that be a concern, since you want them to be the competitor you described earlier in terms of a U.S. champion?
Look, the CHIPS Act was just a giveaway to rich companies. I mean, why in the world is the United States of America taking money and giving it to companies like TSMC, which is worth $1 trillion? I mean, why would we give them money to come to America? Donald Trump understands how to do this. What he does is he says, if you don't build in America, you're going to pay a 100% tariff, and then watch them come flying in. So the idea is, let's change with respect to Intel. We want Intel to be successful in America. Okay? We'd like an American transistor built in America, right? We'd like an American to be doing that. So Donald Trump says, hey, look, let's turn the money that Biden was going to just give away and turn that to equity for the American people. Yes, it is a worse deal than giving it away. But when you put this money in the hands of Donald Trump, you're going to get a better deal for the American taxpayer. That's what Donald Trump is, and it's obviously the right move to make.
Well, all right, you may be obvious to you. Do you get governance here? By the way, once you're in for 10%, do you have to go in for even more?
No. Come on.
No, what?
Come on, stop that stuff. It's not governance, right? We're just converting what was a grant under Biden into equity for the Trump administration.
I get that.
I get
that. I just asked if you're going to get governance. You don't own 10% of the company. You don't. Why wouldn't you want
non-voting,
Okay.
No, stop. Don't overdo it.
Well, I'm not overdoing it, but you got a golden share on U.S. Steel, so it's not like impossible to imagine that you do want some level of governance here if you're going to put 10% of taxpayers' money into, or 10% of the company's taxpayers' money.
Let's discuss the golden share on U.S. Steel. What happened is the Japanese Nippon Steel made a list of 12 promises. How do you make sure after they buy the company, they live up to their exact 12 promises? You say, look, we'll have a golden share. And what was the golden share? 12 promises. Live up to what you said, you can buy the company. You don't live up to what you said, the government's going to make you live up to what you've said. This is Donald Trump's way of thinking, which is make people do what they say, make them live up to what they say, and make sure we get the benefit of the bargain for the American taxpayer.
I'm sure you've read the journal Pushback already, the op-ed page. Once the government acquires a stake in Intel, politicians will have an incentive to keep pouring on subsidies so they wouldn't have to admit a mistake. This is corporate statism, and it rarely does end well.
Well, we were giving away the money. I mean, imagine this. Look. The Biden administration literally was giving Intel for free and giving TSMC money for free. And all these companies just giving them money for free. And Donald Trump turns that into saying, hey, We want equity for the money. If we're going to give you the money, we want a piece of the action for the American taxpayer. How could that not be smarter, better, and more important for the American taxpayer than just free money for $100 billion, trillion-dollar companies? Makes no sense. Donald Trump is fixing what Biden got completely, totally, and utterly wrong.
As somebody who's been around the capital markets for years, as you have, then I do wonder, how do you view this idea of state capitalism that's being introduced? I mean, you mentioned the golden share in U.S. Steel, the 10% potential stake in Intel, the 15% of the revenues that NVIDIA gets from selling chips in China, the $400 million in that rare earths company. I'm curious how you think about it, Howard, given, of course, your long career at the center of the capital markets for all those years. I think of you as a capitalist, but this doesn't quite sound like that.
All right, well, let's talk about the Japan deal. So Japan has offered to buy down their tariffs from 25% to 15%. They offered us $550 billion investment fund. And then Korea came in on top of it, $350 billion. So what are we going to do with those $900 billion? We are going to fix the infrastructure that China has competed away. What China does, and it's really very, very thoughtful, and it's an attack. They sell product here for half of what it costs. So they put the capitalists out of business, put us out of business in rare earth magnets. We invented rare earth magnets. Why don't we make them anymore? Because they sell them for half the value, and we don't have them, and then they hold it over you, right? Like a giant axe. And we've got to fix ourselves. We've got to make semiconductors. We've got to build pipelines. We've got to build nuclear. We've got to have the infrastructure to help our national security and our economic security. And that's what Donald Trump is bringing to America. When he leaves office, he is going to leave America safe, secure, and economically powerful. And if you don't do that, and you don't handle the Chinese risk and the risk that these people are attacking us, and basically, we don't make generic pharmaceuticals. Imagine that. If we had conflict with China, what are we going to do? Ask them to send us antibiotics? We've got to build those things in America, and that's what Donald Trump is doing. He's fixing what other administrations
Is that a new form of capitalism then? I mean, is that kind of do you describe it that way then? This idea that the U.S. is going to own specific stakes in particularly companies that have particular national security concern or others? That's kind of a new way of approaching things, isn't it?
Oh, it's a completely new way of approaching it, but remember, it's not our money. The Japanese have offered $550 billion towards our
Well, you're talking about those funds, right? I'm talking about the equity investments, but yeah. I mean, you and I have gone back around about this too. You've said Trump, the president is going to be able to decide exactly what he wants to do with all that money, the $550 billion from Japan. They've said it's probably mostly loan guarantees for companies that are already operating here that are Japanese companies. I mean, do you feel like you're on the same?
No. We're on the same page. We talk to them. Look, every night and every morning we're finishing the documents, but we are on the same page. What's going to happen is the investments in America are for the benefit of the economic and national security of the United States of America, driven by Donald Trump, the only person who could have come up with these kind of ideas to make sure we protect America is Donald Trump. He understands business. We made the deal with Japan. We made the deal with Korea. It is their money that's going to create these investments so that we can build the pipelines, we can build the nuclear, we can build semiconductors, we can build pharmaceuticals in America to protect America. This is Donald Trump's strategy, and it is amazing, and it is the most fun to work for him because we are doing things that nobody's ever thought of doing to protect America.
You mentioned you're working on the documents. When do you think the market can get its hands on written documentation on the deals with Japan, UK, Vietnam, Korea? Is that how long ago? How far away is that?
Well, these are kind of weeks away for the Japan and Korea model, but the other models are set. I mean, you already have Vietnam has agreed to open its market. These countries have agreed to open their market. They bring down their tariffs. It's not that you're not going to find a big, long, 250-page trading agreement. It's very simple. Bring down your tariffs to zero. open the market to American exporters so that we can finally sell our agriculture overseas, finally sell our seafood overseas, finally sell our beef overseas. I mean, our producers have Stockholm Syndrome. We've been so beaten for decades that we don't even know what it's like to sell internationally. Finally, Donald Trump is smashing open these markets. The European market won't buy our cars. Korea won't buy our cars. Japan won't buy our cars. But they sure as heck sell us cars. That is changing under Donald Trump. And that is what's so much fun about these trade deals. He's opening their market.
Exactly.
For our ability to export. And he's
Couldn't said it any better, my friend.
They are going to pay us to sell to us, the great American consumer.
And I know we're going to talk about the $550 billion in the future as well. I'm certainly looking forward to seeing some of the language around it. Let me come back to the U.S. and sort of the whole idea again of enhancing our competition and U.S. champions. I'm curious, Mr. Secretary, how you view the recent move by Union Pacific to acquire Norfolk Southern, the idea of creating a nationwide rail. They put it under the guise of, hey, this is going to be a national champion. This is beneficial for the industrial policy of the U.S. How do you view that rail consolidation and whether we should see it and whether we should see even more of it?
Well, we all know that the issue is there was Western railroads and there was Eastern railroads, and they had this interchange in the middle of the country that tended to take 2 or 3 days to change the rail from one company to another company's rail system, and that should be made more efficient. Whether that should be through a merger or in any other way, I'll leave that to the regulators and the overseers. That's the proper way to do that for that kind of acquisition. But the concept of making it more efficient to get across the country is obviously something that we applaud. How to get there, I don't know. That's not our issue. But the fact is, we need to have a more efficient rail system for cross-continental rail.
Yeah, I mean, because, you know, the STB requires a proven economic benefit. So you're going to stay out of it, you think? I mean, the Trump administration typically gets involved, it would seem, in all these kinds of issues, and there seemed to be an implicit sense that they were supportive of this consolidation. Is that not the case?
Well, I think from my perspective, I'm going to let the experts at the STB...
Who is this guy?
Weigh in themselves. That's not my place to weigh in. But we all understand that we need to have an efficient...
We are at my first support.
Obviously something that we all applaud.
All right, let me come back to something quickly that
On the spot.
I think at least the Treasury Secretary indicated you should get or should have something to say about, and that's this story that NVIDIA is looking to sell a new chip. Again, less powered obviously than what they sell here, but not the H20, a different type of chip to the Chinese.
Oh, shut up.
He said on Squawk Box earlier that as the Treasury Secretary that that be through commerce. So I'm curious what your view is on this idea they're working on this new AI chip for China.
Well, look, NVIDIA is a $4 trillion company for a reason. Because Jensen has always tried to sell more things. I mean, the guy is fantastic. So the fact that he comes up and says, I have an H20 chip, I'm trying to sell those, but those are like 4 generations back. I'd like to have a newer one that I can sell to China. Of course he would like to sell a new chip to China. And, you know, I'm sure he's pitching the president all the time. I've listened to him pitch the president. And the president listens to our great technology companies, and he'll decide how he wants to play. But the fact that Jensen is pitching a new chip shouldn't surprise anybody. Of course he is.
He's good at it too, isn't he?
Oh, baby, he is great. You can't be worth $4 trillion and not be amazing.
Mr. Secretary, there's a lot we didn't get to, tariff revenue and more, but we'll save it for next time. Thanks for coming on. Good to see you.
Great to see you.
Levin. Still to come this morning, we'll get to some movers, including Depot, kicking off a busy earnings season for consumer retail. We'll get to Palo Alto, Medtronic, Starbucks, and more when we return.
Starbucks and more. Oh, yeah. Oh, yeah. Dun, 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 dun. Ooh. Okay. Good morning, retail traders. How are we today? Yesterday, I don't know if I can beat, so I'm going to let the stocks trade their way. I'm going to passionately wait for a pattern to show up. So let's have a good day and suck it up. I'm quite impressed with your music and your writing skills, James.
Make.com.
Pretty busy morning for Palo Alto Networks with a beat on the bottom line. Margins, revenue up 15. B of A upgrades says that
Hickory dickory dock, the mouse ran up the clock.
In recent days, we will talk to Nikesh Arora about the quarter and software in general coming up in the next hour on this hour on Squawk on the Street. Stay with us.
That's the SPY results for today. SPY. I would rather trade the SPY. We had a sneaky snake on something today. I forgot what I said. What time is it? Okay, I've got 6 minutes. My shoes are off, my socks are off, my slippers are on. The water is warm. I go make my tea. So, did I have my computer on all that time? Oh yeah, I did. I made a mistake. 12 tips for checking in your luggage. I get real stupid when I'm in airports. I have no clue what I'm doing. Good morning, mannequin. Where you been? Da 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 da. Late last night when we were on bed. Oh, Mother Hubbard lit a lantern in the shed, and when the house kicked over, she winked her eye and said it'd be a hot time in the old town tonight. Well, we do have a resistance today of 643.34. I will put the price line straight across. I'm using the bodies of the candles. $643.31. Yeah. It's such a pretty world today. Yeah, I think these people on CNBC, they've been so wrong that they're just trying to look for excuses.
Kicking off a big week of retail earnings numbers, the company did maintain its full-year outlook, but quarterly was.
You know what I'm saying? They keep hearing the good number, but we had 1 week of bad employment numbers. Well, what do you frickin' expect? And they were all up in arms, boy. Well, we're going to go into a deep recession. I don't think they have a clue on how to run a business. When I was manager, did I hire somebody every month? Heck, I hired maybe, only if somebody quit. That's why we give 2 weeks notice. I've been self-employed for 35 years. I wouldn't know what it would be like to work in a company and have somebody over me. Jim, you were 1 minute late today, and I want you to show up 10 minutes before the clock in. What was your excuse? I'm gonna have to write you up. Jim, is it true that you pinched Samantha on the butt yesterday? No, I didn't do that. Is it true that Samantha brought you in the ladies' restroom and made out with you for an hour? Oh, no. No, that didn't happen. I can't tell you how many times I've been pinched on the butt. And I got a little bitty butt. Good morning, room. Good morning, Angel. Good morning, Randy. Good morning, Edge. Good morning, Sheba. Good morning, Jesse. Good morning, Jim. All around trader. That's what I assume. Your name is Jim. Link, magnificent. Uh-oh, somebody left or somebody come on. Embardo, Mr. Grinch, M, Ricky, and Subway, and Studio. I'm going to be patient at open. Yesterday was an excellent day. So I'm going to be patient for a pullback. Usually when we have days like yesterday, it was flat, but it was so easy to trade. Okay, let me think. We got AMD. Oh, look at the knife on AMD. Oh, AMD NVIDIA. Wonder if this China news that the liberals are fussing about on CNBC is going to bring some of these chips down so they could buy them more. That's what I'm thinking is going on here. They're too high. We can't afford them at these prices. These retail traders suck. Watch AMD at open. This is one I scalped yesterday. Oh, the bell's already on. Heck, we're open.
And reassurance that you're going to get some kind of reacceleration in the real economy as opposed to just this.
Shut up. I don't want to hear your mouth. Okay, let's look at the SPY here. SPY's definitely at a head and shoulders support level right now. We could have a triple bottom and be a strong buy, so pay attention. SPY. We'll do it first. There it is. Okay, get on it. Come on, hurry up. I don't even have my platform up. Come on. I'm liking it right here. Big time. SPY. SPY, the 642 strikes at 112. 642 strikes at 112. 642 strikes at 112. I think we can get a good little bounce off these. We'll see. And if it doesn't hold, I'll get out. Triple bottom on a 24-hour period. And we've got AMD. Watch AMD and NVIDIA. Now, if this starts to dip on me, I'm going to get right out. We got AMD here. Can't believe I just got one platform up. I like using Tastyworks because I put up 3 or 4 platforms. God darn it. That's what you get for yakking off, not being prepared. AMD's hit the first resistance at 170.72. We break that, we'll move higher. AMD. We got 3 black crows with a hammer. These 2 don't look too sexy, but so we're at 120. Make it short and sweet. Oh God, look at that. SPX looks sexy too. Same kind of hammers. Let me look at that. Might trade them both here this morning. The 6450s. We're at 123. Learn to scalp these things first thing in the morning because they will pull back. We're in my little support channel from yesterday on /ES. $64.50s was the ones I was trading yesterday, and it just hit 420. There's 530 right there. 137. Let's go. Hee, profit, get out, 137. Thank you very much. That's what you look for. And now I'm done for the day. And 420 on the 6450s and they're at 520. A plus. A plus. What did Jim, why did you take that SPY trade? Well, it goes like this. I was sitting here and all of a sudden I saw Ethel. She's over in the vegetable aisle. And I said, Ethel, don't look. And she said, why? I said, you're exposing your triple bottom, baby. I said, what? All of a sudden, she crossed into the vegetable aisle and went to the meat market, and she was all exposed. And it was a triple bottom play in a 24-hour period. And I said, Ethel, put on them pantyhose. She jumped in the trade, and before I knew it, boom, she was nude. Then she started running out in the parking lot. So you got like a triple bottom right here. And when you're looking at a 24-hour period and you're saying, okay, we got a double bottom here at open, and that's where that orb began. These are at 590, the SPXs. It's time to make a business decision. Right to resistance. Get out. Now that'll we move on up and hit the double top. I'm out. 620. I don't know how you do it, but you did it, Jim. Randy, what do you think about that? I want to be known as the best SPX and SPY trader in the world. Double top. We just hit the triple bottom right here. Look at that. Look how beautiful that is. We opened up, knifed. That's just plumb beautiful. Ooh, ouch. I'll accept the honor. God darn it, $8. And the SPY. Look at the SPY. SPY's at 180. Thank you, Randy. Are you scared? I was on it. Does that mean you weren't scared? Ladies and gentlemen, I think I'm breaking Randy from being scared. Studio, did you get in it and out of it? I was really excited when I called it out. Said I was going to wait for the pattern. Triple bottom. Meta's pulled back to support. Okay, we're back down to support here. SPX. The 5450s. Again. What do you got, Jim? We got a Head and Shoulders. $54.50s at 5,450. There's 410. Back to 420. 3 black crows. Okay. They're putting fear in the market, so we got to be careful, that's for sure. Fat cats are pissed. I don't know if we're going to have a day like yesterday. Yesterday was excellent. I wish every day was like yesterday. There were so many negative people out there yesterday, and I'm going, why? Because, I mean, they were paying good. They were staying within a channel that just hitting resistance and selling off fast, get back in them, hit resistance, sell off fast, get back in it, hit resistance, sell off fast, get back in it. To where I made 13 trades, and that's double what I usually trade. So when I have a day like that, I don't want to be as aggressive, because I usually get caught. I mean, right now I'm done. I can be done. For the day. I probably will. I'll probably go check the mailbox, post office box. Got a bill that I got to pay. Okay, we're at 490. It's not being too kind right now. I should have jumped out of it at 5. 490. It's taking a little bit too long here. Need to do something. Just get it on. There's 480. I've got an average of 435. We're back to the 21. If we break the 21, I can see us back up here to the 63 or the 9 or the 50. Not the 20, not the 2, well, maybe the 200 too, because maybe. We're between the 9. If we could squeeze between the 9 and the 21 and keep that body in that, above that 9. Does anybody listen to me when I talk this shit? Yes? Because if that body stays above the 9, that keeps it bullish, and we're squeezing. So if we break, we could have a nice little bounce up here. There's 530. Now I'm up almost $100 a contract, so you got 6 of them, you're up $600. 550 takes profit. I'm not saying we can go higher, we probably can, but get out in the heat. $6.10, $6.30 right now, head and shoulders. Yeah. Out at 6.30. Yeah. That's 3 trades in a row now. Four, 3. Yeah, well that's nice. And we ain't even been here, what? $26 minutes. So you got a head and shoulders. You see all these level bodies right here on the 1 minute? See how that's called tweezer bottoms. You got the wick, body, body, wick, body, body. And you see how the wicks are running a little trend line up to the upside. They're not equal. The buyers are taking control. So that kind of tells you, just like down here, where all the bodies were even, almost even down here. And that's called an inverted hammer, doji. Spinning top with a hammer. So kind of undecisiveness here, but yet it still held support. But this here is really beautiful right here. You have 3 black crows with an inverted hammer, spinning top, spinning top, spinning top, which is a little bearish, but it kept. And then you had the tweezer bottoms. Watch your tongue, Jim. You said the S word today. I used to, when I started trading, I used to really get on to people for cussing. Now I'm doing it. Yeah. Thank you, Embardo. Just let it kind of do its thing right now. Yep. We do have a 1, 2, 3 coming down. So this is what I recognize right now. 1, 2, 3. So if we don't hold the 21, so you want to go to the body of the candle. I could do this 2 different ways. Support right there. And set an alert right above the top of these candles right here on the 1 minute. At mark at below. And that'll give you enough time to even jump in the trade if it doesn't pull back. And then you got a double bottom right here. If it comes down and doesn't hold that, and then you got that trend line from yesterday, and we'll look at that trend line and see where that takes us. But you want to go ahead and set a price line across both of them lines. Be surprised. I'm getting to where I don't miss. So you got these 2 support levels. We run into the 200 also. That was another exit idea. Why to get out. But shoot. I'm going to set an alert at resistance, would be a double top. I set it at the mark at or above. So if we break that, I'll be ready to set up a new trading strategy. Apple is up. AMD and Nvidia are sideways. VKTX phase 2 in the weight loss drug. I don't like trading them when they're in phases. I like to trade them when they approve. Lilly had a good bounce back from that low. I was looking at it this morning. We got a new high on it. It's above 706.60. Oral weight loss drug disappoints. It's not what the guy said. So we hit resistance. This is my orb. Oh, there we go. Damn, 820. I missed that. It doesn't really matter. I kind of... Man, that's a good one right there. $300 contract off the 21. So you see how we held that? Oh my gosh. Look at the SPY. $2.12. That'd been $2,000. Fed rate cut won't trigger stock market boom. That's bullcrap. That's coming from a Sachs associate. That's why this market's running, because they think we're going to get the rate cut. Dang, these things are 1150. Here, read this headline. Exchange traded funds lower. Equity futures mixed pre-bell Tuesday amid anticipation of rate cut, tariff impact uncertainty. They're so wrong. These headlines are so wrong. Look at that. That's what a triple dot bottom, 1, 2, 3. I mean, this is beautiful here. Rising wedge breakout. So you want to take your trend line, go from the body of that candle to the body of that one, and that's a triple top. So this thing will pull back if it wants to stay bullish and bounce off that. I don't understand why negative headlines. I wish I'd held them. Gosh. 435. That'd been 100%, 120, 130% trade on the SPX. Studio, tell me something. Don't tell me you missed it. Oh, I missed your comment? Yeah, I probably did. I have to go back and find it. You're so well hidden. All out when bam, thank you, Bobo. A+. We are now at resistance on the /ES. We are now at resistance at opening market. I think we'll come back down and consolidate. There's so many negative headlines. I'm surprised they haven't started attacking us retail traders yet. And I am going to have lunch. I'm not hungry, but I am. I could have a banana, but I had one already. Oh, I left something out in the car. I'm gonna go out and get it. My favorite diet, prune juice. And I'll be right back. Yeah. Alrighty, I'm back. Government's insuring Intel for the CHIP Act. They want to bring it back. Intel. Okay, let's see if Tedalini's showing her titties today. Yeah, these guys, man, these headlines are just annoying me big time. Okay, earnings were 80% positive. So let's read this. Investors' focus turns to incoming retail earnings, driving modest pre-market action. Modest? Where in the hell are you from? Modest. What do you mean modest? Lily's up $7 since I mentioned it. And there's my T. So we got Tesla, which had that falling wedge, inverse head and shoulders that I called out over the weekend. Oh my. Jim, will you show us the chart that showed the falling wedge and head and shoulders, please? Yeah, when I get back from getting my tea. Because I don't want to overcook it. You know what I'm saying? Now it's a rising wedge. This was the fallen wedge right here. And I'll draw it in when I get back. So this is on a 15-minute time frame, and what I understand, or what I assume, is that the farther out the time frame, the more you're able to spot a breakout and maybe swing trade a stock. So yesterday, this weekend, I called out this pullback, and you got a 1, 2, 3. And then you got an inverse head and shoulders with a 1, 2, 3 right here. So that's the sweet spot in a fallen wedge. That's inverse head and shoulders with a fallen wedge. And we filled a gap right here. This is a descending flag right here. Well, it's almost a fallen wedge. Joby looks cheap. Joby had that good news. 4 days ago, Henry Hendren, Joby Aviation stock soars, then dives after historic Evolt flight. Joby. It had financial losses on its last earnings, likely influenced by 125% share price rise, so it was overbought. I want one of these real bad. I want one. I really do. Will you buy me one? Tesla double top. So we pulled back to the top of the orb here on SPX the second time. It's getting too confusing, so I had to clean it up. So we got a support right here, pivot point. So I'm thinking somewhere in here. There we go. Prepare ye in the name of the Lord. Spies at 162. We got the 6450s at 620. Now, it needs to hold here to be solid. Unless we have, if this doesn't hold, we have a lot. Oh, get ready. Just got a gift. And I forgot why I put that on there, but I'm going to use it. You ready? Ready, 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 ready. The 6450s at 550 for my first entry. We could drop one more drop, but I want to see it hold. $6.40, baby. There you go. $100 a contract. 90. There it is. Oh yeah. Out at $6.50. SPY's at 142. There's 156 right there. The 642 strikes. 157. $6.50 again. There's your second chance. Now this thing could break out, but we're at the resistance channel. $7. Take it. I'm all out. Someone was bashing me about yesterday about not holding one. There's many trades yesterday where I held them, like 1 or 2. I said, you ain't been watching me all day, have you? Damn. Ringa likes that song. Mafia Ball's listening. Good morning, Martin Brax on YouTubers. I'm getting ready to have me some lunch. I think it's going to be small today. I gotta lose a couple pounds before I go to Punta Cana. You know, I'm kind of was questioning the resort that I wanted to go to, but sometimes some of the best resorts I've been to are not been a total 5-star. Now this is a 5-star, but they're rating it 4. A lot of people that go there. But I had my best time in Jamaica in a 3-star. But I was on the Grill, and it's one of the best beaches in the world. And so is Pavaro. Punta Cana is one of the best beaches in the world. And I'm going to one of the best beaches in the world with the white sand. And so I'm hoping. The food sucked at the one I went to in Jamaica, but that didn't bother me because I've never been to a resort before. So I thought it was good. Here we come again. You ready? You ready? The 6450s. You ready? Now I'm assuming, I don't know why, I can't remember why I put this on here. I need to go out a little bit. I know why, because of all that support. It's $4.80. Should have got it cheaper. I know why now. We're at 490. There's 480. We still could hit the 6441, and I'll add 1. I just got 1 at 480. That's on the 5-minute. It's 460 right there, 450. Okay, we just hit the alert. Didn't trigger yet. I'm going to get a cheaper price if I can. I ain't going to buy another one at 470. Just there we go, 440. Triggered. Now I can probably add 1 here. What the heck? I'd like to know how that does that. I'm going to grab another one right here. There it is, 430. Good job, Randy. Randy's not scared. Might have to get out of this if it don't hold. Damn. No. I'm gonna grab a couple more. 360. If I can get it. 370. Not gonna give it to me. Now where it could be double bottom on the orb. Good job, Randy. Yeah, there it is. $3.30. So I got 330. Should have grabbed a couple more. Double, oh damn. No, that's a sell-off. Well, think I'll have chicken soup today. I'm a little scared, Randy. Should have got 4 of them at 3:30, but I don't want to put a lot of money in this. Your fear is rubbing off on me, man. Putin not going to meet Zelensky? Oh, man. Well, it seems like I'm going to have to take a loss. Ooh. This ain't good. We should have had the rebound already off this here support. This could just continue now if this don't do something fast. I could get 4 and get to the price where I could buy 4 of them and really bring his price down. Lewinsky says he's ready to meet Putin. That's 12 hours ago. Spies dropped also. We got 3 black crows on the spy. At a 5-minute. Sims SPX. I'm gonna put my soup in and be right back. If this drops any more, I'm gonna get out, take the loss. About these crows. Go, 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 go. Apple pulled back to the 200. SPY broke the 9 on the 1 minute. Back above the orb. We got to break 64, 36, 40. I'm cooking lunch. Okay, this is it. Got to hold. Double bottom, no more than that. Snake breakout pullback, double bottom, higher low. Let's keep it. It's very tight. Add 4. Ooh, that's not good. That's not good. We got a lot. We can go down a lot more now. Around 6,400, another 23 bucks. So I got 4. So if I get 8, that gives me ooh, 110. I'm gonna go for it. I'm going for it. 120. Woo! Jeez. Let's go, baby. So I've got 12, I got 16 at 188. $16 of them. I'm in trouble. Break out. Make me rich. I'm scared, Randy. That's what I'm having today. Chicken barley soup with 2 cheese chips. I mean, I'm loaded on these things. You got 188, 189 average. And that was a small count, I'd probably be out of them already. Back to 120. I don't want to stop out, but I have to. This doesn't hold. This price right here. Man, I love them cheese chips. Especially with this soup. Just perfect amount of salt. Come on. I don't want this to sink. The bears are here. Come on, baby. Let's go. So I can get out here at 150. It'll be about 40 bucks a contract in the hole. Hear the wind outside. Haven't heard that in a while. No rain yet. We're at 160. I'm exhausted. Don't look good. Well, well, well. I hate being stuck. This drags on me all day long if we don't... I mean, this don't look good at all. Straight knife. Just straight down. Volume seeped up. Everybody's in shock. Battery gets stopped out. Oh. I'm not out with a small loss. Mine's a little bit bigger. I'm not out yet. Got a 1, 2, 3 at the bottom. Do. Mister's down 5%. AMD's down 7. Oracle down 9. Ooh, Netflix is down. Oh, that ain't percent. That's... Let me start over again. Mister's down 5%. Oracle's down 3.6. Netflix is down 3.27. Lulu I called out yesterday. Ah, damn, Lulu. Did I unplug? I don't think I unplugged my waffle maker. I'll be right back. Back to 135. We got snake breakout pullback, but then that kind of broke my triple bottom. That could be an inverse head and shoulders. Tesla dropped. Also, everything's sold off. Slash ES is at the 50. Same kind of pattern. It's been carried out. Very good. We're at resistance again. I thought about adding the 115 right there, and that would have really got me even. But I'd had to add 16 of them. That's putting a lot of money in a trade. We got to break 64.32.15. That's my final bottom line. That's a double bottom. I think that's what the market makers are looking at. Let's break it. After this trade, I'm going to go take a ride. I kind of broke it, but not sold yet. Mm. It's trying. Okay, time to move on here while I'm watching it. I don't think it's going to end too good if we don't hold right here. This could get real nasty. I gotta go. Dang gum. Yeah, definitely the Bears are in charge. Wonder what would make him turn this thing around. Meta reversed a little bit. George. Oh, God. George. Yep, there it goes. Just a weak day today. It sucks the way it's moving. The volume's just so slow right now. It's hardly moving. Which is not good. They can drop on down to about 20 cents. So we had snake breakout pullback. Intel is today's winner. Pawn. Trying the 64 what? I was looking at them just now myself. We got the higher low here, 3 black crows, but man, I just don't like the volume. It's not moving these candles. I'll be right back. I'm still green, but not by much. Rob says 6410 is a big support. You got to break the 9 before I jump in it. I'll be right back. Well, I won't be right back. It'll take a few minutes.
That potentially scare off consumers or even pro projects.
I think from the planning perspective is where it's worrying right now. Where is this?
Got to break the 9, that blue line.
Cycle. I think that uncertainty.
Before I jump in and run it back up.
And for larger projects, and so I
Per
do
scalp.
think that's where we're at. I mean, it's a very unusual market when you think of a scary market in a lot of ways. I think when you think about the last time we saw inflation, it was to get growth going, and that's typically what you'd see in a macro environment. You'd see an economy overheating. Where we are right now, there's a lot of risks on the horizon. In particular, we could have inflation without growth. And so I think with that kind of potential outlook, you're going to have people not planning big projects because, like I said, I do think there is a lot of risk on the horizon. The consumer spending is still 70% of the economy. That's massive. As much as there's AI, as much as there's everything else, the consumer is still what matters the most. And so, no, I do think that, that's where we're seeing a little bit of pause on the consumer side, just with all of the uncertainties facing them.
All right, well, shares of Home Depot on the rise by more than 3%, also giving some lift to Lowe's today. That's next up and back. Big consumer focus this week. Thank you so much. That's Dr. Ryan Stever, Intech, and Caleb Silver, Editor-in-Chief, Investopedia. Thank you both. And thank you for joining us today on Trading 360. I'm Diane King Hall. Download the free Schwab Network app. It's available in the Apple App Store and tune in 24/7 on schwabnetwork.com. You've got Fast Market with Tom White and Kevin Hinks up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights. I'm Tom White. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network. Traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today. We'll discuss stocks which are in the red today, and then we'll have some option strategies. We're going to cover earnings names. We're going to kick it off with Lowe's, which has rebounded about 15% so far this month into their earnings tomorrow morning. And home builder Toll Brothers, which has bounced over 50% from those April lows into their quarterly report. And then, like Folio, we'll have consumer sentiment data in Target. The big box retailer stock has underperformed over the last couple of years into their earnings tomorrow morning ahead of the opening bell. Now let's take a look at those major indices, which are near session lows. The benchmark S&P 500 down nearly 0.4%. The Dow Industrial is fractionally in the green, led by gains at Home Depot, Walmart, Caterpillar, and some others. And the tech-heavy NASDAQ 100 leading to the downside, down nearly 1%. And the Russell 2000 small caps down just over 0.5%. Let me break down all this market action. Let's bring in my co-host. That's Kevin Higgs. Kevin, give me your take here. A little bit of weakness on a day where we don't really have any news out, as far as data goes and, earnings. There's only been a couple names, Palo Alto and Home Depot, which we're going to talk about. But, a little bit of weakness here today.
I think you can't really you can't really blame it on data. You can't blame it on earnings. They were all fairly solid. This just comes down to an S&P that, has run a long way and a little bit of fatigue ahead of, a week, a Friday, where, a petulant stock market may not get the answer it wants from Jerome Powell, Tom, on Friday. We're going to get Fed minutes tomorrow. We're going to get Michelle Bowman, Christopher Waller both speaking in the next today and tomorrow. We're going to get Jerome Powell on Friday. I don't know if Jerome Powell's going to give the market what it really wants, which is a clear guidance, despite, I think the last time I checked it was 85%, something like that for a September rate cut. But Jerome Powell's probably not going to give the market what it wants. If he does, that would be a bit of a surprise, even though that's, I think, what the market is building in, Tom. So I think this is just a little bit of fatigue. It's not big numbers. Like I said, not on earnings. Housing starts were actually a nice little surprise on the upside. So I think this is just a little bit of mid-August fatigue, Tom.
Michelle Bowman did give a Bloomberg interview this morning where she kind of affirmed rate cuts are due, this comes after her dissent at the July meeting also. But as you mentioned, 85% chance according to CME FedWatch tool that we're going to get a rate cut in September. But let's expand this conversation, bringing Kevin Green, senior markets contributor here on the network. KG, we've got Dow hitting fresh records today, but a little bit of weakness. It's almost like this rally that we've seen is getting a little bit tired here.
Yeah, it has been tired. There's a couple of different things that are happening right now in the market. One, it's definitely just the Mag 7 that's really dragging us down. I know that heat map kind of makes it look a little bit more dire here, but we still have about 68% of the stocks in the S&P 500 in the green. So let's call this a rotation day. We've seen these type of days before. Everything else rally to the upside here, and Mag 7's kind of selling off, unfortunately, and that's exactly what's happening. For the S&P 500, though, it's actually going to be very interesting. Usually around this time, and every once in a while we actually see this on the show pretty much in real time here, we see these double bottoming type of patterns happening on an intraday basis. So that 64.20 is going to be very key for the S&P 500. Let's see if we actually get a bounce up from here going into the close here. As you can see with the equal weight S&P 500, we're still actually in the green, and we've been in this consolidation since Wednesday of last week. Guys, this has been one of the more boring markets that I've seen here, and if you're trying to scalp on an intraday basis, it's been horrible. It's been a horrible session. So seeing some direction here, I think, gives us a little bit of confidence that we might be able to break out of this range, either to the upside or downside. I mean, Kev's right. We have the event list that's going to be coming up here. No one knows what Powell's going to say. So I think there's a lot that's kind of taking place right now. I wouldn't get too concerned about it, but the consolidation and this breakdown here kind of just signifies the fact that we do need a new narrative. And until we have NVIDIA earnings, which are going to be Wednesday of next week, I think we're going to be focusing on the data, focusing on the Fed, and let's see what Powell has to say on Friday, and let's see if the market's going to be okay with that. But I like to see that we're actually doing something and not just trading at a 15-point, 20-point range like we've done over the last couple of days.
Yeah, KG stated that this is kind of boring, getting frustrated here, Kevin. He wasn't on the trading floor in the 90s when summer days were boring. We didn't have a lot of the news flow that we do have now. But Kevin, when you look at the housing starts data, a little bit better on starts. Permits were a little bit underwhelming at this point. But, we're going to talk Toll Brothers here. Just this resurgence with the expectations that we're going to get 2 or 3 rate cuts this year. A lot of the home builders are starting to move higher. Maybe some of the data has bottomed out. I don't know if that's true at this point, but it's probably a better sign that we're starting to see those starts start to ramp up here.
I think that the housing sector is one of the key lags in this economy right now. And if you look at what Home Depot said, miss on earnings per share, miss on revenue, stock higher. Why? Well, it was the guidance, right? They kept full year. They said they think they're bottoming. They think bigger jobs that aren't getting canceled, they're just getting postponed. This is a sector of the U.S. economy screaming for lower interest rates. Housing is where it is. And now, we're going to talk about Toll Brothers, but you can't help but talk about Lennar and D.R. Horton and the stakes that Warren Buffett has taken in them. So I think there's a great narrative about housing, but it's all in the future. It's all like this whole sector of the economy is just dying for rates to be lower. And I think eventually the market's going to give them that. And that's when, watch out for housing. It might be a really fun second half of the year for that sector of the economy that has basically been dead in the water. The only life it's gotten is from, investors taking stakes and well-run companies outperforming expectations, but this is a sector that really needs lower rates, guys.
Yeah, Warren Buffett diving into some of those on his latest SEC filing as far as some of the home builders, propping them up a little bit. And they all trade with relatively muted valuations, but they're really cyclical too. So you got to take into consideration. KG, tied into that narrative about the housing
New low.
Home Depot earnings, the stock's up just over 3%. It was down a couple percent after the report because the headline top and bottom lines missed slightly, but they did give an indication that they're seeing improvement over the last 3 months on a month-over-month basis as far as revenue streamed and sales, right?
Yeah, look, they're kicking the can down the road. That's exactly what they've been doing over the last couple of quarters. Now, they are seeing a bright spot when it comes to the smaller items, but those smaller items obviously do not push margins. It's really those larger financed items, if you will, the furnaces that are out there and things of that nature that really kind of drives those sales. But the smaller items, yes, they are seeing a little bit of an uptick here, and then that's actually kind of backfilling maybe some of the weakness when it comes to the larger durable goods right now. Home Depot, technically, if you look at the actual volume structure and the flows on the options front, has been seeing a lot of bullish activity over the last couple of weeks, if not months or so, and you could actually see it in that chart. In an earnings announcement like this today where you miss on certain metrics, but you provide, let's say, an okay guide where the market's going to kind of discount maybe the current quarter here, you still have some buyers really stepping in. And I find that to be very interesting. You're looking at around that 420, 425 level as your resistance for this name. And I'm sorry, if you look at the home builders right now, people trade them just like commodities. You buy them when everybody hates them, and that's exactly what's actually happening. If you're looking at some of the proxies in the market that track the home building stocks, they're up actually pretty significantly, let's say, from the lows that we saw back in April here. So I think there's been a lot of front running in the anticipation of these rate cuts. Now I think Kev's right. You really need to see those rate cuts in order for them to kind of backfill that valuation when it comes to the earnings multiples moving forward here. And maybe some people are trying to play for that trade, and that might be a decent trade, who knows? And we don't know as well with these housing starts, is this also seasonal? You got August, September, you're trying to get these houses built before the winter seasons kind of come up here, and usually that's when we start seeing a seasonal drop. So good number here today. Home Depot is able to hold up right now. Lowe's, I think, is going to be a very interesting report because maybe Home Depot took a little bit of the shine out of the Lowe's report that's going to be coming out here, I believe, tomorrow.
I think optimism in this space because of the improving metrics over the last couple of months and to reaffirm guidance in this type of uncertain environment due to tariffs, due to inflationary pressures. Maybe that's giving investors the benefit of the doubt here with Home Depot moving higher. But Kev, you look at Palo Alto, beat on top and bottom lines, over 16% revenue growth for this company. I saw some price target hikes, nothing out of the realm of, normality as far as price target hikes, but stocks pulled back from those session highs and still having a good day, though.
Well, there's some pressure on the overall market, probably taking some of these names off their highs. But yeah, here's the numbers. They beat fourth quarter estimates. Remember, this is their fiscal fourth quarter. They raised guidance for fiscal 26. Revenue up 16% to $2.54 billion. Earnings per share 95 versus 88 expected. Solid numbers. Remember, this stock, this company, is trying to keep up with CrowdStrike. So they made some acquisitions, trying to adjust their model slightly. So it's good to see that they put up good solid numbers. It's kind of one of those get back in the game against CrowdStrike stories. So yeah, good solid numbers out of Palo Alto stock. Stock having a nice day here, Tom.
Yeah, trying to fill that gap on that down move.
PANW
Cyber
or WN
announcement for that company, but still up 4.5% today, having a good run here. Kevin, when you mentioned we're starting to see a pullback in some of these, the winners that have been driving the market. Mag 7 names, everything but Apple is negative on the day, and that's what I think what investors have to take a look at, because only 3 of the S&P 500 sectors are red today, but the 3 that are red are leading to the downside. But hey, at some point, Kevin, taking some chips off the table, maybe rotating a little bit, maybe not a bad idea.
Yeah, I would agree with you. You know, Apple leading the market when the S&P 500 is down is actually a correlation that we've been used to over the
SPY
last
new
couple
low.
of years, right? It turns out to be more of a
Double
risk
bottom on the
trade in market than a
QQQ.
risk on trade. So I find that to be interesting, and it's also lagging.
I'm going to go run to the post office.
Keep your eye out on that one, though. It has lost the 20-day moving average, and it looks like it's kind of.
It's going to be the end of the day trade for me, I think.
Moving average, which is around that $500 level. So that's also another key one to kind of watch. When we had the pullback early on in the year, before even the tariff news kind of hit, this was around DeepSeek. Microsoft was the first one to lose its way before the broader market. So I'm not saying that this is the signal that this is the top of the overall equity market, but something to kind of keep on your radar. You're taking a little bit of profits seasonally when you're looking at the VIX. Over the last 15 years, this is the week where you see volatility actually re-rating higher. We do have the VIX expiration tomorrow, so that's also something to be mindful of. And we have the economic data that's kind of taking place here, and yields are re-rating for the most part a little bit higher if you're kind of looking at the trend. So consolidation in this market, maybe a rotation day today. We're not probably seeing an overall net outflow in dollars. I think that's good. You're not seeing every sector to the downside. You're seeing the value plays really kind of outperforming right now. We're going to get some economic data. We'll get the commentary from the Fed, and then we'll continue to move forward here. But September is also a very volatile month, traditionally. And so I think the market might be bracing for that a little bit. And some of these companies are some decent catch-up trades. Look at Eli Lilly. I know that's not in the tech space, but look at Eli Lilly. It was completely left for dead a week ago, 2 weeks ago when I was out in Chicago, and now it's trading back at $700. You're at a really quick reversal. So you're seeing this bottom-feeding type of activity taking place. In days like today, you actually get a little bit excited and happy that you diversify your portfolio outside of just the 7 or 8 stocks that have really been controlling the S&P 500 over the last year.
Yeah, Eli Lilly getting a bump on that Viking Therapeutics. Came in a little bit underwhelming on their obesity drug, so Norvo and Lilly bouncing a little bit over the last couple of sessions here too. Kev, real quick here, I think you know, everybody should be aware of what Fed Chair Powell says. He's only going to, you know, speak for maybe 10 minutes or so, but this could be a game changer for the markets, right?
Yeah, it was August of 2022 where he gave the could cause some pain to the markets in about an 8-minute speech. Now, normally he goes a little further than that, but it's not going to be as, you know, it's not going to be an hour speech. So, yeah, you got to watch. He'll probably be very short and succinct in what he says. Let's see what it is. I mean, you know, he did take the market to the to the woodshed one time in 22. So I don't expect him to do anything like that. And remember, this is his final speech, probably, at Jackson Hole. So we'll see how that goes as well. But there's a lot riding on this because, although, is there a lot riding on this? Because he's not, you really want him to commit to a September rate cut so soon, a month in, or 3.5
64s. I just don't even want to trade right yet. I'm going to wait until I get back. I don't want to get stuck in the, but we did break it finally. We've got to break the 21 now. That's the major resistance.
Basically thinks if you read, you know, the common,
You could end up back up here at 6444.
sounding hawkish, and that's not great for the market. The market might be weakening ahead of that, is what you might be seeing here, guys.
One red day and we're weakening. Come on, guys.
The revision's low or came in below expectation. Starting to see those cracks start to show, and he's been talking about it. So we'll wait for that on Friday morning. All right, guys, let's take a quick break here. When we come back, we're going to take a look at Lowe's. The home improvement retailer stock is up about 4% this year. Having a nice little pop today on the back of those Home Depot results. Stick around. We're talking Lowe's when we come back.
Do. I'll be back. in an hour. Intel has a lot of volume, almost 200 million. Intel has a lot of volume.
Whether you're an experienced investor or
God.
just getting started, Charles Schwab offers a webcast that's right for you. Are you an active
I'll be
trader?
back.
Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Fast Market here on the Schwab Network. We're talking more earnings. Lowe's shares are up nearly 4% so far this year. It is a little overbought on a technical basis on this rally back that we've seen so far in August. Kevin, when you look at this name, you know it's the annoying little brother or sibling to Home Depot walking around, but they get majority of their revenue from the do-it-yourselfers. They're trying to dig into Home Depot's market share as far as the pros go, but a little bit overbought. Maybe the bar getting a little bit high going into this report, up 2% today.
Rallying a bit on the Home Depot numbers, as we would expect. They're going to move, together. But Tom, the story that you just talked about, the difference between do-it-yourself and professional, that's the growth plan for Lowe's, is to cut into Home Depot's professional market share. If they can do that, it's a game changer for them. They're a healthy company. They've got a solid balance sheet. They buy back stock. They have a healthy dividend. But this is a company, if they want to grow, if they want to get to the next level, has to compete better with the dominant Home Depot share in professional customers now.
Yeah, KG, this quarter they're expecting revenue to grow just under 2% to nearly $24 billion. That's a reversal from the 5.5% decrease that it reported in the same quarter last year. But their year-over-year sales growth numbers, KG, have remained negative over recent periods. Is this one of those, it almost equates to what we saw in Home Depot post their earnings, where the fact that, hey, the stock's up, that they reaffirmed guidance, so things are going to improve. It's almost like the market has already predicted a bottoming for these two stocks, especially Lowe's.
Yeah, that might be the case. Look, this is one of those situations, guys, in real time where it's, the trade example was definitely it's going to be a little bit bullish here, but when you start kind of thinking about some of their exposure, there is a little bit of risk that is out there. I'm right there with you. Could they affirm guidance, reaffirm guidance, or even raise guidance for that matter, and continue this uptrend? That could be the case. I think the broader market, when you're looking at the home builder sector itself, is seeing positive inflows on a passive basis, and that's just helping raise the tide of all of these companies here. I think that's been a tailwind for them. But they do have risk, and we have to be mindful of that. They have a lot more exposure when it comes to China risk. Around 20% of the goods that they sell is supplied from China. And the problem that you have, if you're looking at Home Depot's earnings, Home Depot said the smaller items, those for the do-it-yourselfers, are the ones that are actually selling for them, and that's really what's backing some of the weakness when it comes to the large durable goods. Well, guess what? Those smaller items that Lowe's gets, that 20% from China, is also those smaller items. So they actually do have some exposure when it comes to the tariff front. That Home Depot, which sources around 50% of its products, domestically here in the United States just does not have. So is it going to continue this trend of the upside here? Are these passive flows going to continue to help this stock out? Is the bar fairly low? That could be the case, but I also want to just acknowledge the fact that they have a little bit more risk to not only the consumer, but also when it comes to international exposure to China and supply chains than Home Depot does. And that might be the make or break when it comes to this report, Tom.
Yeah, the Home Depot CEO stating that they get about 50% of their product here from the U.S. That's going to help them as far as tariffs go. KG, the option market only pricing in about a plus or minus 2.8% move. And the shares, maybe we've lost some luster just due to Home Depot's earnings have already come out, but only a plus or minus $7.10 move either way. How do you want to look at this one from an example trade?
Yeah, so I'm actually looking at a diagonal call spread here, looking to buy the September 19th 255 call and looking to sell the August 22nd 265 call, doing this for a debit of $8. Once again, this is a little bit more of a longer term trade. If we do get a nice move to the upside and it hits that 265 level, let's say by tomorrow or by Friday or what have you, then you have the ability to readjust that short strike. You can take it off, you can roll that position, you can do a lot with it. You can take the whole trade off as well if the market's available. But this trade is trying to reduce maybe some of the cost of getting that longer call that's going to be out in September, just because the primary trend on a technical basis is still higher. Given the fact that, once again, I want to put an asterisk here, there is some perceived risk when it comes to lows. We know what the defined risk is for this trade. It's going to be $800. And you're trying to leverage a little bit of that IV premium, if you will, the IV, the elevated implied volatility in the near term to really try to offset that long call. So looking for a bullish trade here, and once again, it's risk defined. If we do see a reversal, the most you can lose on the trade is $800.
All right, yeah, let's break this one down. You went out 31 days to the September 19th monthly options, bought the at-the-money 255 strike calls, and then in the near-term August 22nd weekly options, which have higher implied volatility levels due to that event risk, sell the 265 strike call. So a 1 month wide, $10 wide bullish call diagonal, you're paying roughly $8 debit. It's probably trading closer to $7.20 right now, so the stock has pulled back a little bit. But the debit you pay is going to be your risk. So if you pay $7.20, it's going to be $720 per spread, $800 if you pay $8 on that. A little price discovery may be warranted on this one. Anything above maybe 257, 258 is going to be potential profitability on this one, Kevin. But this is like almost a constrained, longer duration type of call diagonal here, where even if you don't get the move initially, KG's got time in this one.
Yeah, he's got 31 days, and that is indicative of the 20% IV percentile, right? The lowest 1/5. It could go lower, but right now it's fairly low. So he added some Vega by going out 31 days. That gives him about, I think 20.5 Vega, despite his 27 Delta. So this is one that's collecting data. It's risk defined to the debit paid. And like I said, you get a little bump if you get any kind of a firming or rise in implied volatility. So long Vega, 31 days out, collecting theta, about $34 theoretical per day, and upward exposure looking towards a move towards the 265 strike, Tom.
Yeah, and KG, you're buying about a 27% implied volatility on aggregate in the September 255 calls, selling about a 49% in the near term August 22nd weekly, the 265 calls. You know, you look at this, KG, you know, you get the move you want, it goes to 265 at or near there, it starts to expand in price, or do you close it? Do you start rolling it? I mean, there's different ways that you can attack this one post earnings, but you definitely need to move to the upside.
Yeah, in this situation here, if you kind of look at the technical structure, 265 is actually a key area of resistance. So the trend, once again, is trying to recapture some of the losses that we've seen back in December or so. So if it kind of gets to that level, 265, and tries to break out a little bit higher, you would actually look at trying to, there's definitely different ways to do it, Tom. I'm a little bit more of a fan of actually rolling down that call and trying to actually make a credit out of this. Take that credit, that premium in, and then try to just have that spread really expire, in the money. And there's still a lot of time that's there. but that would be an opportunity. It's just one of those trades here with this type of IV and this type of stock that if it does break out, and it's going to break out aggressively, that you can continue to see it run, and that could also lead to a higher IV over the longer term. So that's just one way to do it. You could also take the trade off as well. So a bunch of different, it's really flexible. That's what I like about some of these diagonal spreads compared to calendars where you're kind of a little bit more constrained to any of these aggressive upside moves post earnings.
Yep, and you'll have 4 potential rolls or adjustments that you can make. Potentially, the market's open on those. You got some time risk on that short 265 call over the next 3 days into expiration. Also, so keep that in mind. But definitely need to move to the upside. Looking for that 265 level. All right, thanks to Kevin Green, senior markets contributor here, helping us out today. But coming up after the break, we're going to be joined by Landon Swan from Lifefolio for a look at sentiment data. In Target, the retailer stock's down over 20% this year into their quarterly report tomorrow morning. Can they fix the mess they got going on at Target? We're going to talk that next.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's going to be Landon Swan, co-founder of Lifefolio. Welcome back to the show, Landon.
Thank you. Thanks for having me.
All right. So, this is one of those retailers I think a lot of people want to hear about, Landon, just due to the fact that it seems like they're not doing anything right. They got a big dividend, 4.3% dividend yield. Who knows if that sticks around? It's never guaranteed. But it just seems like the missteps from the leadership of this company, when consumer spending still robust, their competitors are doing well, it's just not adding up, Landon.
Yeah, I tell you, it's been a bit of a tough year. I mean, a year ago, the stock was at like 167, I think. But it hit a low in April of 87. It's been kind of slow and steady grinding up to about 105 right now. So since April, I think investors are probably kind of calm, still disappointed from what could have been, but at least it's, kind of hanging in there. But you're right, they've had a lot of missteps. And I think a lot of it comes from just like, sticking their neck out and getting into divisive issues when really you just need to sell good products at a good price and have good service. Like, keep it simple, right? Stay out of that kind of stuff. And I think that, a lot of investors are looking forward to a CEO change. There's been talk that he's ready to step down at the end of this year. And, I think that this call could actually, indicate whether or not someone's being promoted or they're bringing someone from the outside. So I think there's a lot of sort of hope on the investor side that maybe they can get back to business. And really, actually, we're seeing that. We're seeing a little bit of a back to business mentality. Their digital numbers are very strong. Their same day delivery numbers are up 36% year over year. In fact, 70% of their online purchases are delivered in one day, which is really strong. I mean, you think about what Amazon's doing, that's actually really good numbers. They've remodeled a lot of stores. Those are adding to about 2 to 4% on their comp lifts. As far as tariffs go, they're moving away from that. Their China sourcing was about 60% back in 2017, and today it's at 30%. Next year they expect it to be down to 25%. So they're diversifying, sort of like we talked about with Home Depot. They're moving away from tariff vulnerability. They had a great promotion with Kate Spade. I know that we look at the consumer numbers for happiness and sentiment around their back to school shopping. It was very strong. People liked the selection. They liked the pricing. So they're starting to kind of move in the right direction. And focus on the things that got them there, which is seasonal promotions, family-friendly events, value-driven messaging, and stay away from the divisive stuff. And I think we're starting to see a light at the end of the tunnel. And what's great about this report here is I don't know if expectations could be too much lower. I mean, they're really low. The stock is, basically cut in half from its highs, even though it's been grinding up a little bit higher since then. It's down significantly from its highs. And you can see when we look at the web data, it's really strong. Plus 21% beating Walmart. Now, again, this is year over year. So when you have a really low or bad year a year ago, it's easy to beat these numbers. That's why you're going to get a big number out of Target. So this is more about how poorly they did last year than how great they're doing now. So they're not doing great, but they're doing okay. And okay compared to really bad is great news for investors. So I think that there's actually an opportunity here to see a beat to the upside on really low expectations and doing things, again, back to business, keep it standard. For many years, Target was had way better scores than Walmart in just about every metric that we tracked. And then, a few years ago, they got into the divisive stuff. They went off the rails, and you split the country in two, and some people hate you, some people love you, and you just can't do that. You just gotta let people assume that you agree with them, and you're just going to sell them great products at a great price. That's it. Stay out of it. So once that happened, they stopped chasing Walmart with our data. They went the other way. But now we're starting to see them come back and get back into the normal business thing, normal business operations. And because the bar, again, is just so low, I think they have a chance to beat here, especially if they make a good announcement on a CEO. I think investors could really like that.
Landon, I think you're onto something here. Think about this. Their forward PE right now is slightly below 15. Walmart's 37. Costco, 52. So in terms of big box retail, some of that's justified. The valuation could not be cheaper. The analysts' views could not be more negative. The most bullish views are caution. That's the most bullish. It couldn't be a more negative scenario. And Tom, Landon, you guys know when everything is negative and the bar is so incredibly low, any bit of daylight can send a stock higher. And that's what this company has to hope for, because the valuations, valuation's cheap. News, all negative. Barely scratching to the cautious level. Landon, what is it that can be positive? Is it a new CEO? That would probably be portrayed as positive if they were to replace the CEO. But Landon, this stock is trying to find its role in big box retail right now, doesn't have one.
Yeah, I agree. I think probably the CEO is the most anticipated or most hoped for change from the investor group. But I think that if they just put out strong numbers, I mean, if you look at this chart, the web visits on a year-over-year basis, and this goes back a couple of years because there's so much seasonality around Christmas, which you can see here, but it's higher highs and it's higher lows. It's a turnaround. This is data that is moving in the right direction. If we had a longer chart, you'd see a big decline right ahead of this, and now we're starting to flatten out and even move up, which is why we got that plus 21%. By the way, the app data plus 23%. So both app and web are being used more. More people are starting to go there. And again, it is up and to the right to a degree, but it's more of a function of about how poorly they were doing. And you know, when you've got a company that's just bleeding and just doing terrible, when the bleeding stops and all of a sudden there's a sign of recovery, that is a great time to get in. And if you can get in, you know, I'm not calling this as the absolute bottom for target here, but I think this is the report where investors start to say, hey, you know what, maybe this company's not dying off. Maybe they just made some mistakes for a few years and they're figuring it out, and this is the turnaround point. The data is starting to point that way. The data is saying this could be a turnaround point. I think if you parlay that with a CEO change, someone with, you know, a great reputation coming in from the outside, a turnaround guy, that, you know, there could be a really big investor report coming up from them. So I'm optimistic. The data, you know, the CEO stuff doesn't factor into our data, of course. We can't quantify that. But when you look at the data itself, it comes out with a score of plus 31. That does account for what the stock has been doing, what expectations likely are. So it takes all of that into account. It doesn't add the CEO stuff. So plus 31 puts us in the firmly bullish camp, not like, you know, shoving our chips all in, but willing to take a bet. And if I'm a long-term investor, then I might add shares ahead of this earnings report.
Yeah, plus 31, that's actually pretty positive from you guys, especially on a retailer like this. It has had some downgrades. I mean, I've seen $93 price target, but then somebody put it on a tactical outperform list today. So I think foot traffic is going to be key for this, for them moving forward, because I think that's supposed to decrease, according to Placer AI, down another 3% year over year. That's not a positive, but bar is really low, Landon. So thanks, appreciate the data.
All right, thanks, guys. Yep, love to be a contrarian.
All right, love it. That's Landon Swan, co-founder of Lightfolio, breaking down the data. Is this the bottom as far as quarterly reports for the company? Kevin, you know, you look at the stock, they're expecting about just over $9 move in the shares, about 8.5% at this point. So pretty big move priced in. How do you want to look at this one from an example trade?
So Tom, we're going to take that basic fundamental long iron condor, which plays for movement in either direction, and we're going to skew it to the upside. How do I do that? Well, I'm going out to August 29th, giving myself duration on this trade. So we've got, you know, 10 full days on this trade, Tom. August 29th expiration, I'm going to buy the 195 put vertical. So right in line with the expected move, right in line with the move, you know, out to August 29th, which is $10.40. So there's the first part. There's the bearish part. On the bullish side, Tom, I'm going to buy a $10 call vertical. The 110, 120 call vertical. So I'm looking for a move slightly bigger than the expected move if you get good news, Tom. So here's my rationalization on this. I'm going for the bigger move to the upside, but if it goes a big move to the downside, I don't lose money, right? I'm generally a contrarian bullish on this trade. Do I know? I have no idea where the stock's going, but I certainly don't want to rule out the downside if they come in with horrible numbers, Tom. So you make a little bit of money on the downside and more if it goes to the upside, Tom. Either way, you're playing for a big move.
Yep, need a move strategy here on the long iron condor, August 29th. Weekly options, so 10 days to expiration, not a pure earnings play, as Kevin mentioned. We're going to buy the 110 strike call, sell the 120 strike call, and then on the put side, you're going to buy the 100 put, sell the 95 strike put. Bullish bearish $5 wide put vertical that you're buying a $10 wide bullish call vertical. Now you can see here that below that break even, below 95. The most you can profit is $120, right? That 380 debit that you've got up here, that's going to be your risk, $380. So you subtract the $5 width of that long put vertical, and $120 in potential profitability below 95, but then you can move above that break even of 113.80 to the upside, and you got more profitability, $620 in profitability there, because you have to subtract that $10 minus the 380. So keep that in mind. The idea with this type of strategy that Kevin's looking at here is you need that move. Yeah, you'd rather have the move to the upside, 2 or 3 standard deviations. Maybe they blow out earnings, maybe they get good guidance and the stock rallies pretty significantly. And if the stock doesn't meet expectations, bad guidance, you still can potentially be profitable on the downside also. He just skewed it a little bit with more exposure, profitability exposure to the upside on the long iron condor here. So good look at that type of trade, need a move type of strategy. All right, let's take another quick break. When we come back, we're going to take a look at Toll Brothers. The home builder stock's up about 12% so far in August, as the bar is growing on this one into their earnings after the closing bell. Stick around.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Toll Brothers in the home builder space, let's get a quick market update. Stocks are at session lows as we speak. The benchmark S&P 500 now down nearly 0.6%. The Dow Industrial has now slipped it into the red, down fractionally. NASDAQ 100 down 1.3%. Mag 7's not doing too hot today, except for Apple is basically flat. And the Russell 2000 also down pretty significantly, down 0.7%. You can see here from the heat map, even though we've got about 6 sectors in positive territory out of the 11, the S&P 500, I think it's 6 or 7. The market is getting dragged down by those large cap tech names, which are taking it down the chin. NVIDIA down over 2%, or 3% now, continues to fall. All right, let's get into a discussion about Toll Brothers. The stock's rebounded about 52% from those April lows, but still not back to all-time highs, still in bear market territory, down about 22% from those all-time highs that we saw in November of last year. Let's bring in George Tillis, senior markets correspondent, here to help us break this one down. George, seems like the housing market's been in a recession, even though the stock market's near all-time highs, but we're starting to see a resurgence in some of these home builders names with the hope of rate cuts that might help this sector, right?
Yeah, I think so. If you look at, Toll Brothers and the other home builders, they've been sort of creeping higher since the April lows, and I think that's suggestive of potential, amelioration with rates that are very high and mortgage constraints. And the market seems to be, just from my observation, locked up. There's a lot of homes for sale, especially more expensive homes, let's call them $1 million plus, are just sitting on the market for a long time. And right now, it seems to be that these smaller home builders, or at least the home builders, let's say like Lennar or D.R. Horton, maybe Pulte, which cater towards the median home price. I'm not sure exactly what it is as of last month, national-wise, but Toll Brothers is a little bit different because they're on the upper echelon in terms of price. ASPs, or average selling price, per estimates based on the company's guidance from last quarter is around 955,000. They're expecting this year also to produce and essentially deliver about 11,400 homes. So these are a couple of metrics I think that'll be important as a result of the earnings today, to see if they actually are showing total volume growth, average selling price growth, or some combination of both. And I suggest that there's some combination of both, that'll be accretive to shares. Now, if you look at the numbers that they're expecting to report, they're expecting $3.60. Now, that's slightly lower than $3.64 from last quarter, but again, slightly higher than, last year for the same quarter, but slightly higher from last quarter at $3.50. And sales are expected to be modestly higher, around 4.8% to $2.86 billion from $2.73 billion for the same quarter last year. They also broke down, I think this is also going to be important, importantly is the revenue breakdown percent-wise, but also if you look at the net income and operating income margin growth for the business, which actually has been growing. If you look at last quarter, sales were higher by 3.5%. So this quarter they're expecting 4.6%, so slightly higher. But last quarter operating income was actually down to 16.4%, and net income down to 12.9%. And this is important because if you look at the net income margin over the last 4 quarters, including the one they just reported, it's still over 13%, which is higher than their 5-year average. So the company's more profitable, both on a gross and net income margins. That's suggestive of escalation clauses that are actually built into their custom homes. But one of the caveats, and I think this is also what analysts would be looking for, is the pre-built homes. The pre-built homes or spec homes don't have as much margin than the custom homes. And right now, based on their Q2 numbers, the pre-built business is 49%, customs is around 51%.
Yeah, George, I think that pivot to build-to-order homes is key for them, because you mentioned the margins, right? That changes the idea of the margins of this company. And even though Warren Buffett, took a stake in Lennar and D.R. Horton didn't take a stake in Toll Brothers, it's still up, 13.5% in the last month. It's still having a nice little run here with the whole sector. And, this housing sector, this is a vehicle of our dreams, George, that interest rates are going to get better, housing's going to get better, more affordable, more people are going to enter the first-time housing and trading up. This is a whole sector, George, that really just needs lower interest rates. But that pivot to build to order probably helping their margins a bit.
I think so, and that's what I said. The custom build to order segment, just to order a house, you have to pay a fee to do that, a premium, plus all of the accessories you want to add to the home, and they can tie in escalation clauses versus a pre-built one. It's manufactured, it's available. It may not necessarily be the ones that customers want exactly, but through the time of inception, breaking ground to finalization, Toll Brothers basically had to eat those escalation costs if there were any. So I think that's the pre-built, the made-to-order custom homes is certainly important. The other thing is obviously interest rates. Going to be a huge part of this story for home builders and existing home sales going forward. Even a small decrease in rates, just the way they've been in the last couple of years, will probably increase volume, transactions, both from existing and new home sales. So for what it's worth, that alone may provide some support, even though prices may stay high. As long as the cost of monthly service obligations goes down, that's, I think, what really people want, irrespective of those higher prices.
Yeah, and those higher prices, almost $1 million average selling price for Toll Brothers at this point. So at the high end, a lot of cash buyers, though, about 25% are all cash at this point. So that definitely helps. All right, great stuff as always. Thanks to George Tillis, Senior Markets Correspondent here, helping us break down Toll Brothers into earnings. Kevin, the option market's only pricing in about a 6.5% move, but we've talked about this before. The valuations on some of these, the PEs on a trailing and a forward-looking basis, are usually single digits because of the cyclicality within this industry. So the stocks bounced pretty significantly off those April lows, but still down 22% from those all-time highs that we saw in November of about $169. So I looked at a strategy. They don't have weekly options, Kevin. So not all names have weekly options. That means maybe it's a little thinner traded. I looked at a bullish trade here, but I went out to the October monthly cycle here, Kevin. 59 days to expiration on this one. We're going to buy the slightly in the money 130 strike call, then against it, sell the 145 strike call. Paying roughly, we've got a 630 debit on here. That's where it was trading earlier. It's trading closer to 605, $6 right now, but the debit you pay is going to be your risk. So if you pay $630 in risk with the potential to make $870 if it goes above 145. But Kevin, this is all about duration on this one. So if you're bullish on it, maybe you don't want to buy the shares. Maybe you want to give yourself 2 months in this a trade like this. It gives you plenty of time to get the move that you need to the upside on this one, right?
Yeah, the chance to make 150% on your money, Tom, if a $6 spread goes to $15. But you have also given yourself duration out to the October expiration, Tom. That's 59 days. So you're hoping that Warren Buffett continues to add to the housing sector, interest rates going down, better numbers from housing. You got that a better starts number today. You need good news in housing. And remember, this stock trade, it traded $169 not very long ago. So significantly below that. Doesn't have to get there for you to be profitable, Tom.
Yeah, I was just looking at the percentage, less than 5% move that you need to get above that break even, a 136.30 to the upside on that, and then you only need a few more percent to get above that 145 low. But I think the key here is you look at duration on a trade like this where, hey, I don't need to move tomorrow post earnings, I don't need to move by the end of the week. I've got until October expiration. So if you have a longer term duration that you're looking at for a stock like this for it to recover, this takes advantage of it. And Kevin, potentially you might get a rate cut in September that, as you mentioned, might help this stock out over the next couple of months. Kevin, real quick here before I let you go, thoughts here on a market that's leaking oil?
Yeah, I still think it's just overall fatigue and worries going into Friday's Jerome Powell speech. Remember, it's been volatile in the past. This speech, let's see if he does it again.
Yep, lots to decipher over the next couple of days. Retail earnings and Fed Chair Powell speaking. All right, that's going to wrap it up for us today here on Fast Market. Stick around right here on the Schwab Network. Next Gen Investing is coming up.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more. with Schwab Bank Investor Checking, the checking account built for investors.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, another day of some pressure here, although a bit steeper than what we were looking at yesterday as we kicked off the show, as we were down about 1.3% in the NASDAQ. Actually, now pretty much unchanged in the Dow. Russell down about 0.75%, but no secret where this is coming from. When you have names like Netflix down 3%, you have Microsoft down, Meta, Alphabet, Amazon, Apple's pretty much unchanged, with Nvidia really being the standout there, down 3%. I mean, I think that speaks to some of the weakness in this market today.
Yeah, and earlier Apple and Tesla were both higher, so those have broke lower now as well. When you got 7 for 7, Magnificent 7 names lower, it's going to be really, really hard for the NASDAQ to have a good day, but really the S&P as well. So I'm not surprised to see the NASDAQ down 1.3%, especially when you talk about some of the moves in terms of the magnitude. You mentioned Nvidia down 3%. You mentioned Microsoft down, 1.25%. Meta down 2%. Like, it's just math at that point. And so, despite the fact that still nearly 70% of the components of the S&P 500 looks like in real time, 345 of them. So let's call it, it's actually 69% then, or around there, just under 70% are higher on the session. It's not enough to offset. 3% move in Nvidia will wipe out 8% of the S&P 500 in terms of its that's its weight. So you can add up a lot of small names that are having okay days, and it's not going to do it. It's not going to do much.
I know there's a reason that we focus. I mean, as you can see from the heat map right there, there's a reason we focus so much on these Max 7 that I know many have coined to be less magnificent as of late, and it's because they do still command so much of the market's overall price performance. So as we await the maybe next major catalyst being Jackson Hole and then Nvidia's earnings next week, does feel like right now this pressure on big tech is sort of the dominant story of the session here. But we will go through a lot of these retail-focused earnings throughout the next hour. We do have some earnings recaps as well as earnings previews to kick off the show here We will also be looking more into the technicals on some of the, frankly, pressure we're seeing in NVIDIA today versus the surprising strength of Intel. And so that's what we're charting today, as well as diving into this really interesting note on Palantir from Citron Research, which is arguing, the firm really, that the stock is significantly overvalued, and that is right now seeing the price detached from its fundamentals and analysis. So a really interesting call on Palantir, which has been our market leader so far this year. And then we'll really go through all things retail. Lowe's, Target, and Walmart will be previewing ahead of those earnings out in the coming days, and we'll recap things to close things off with XPeng actually higher today after reporting some solid margin expansion as well as some nice year-over-year growth. So a pretty decent session for XPeng today.
Yeah, no doubt about it. And looking forward to our discussions as the show rolls on. I was just doing some math while you were talking. Just NVIDIA alone, if you assume 8% weighting, down 3%, if every other name in the S&P 500 was exactly unchanged, the S&P would be down about 0.25%. So you're down 0.6%. Basically, just under half of that is one stock. So this is what when we talk about like going into this NVIDIA earnings event next week, I think it is, like that's a market event now. If NVIDIA is down 10%, that's basically pushing a full percentage point of impact on the overall market. Like if it's down 20%, it's even bigger. And not to even mention that when a stock like NVIDIA is down, it has ripple effects where names like Microsoft might be lower. So it is a macro market systemic risk now, one stock.
It's true, and I feel like there was a day when it was a bit more maybe skewed to Apple, but never to my memory have I seen, I mean, like the lack of depth,
It's
really.
great that you say this, though. Since 1981, I saw this CNBC data. No stock has ever, since 1981, been a bigger component of the index than NVIDIA right now. Apple, to your point, 2023 was around 7%. I think Intel way back when was around that number as well. NVIDIA at 8% and some change, wherever it is, depending on the day, is the largest single stock weighting ever in the S&P 500 going back to 1981 when they started keeping these records.
You know, that actually doesn't surprise me even so, because when you zoom out and you look at the 5 biggest companies, like you're talking your Apples, your Amazons, your Alphabets, I mean, I believe that weighting has also never been, it's like 30%.
Yeah, well, they had to adjust the NASDAQ when it was like over 50% because it was too many. But yeah, no, it's a great point, and it's not just NVIDIA, but NVIDIA alone is record setting. But then you throw in the other big names, it's really, really top heavy. For good reason maybe, but that doesn't mean that one setback from a company like NVIDIA couldn't have shockwaves sent through the system.
Yeah, like it's basically like the S&P 5 right now, it feels.
Really?
So it really is. But we'll step away, at least for the top of our show, from some of the tech focus, although actually we're starting things off with Palo Alto Networks, which would definitely be in that tech world. And actually, our leader of the pack today amongst these 4, up 3.6%, as really the latest earnings were, first of all, received a bit more positively as the market opened, but we're still higher on the session, but do show this confidence in its efforts to become this really dominant cybersecurity platform. So they're already technically the largest pure play U.S. cybersecurity stock that would outstrip its closest rivals, being like CrowdStrike, Cloudflare, but recently announcing the $25 billion deal for smaller peer CyberArk software, which is attempting to make its biggest step yet in this very long, drawn-out strategy known as platformization, to convince customers to really bring all of their cybersecurity spending to one single vendor. Now, naturally, anytime you hear this, you think there's risks. This is not something that everyone necessarily agrees with because of the financial and just the overall security concerns, but technology executives have become wary of one company becoming too powerful in cybersecurity, but still, I do think that the latest earnings show they're definitely gaining traction. I mean, they said the number of customers generating more than $5 million in annual recurring revenue rose by more than 50% from the prior year. They also, who originally were specializing in firewalls, but they've added various cybersecurity features to their platform. Last year, even offering some of this free access to certain products in hopes of winning these clients over. We've seen CrowdStrike do the same. They had a bit more of a misstep to right than, say, Palo Alto Networks, but I mean, alongside earnings, they also do expect to have free cash flow margin of more than 40% for the first full year after completing the acquisition of CyberArk. I mean, there were so many good things to read within this report.
Yeah, strong report. Guidance was okay. You know, this to me though
it's not about the example trades. We talked about an example trade yesterday that was looking for a move into kind of this area, but that's not what it's about. It was the logic going into that discussion. Rick talked about the technicals. He said, hey, there's some volume and perhaps overhead resistance in this 183 to 186 range. You start looking at the chart, it makes sense. It's kind of a jumbled area where there was some overhead supply. But we also talked about the theme to the earnings season. It takes on these attitudes. What has the theme of this earnings season been? Hey, a lot of stocks are beating or meeting expectations, but they're not really being rewarded for it to the same extent that ones that are missing or disappointing on guidance are being punished. And so we laid out, hey, there's probably a good likelihood that Palo Alto is going to have strong numbers, but what's enough to really excite the street? And where should those expectations be? It was like a 7% expected move based off options volatility. You got a 3% jump today. Now, I know the stock was a little bit higher earlier and it's losing ground as we speak, but at no point was this stock like up 20% like some of these moves in times past. So to me, there's a lot of information in how the market reacts to good news and how long it can hold those good news rallies. And right now, the story to me is more of the same. Not a lot of reward, a ton of risk if a stock misses.
That is very true. And I think that actually, I mean, it kind of fits almost the same narrative as our next name, which I guess you could find clear weaknesses within Home Depot's report, but there was also a lot to like as far as an improvement story from Home Depot here. As I think one of the hugest takeaways was the fact they did actually stick by their full year guidance, but they also said comparable sales increased 1% across the business. 1.4% specifically in the U.S. alone. That sales growth marks only the second quarter out of the last 11 that Home Depot reported year-over-year improvements, which was its strongest performance in more than 2 years. So I think that so many things to like. First and foremost, comparable sales. Well, we did see some weakness in the spring buying season. They were up about 0.3% in May, 0.5% in June, and then 3.3% in July. So there's your story, that not only are things improving from those weaker months, which we were warned of, but they're accelerating at like a pretty nice pace. I mean, I know 1.4% in the U.S. isn't exactly anything to go off about, but same-store sales have remained very challenged this quarter for retail across the board. Another thing I think is so interesting about this report, maybe because I'm like getting older, maybe thinking about buying a home, is some of the commentary though from their CFO where they're seeing this continuous deferral mindset. We're waiting for a lower interest rate environment to make some of these big ticket purchases like buying a home. And that's been, I mean, the theme for home builders mentioned this. We see it from Home Depot, Lowe's time and time again, but we're still seemingly in that same period where we're not seeing this same really eagerness to perhaps make these big ticket purchases.
Yeah, and I think in the case of the same store sales, to your point, which I think is a good one, I mean, this is a company that had declines in same store sales for 8 of 9 quarters, I think it is, if my counting was right. Where quarter 4 of 2025, which was the February reported quarter 2 quarters ago, snapped like a 7 or 8 in a row streak. A little bit of a give back in the June or the May reported quarter, which was quarter 1 for 26, and then this one, slight positive move. But a lot of the same reaction story I think applies here. This is a beaten up story fundamentally. It's starting to show signs of turning. The market oftentimes will start to reward that before the numbers show it. But even then, good strong report, you see the stock pop and start to give some of that back intraday. Now I know the market's getting weaker, that's going to weigh on it. But on really, quarters where earnings are really rewarded, doesn't really matter what the market's doing those days. We've seen huge moves and we've seen them hold regardless. Stock's giving back over half of its jump already here today.
It has, and I mean, I think that you could find, what didn't resonate so well. Like again, they did miss on their top and bottom line. That first time they've missed on both of those metrics since 2014. So that's not what you want. As well as online sales were up, but customer transactions across their website and stores actually fell in the quarter. Yet shoppers did spend slightly more with those transactions. So I think that you're still seeing the effects of inflation. And I've always said these are good reads on some of like the commodity market, the labor market. I mean, these are such good reads on very specific things we talk about from a macro standpoint.
Yeah, and I just look at this name though, it's like I don't know that investors are buying it because of the performance today. They're trying to buy the turn when things are starting to improve, and you see that in the home builders scooped up by Warren Buffett. So look, I don't know that there's anything here that was really a setback, because if this is what you're trying to buy, like you're buying a disappointing story.
Mm-hmm.
You're buying what it can be and what it was 2 or 3 years ago.
That is true. And maybe you're a believer in the pro business. 55% of their revenue they now think is pro, and then that other 45% is
stable.
Yeah, that is stable. And I contributed to those gains, I think, this quarter because I do buy a lot of plants at Home Depot. But now shifting gears, looking at some of these names with earnings still ahead, those being TJX is where we'll start, as we have seen, a really strong track record. They've experienced gains in 65% of the time following earnings announcements in the last 5 years, which isn't, as strong as some of the names we talk about, but we have also seen an average one-day increase of about 3.5%. That's not bad for a retailer, especially one that right now serves this value-driven shopping experience and the consumer that has remained a bit more inflation wary. So that's still a concern. High interest rates still a concern. The unpredictability of right now the economic outlook, I'm sure, will be somewhat of note. But TJX has been, I almost think the conversation should be, we talk a lot about Target, the way it's lost the market share perhaps in the grocery world to, say, Walmart. I think TJX is now a pretty formidable competitor actually to Target as far as like the home good offerings because it's so affordable.
Yeah, with their store with that name, right? Home Goods. So
true. No
More drama?
Yeah, this is a story within retail that's remained intact. You talked about areas that have struggled. Hey, it's no secret that Home Depot has been in a struggling category.
TJ Maxx are pumping. They said they were getting into retail. That means Target might be up too. It's all about hope. Yep. Okay, I'm back. Let's get this show on the road. I got to make up some money. We just now broke to 21. Is it time? What time is it? 12:14. Where are you? Down a one-way street. Baby, who I can meet. Hey, hey, for the monkeys. I'm not messing around. 6420s. You're none but a clown. I don't even think I've ever looked at EL. Walmart. Well, I did nothing but sell off when I was gone. Okay, if it's going to bounce, it's going to do it here. So I'm going to give this a shot. Three healthy white soldiers. We're squeezing between the 9 and... the 9 and the 21. a little gun shy right now for some reason after that last trade. Got a head and shoulders. The tape still looks red. $205. Low is 189. $205, the 6420s. This does not hold, I get out. I'm gonna go make me a tea. Let's look at the 30-minute. So we broke that support. The next one would be right there. 1 hour. Let's go back to the... I'm at 230. God. Just in that little bitty pullback was $20. Break it. We're at 240. Enter at your own risk. There's 255. That's $50 a contract. 265. There we go. 270.85. Okay. I'll take it. I don't trust this market one bit. Bingo. A plus. Made back a third of my loss on that one. I'll be right back. Back. Oh, we got a new high. We break to 63, we're going to fly. Did you get that, Rob? Then I'll jump back in. Yay. Boom shakalaka. Same one, 6420s. Prepare you in the name of the Lord. If we can just get them going here. And get 3. The 9 crossed the 21 right here for the first time in a while. Then crossed the 63. Boom! having a hard time making up its mind. And I'm just trying to figure, we got to higher lows, but I'm going for it. $3. Tight stop. I ain't running this one out. I think it already happened. Let's bet on this. You want to bet on it? You want to bet? You want to bet? Unless I read the headline. This was a couple of days ago. I still ain't going to drink their shitty beer. They've ruined it. They've ruined it. Sydney. Oh, could rake in 10 million. Could. I'm sure she got that contract. Too bad you didn't bet. Jimmy's in the SPX scalping the lotto at 60-20 something here, baby. You have it to $3. We were at 370 there for a second. Now we're back down to 310, damn it. Tough day. I was up $221. Fish respects the 9, but rumors that Sydney Sweeney Gosh, I think this ain't gonna work. We gotta hold the 9. This is the 3rd time now, so we'll see. Third time. It's a bull flag. Last 6 minutes. Huh. Huh. What a toughie. So I've been in it a little too long. It's like that. The bulls aren't too strong today. When they break support, will they break it big? $255. Well, hell. Back to 280. Can we continue? What am I in? Did I post it? I was up there 290. I think I'm going to stop out here soon if this thing don't do it. Kind of broke out of the snake. Definitely a bearish day. I ain't gonna take too much more risk if this thing don't break out. George XPeeve, China.
And earnings per share if you're losing money to demonstrate fewer losses or less losses, and that seems to be the case here because if you look at the 6 cent
I used to like this stock.
this quarter and even go last quarter at 6 cents. The previous quarter was 25 cents. And even for the same quarter last year, it was around 18 cents. And I did notice that if you look at the growth estimates for sales for XBEV, it's actually expected to be around $11.3 billion this year, compared to around $6.5 billion last year and $15.6 billion next year. And next year is quite important, I suggest, because this year, for the full year, they're expecting a 31-cent loss, whereas next year they're expecting a profit over 30 cents. So it's getting interesting because we are looking at next year adjusted profitabilities with pretty significant growth rates based on the guidance that the company provided, but also based on consensus.
George, it seems like the story is becoming more clear as to the winners and the losers. Initially in this first wave, BYD, very established.
Lily's pulling back. TTM squeeze getting ready to squeeze. Come on. We're waiting. We're waiting. See what Schwab's crying about. I mean, CNBC.
Residents pay to live in our communities really.
They didn't complain about high construction costs during the Biden regime. I was pricing lumber back then. It was like triple. And it's weird how these people are. I mean, I can't stand listening to them because they're so dishonest. Well, there it goes. Not much mustard here at all. Doesn't hold that, I'm out of it. Well, damn. 2 red trades today. And 4 good ones. I'm out. Stopped out. Fierce. Yep. Yeah, watch it bounce back. I kind of said that this morning after you have a real good, after I have a real good day, I mean, exceptional, the next day ain't that good. And when I have a real bad day, the next day's real good. Not real good, but better. Good. I'm gonna go make a hot tea and give us another shot when I get back. Back to 120. God. I don't even want to trade. Look at some. My friend Novice is cancer-free from his lungs. That's a $50 bounce right there. I don't like trading like this. Not on red days. A little bit different yesterday. Dang, $80, 180. Do-do-do. Let's go over the watch list. Put up my messages. Peppolini, what are you talking about? Tech weakness moves stocks lower.
And the end of the year, and I think primarily it's because the focus is
1 day, huh? And you're all worried about 1 day. Yeah, it could be. I mean, we are overbought. Tesla had dropped down to my support. Oh, SPX is back at 120. $110. You broke the head and shoulders on AMD today, so that would have to become resistance. We're at $1 on SPX. And we're 3 out of the money. Do 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 do. $0.85. I'm gonna see if I can find a play besides the SPX and keep this on a chart over here so I can watch it. Microsoft pulled back to 510. I mean, look at Microsoft. Meta is at a support. Well, looks to me like it's going to be a lotto play today. Home Depot had a real good day today. What's you? What is you? BYD. On Lulu, I had my eyes on, and it's down. Bounced yesterday and pulled back today to the 200, which we bounced here before, and they were pumping this one. I'll be back. Amazon. And then an AVGO I like to trade every once in a while. Google. Yeah, see, everything had a pretty good run. That's what they're scared of. Oracle. Ugh. Oracle's down quite a bit. I think tomorrow will be a better day. I'm not going to let go of tech just because they're bad-mouthing it. But Oracle, DBS Bank adjusts Oracle price target to 300 from 270. Larry Ellison once said that Bill Gates isn't the smartest or the most brilliant, but has two traits that very few have. And what is that? He hung at Epstein's place. He's a liberal. Oracle stock reverses early weakness, rises 1.9 after a key trading signal. I wonder what that is. Clones near the highs of the day. What's a trading signal? I don't see it. Smart money. This is Benzinga. I don't trust Benzinga worth of shit. So let me see if I see a trading signal. On the weekly, the 9, it's definitely out of support. I had this charted up already, probably on the daily. Not on the daily. So it would be the hour, 20-day 1 hour. No. 4 hour. Yeah, it's the 1 hour. Definitely the 1 hour time frame. So I'm going to set an alert right above it. Well, actually, yeah. 233, so another $3. Come in tomorrow and it dips down to $3. Okay, what's going on here? I had 228. That's probably when I charted it last time. Replaced. New support. 333.17. What happened to my watch list? Oh, here's the Magnificent Seven. This one's had one heck of a run too. That's what they're getting scared of. NVIDIA. I'm not seeing much. This previous high right here kind of stands out. Right around 173, 174. And this kind of stands out right here too. $172.12. Turn off my air conditioner and go pee. Oh! Okay. Well, that looks pretty right there too. That looks real pretty right there. This is NVIDIA. We'll just leave that right there because I like that. But look at the run it's had here in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 2 months. From 145 all the way to 185. That's a huge run. Tesla strong buy at 300. Apple's had a huge run here from $2 all the way to $2.35. So right around 220 for Apple. And then you got Amazon. Okay, the calls on the SPX have dropped. So we get 64.15s or the 64.10s. What time is it? 1:35. I'm gonna wait. I'm gonna just be patient. Get that last of the day trade on that. Definitely the market's bearish. So Amazon, it's hard to pinpoint a pivot point. Oh, here we go, maybe. That right there could be your pivot point. Off the 200 on the 1 hour. That's $2 dip, 250. And that's Amazon. And Microsoft. Microsoft been selling off for a couple weeks. With a little bitty bounce backs. There's a double bottom at 500. I still think this thing's way overbought. I don't want to trade it. I don't like that piece of crap anyway. Gates. Now we're definitely looking at a support here on the Fibbies. And I'm going to adjust it. So I'm going to clean this up. This is Meta. I don't know. The first support right now, but we broke out. So I'm going to redo this. We got a double bottom here. That could hold right there on Meta. 746. So we're getting close to that one. And I called this dip a while back. SPX drop more? Oh yeah. Let's look at this thing. Look at that run on SPX. Woo! Man, that's just such a... It's kind of overbought market for the way they've been yakking and talking all this time. And nothing's... They've been wrong about everything. I mean, just looking at SPX, I'm gonna move them up farther. 6405s or the 6400s even. If this thing dips any more. That's right above the money. So let's move this to a 30-minute 5-day. Oh, right on the 200 EMA. That's a nice little spot. I'm going for it. I like it there. Damn it. I like it there a lot. Let's look at the 15, see if that tells me any different. The 15's bearish, but that 30-minute, I like that. There's $7, $7.60, and I was at $6.60, so that's a $100 trade right there. This good cash. That's just a little bitty candle. Damn, I missed it. I was looking right at it, and I was like, whoa! I would have probably took that trade. Up 30-minute. Nothing here has a support level. Okay, let's clean it up. I gotta make back about $800. I'm still green, but I got there. Fuck, it's $8 now. At the 21 on the 1 minute. This is what got me last time. It's hard to be a bull trader right now, today. But if we pull back and hit 6404, we're squeezing between the 9 and the 21. Okay, here we have pullback. We're back to 660 just like that on that one candle. Boom, double bottom. Give it a try, Jimmy. $5.70. These are the 6400s at 570. This is risky. Let you know it. If you're already up $130. Yay. I'm going against you, buddy. If we break out of this flag, this could go up to about $800 or $900 contract. Or I get out now at 7. But if it squeezes out of that triangle, that has to break the 21. More than a fudge. $64.0470. Yeah, this is no day to be a bull. I could have sold him at 7. The message on the air conditioner looked like it wasn't alerting anymore. And just a reminder on the sink in the ladies' restroom downstairs. Let's go. We need a breakout, not a fake out. I could sell these at 680 and be up $110. Puts are moving, Rob says. Today is a day for the professionals only. Ain't that right, Edge? Edge is a good man. in his conversations, he seems very honest. Oh God, look at the puts. Now you show it. Puts have overcome. Puts have overcome. Puts in control. Well, if it hits 570, I'm going to get out of it. Push the market sell. I still think I have a chance to break out here. A little bit. I just got one contract at 570. If you're a beginner, I would almost suggest, if you can get the calls cheap enough, to get it above the money and only buy one contract. If you have a small account. Not today, but on any given day. Because I had to work hard to build mine up. Right now, it's just telling me I need to get it out, maybe. We got to hold this double bottom. So I was up there, I should have sold them. But the candles are a little bit more volatile right now. 6401. Oh, that reminds me. For years, I haven't even mentioned it in this room, but my lucky number is 401. And anytime a stock would get close to 401 or be at 401, I'd trade it. And almost every single time it worked out. $4.01 when I was trading penny stocks. It was my old employee number. And I was in the top 10 employees of almost 1,500 people. I worked for an inventory service back in the 80s. We traveled around and inventoried Walmarts. And then when that job wasn't working, we'd inventory auto zones and airports and all kinds of stuff. Then I got on an AutoZone crew and inventoried them. There's $7 again, $6.90. There it is, 7. Let's go. Let's blank it. Yay! Did you see that, Rob? Right at my resistance, 710. Come on, break it. Boom! Triggered. Triggered. There we go. 860. Ha 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 ha. Old MacDonald had a farm, me-I-me-I-O. And we are now at 8:10. 8:40. I think I should sell because we're at the 50 and the 63, unless it just continues on. I'm out at 8:20. Congratulations, Washboardjim. Now watch it explode. If it explodes, I'll get back in. But if it comes back down, I'll get back in and I'll lower it down one notch to 64.05. God, look at it. 860. $870. We're at the 63 again. It's faked us out a couple of times. I have to say beautiful. Does anybody want to buy me a fanny pack for my vacation? I'm trying to figure out what one to get. If I want a fanny pack or a shoulder pack. Oh, here's a video. My 5 favorite fanny packs.
What's up, friends? Today we're going to look at fanny packs. Great color, that tiny guy, but what I love so much about it, specifically my 5 favorite fanny packs of all time. We might have a little bit more, but 5 big categories. I've tested maybe 50 or 60 fanny packs. I don't want to talk about what I'm using on the regular every day as my waist bag or bum bag, because I know we don't say fanny out in the UK. First, a little shout out to Studio Need, who are sponsoring this video. Pens, notebooks, I am surrounded
I don't care.
by their stuff. I'm going to talk about the hardbound and softbound notebook. Slight good design and support, hopefully your. I just want to tuck it around the back of my shirt like this if I'm going out in public. But
Somebody'd steal it.
of my life is spent with it right here in the front, walking around my property. I live in this. I just always have it on. This is where my phone goes. I've got my notebook. I got my snack. I got everything that I need.
$8.50. Okay, get ready. Prepare ye in the name of the Lord. It wants to break, I think. So I sold these at $8.20. If I can get back in it at 8:20, I'd appreciate that. I went against the odds, Rob, and I won. 3 white soldiers. We have 2 minutes to power hour. God darn it, there's $9. $9.10. Can you see that? 570. $64.05s are still above the money. Let's see if this is a real run here. I might change it to 05. We've been faked out a couple times, but 3 times, you know, is a charm. Don't be alarmed. Back to 820. Okay, get ready. If it holds the 63, we're bullish, and we come back up. Nope. Okay, get ready. I'm afraid to jump in it. On a good day, I'd jump in it right now. I'm not having a good day, so. Fake out. Get ready. I'm going to grab some here when we hit this trend line, if we hit it, or I'll grab one now at 630. It was 620. Okay. Let's do it. $6.30. Ooh. Now I just hit my support. This is when I get in trouble. Damn it. $5.20. Come on, baby. Did someone die here? I'm even. I got 575 average. So when you're in trouble, you usually want to get out of it, or you want to hold it thinking you're at a double bottom. We had 3 black crows, but we didn't get a tweezer bottom. I'd say I nailed that one pretty good. That's 2 streams of 3 white soldiers and 3 black crows. We're 650, and I got 2 of them, so I can get out of this thing right now. 6 not 590. God. Gosh. Sorry about that, Lord. I'll read a Bible verse. Where's my Bible? Loins, the area of the body between the waist and the knee. Cloth for modesty's sake. Women, you cannot wear your skirts above your knees. Sometimes used as a reproductive organs. What? Loins? Are they talking about my balls? Area of the body between the waist and the knee. Cloth for modesty's sake. Sometimes used for a reproductive organs. They must be talking about my penis. $6.30. This is called the Student Bible Directory. Flood. A deluge of water, a deluge, D-E-L-U-G-E of water. Isaiah 28:2 and Matthew 7:25. God sent a great flood to destroy those who would not turn from sin. God spared the righteous Noah and the family who obeyed him. Okay, let's do it. I had a couple times to get out of this trade and didn't do it. And I think today I should be more disciplined. Okay. I'm winning. Let's go. Pet day. This was my lesson last week. Living selfish and selfish praying. So I'm not allowed to ask for money anymore. And I don't live selfishly, so I got that one down. I've gave so much money away, it's horrible. $6.30. I've only got one gift from someone. Well, I've got a couple gifts, but I mean a really valuable gift. And I've gave thousands and thousands away. I got one gift to go on my vacation, and I appreciate it. There's $660, so I can get out of these things right now and be very happy with $170. Oh yeah, I was going to draw these out. Oh, it moved on me. Man, just that one candle wiped out every bit of profit I had. So these are white soldiers. After I always say take profit after the third soldier, and we hit the 63 with a tweezer top. And then it bounced down, bounced off the 9. We had another 3 white soldiers, tweezer top. So I got out way before that. Then we had 3 black crows, and I was looking for a tweezer bottom, but that didn't happen. And that created a new low. And I jumped in the trade. Right now we're at $6. I'm up $50. So we got higher lows and higher highs. And you want to draw the flag. This is a bear flag. But it still can break out. You gotta look at the time of day. It's 3:11. And that runs right into the 63. If it does come up here and hit the 63. So we're getting ready to squeeze between the 9 and the 21. I've talked just about this. I mean, it's either now. If it holds this higher high, higher low, right now, it's got to hold this. So far, and I'm not talking about the wick, it's the body. The body's got to maintain that higher low. I mean, you can get faked out so many times by say, okay, it went below my trend line, I'm going to get out. But if you use the bodies, because I've sold many times and regretted it, and watch it just bounce right back within a second until it stops and forms that body of that on that candle. So we're still squeezing, see where it stopped, right between the 9 and the 21. I don't think you can really play around today. There's your 1, 2, 3. So the next time up will be the 1, 2, 3 sweet spot. If it continues up and stops here. So the body, see the body staying within that channel. Then it moves to the another one and boom. Now you're outside. So now you got to think, okay, well, you're more bearish now. I'm going to give it just a little bit more time. U.S. equity mixed. Tough day for Bobo. Bob is at 120. China. Mr. New Low. Double bottom on hymns. Double bottom on coin. Triple bottom on IWM. New low on QQQ. New low here on SPY. And the new low on SPX right there. I like my Sunday school class. Humble yourself. Humble. Tapinio. Let's see what this word means. I'm still in it to win it. Haven't gave up yet. I don't know if we're going to have one of them days today. Too much bearish going on. Tapino. The Greek word for meaning to humble, abase, or humiliate. It refers to the act of making someone or something low, whether physically or figuratively. In a biblical context, it often describes the act of humbling yourself for God or being humbled by God's actions. You trying to give me a gift? What kind of gift? Is it going to be a fanny pack? No. Okay. Oh, bah. I'm back at 560. Oh yeah. Oh yeah. I'm back to even. I should have got the dip, but I was educating myself on the Bible. You're funny. I don't know if to take you serious or not now. It's too much. 670. Congratulations, Washboardjim. Rob, what do you think about that? Damn, look at him. He nailed that number. $6.70 by George. 710, 720. Let's get it thing up to 1,000. I don't know, take her serious now. Who thought that was funny? Randy? Spank. So we're at $7.50. Should I make a business decision? Rob? Yes. You know what I think? I think we're going to break out of this flag. I can get 750 or 780. Damn, Jim, what you do? Lord, I'm not asking for you to help me make a decision here, but if we take this to 64.10, I'll give you 20%. I know the church is needing some repair, and I think Pat and John would really appreciate it. And also, okay, he told me to sell it. I made a business decision. A plus, please. Yippers. So this action right here got me all excited. These three white soldiers, and then when the crows came in, I bought the dip. And shortly after I added on, I'm very excited about that trade. That was $450. All I need now is $350. I got time for one more trade, maybe. It's now 2:28. Time for another Bible verse. Oh, or another odd word to look up. Okay, Balaam. 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 You think Balaam, Balaam, Balaam. An evil prophet for hire. He found himself blessing instead of cursing Israel because God controlled his tongue. Ballam. Balaam. He was a wicked prophet from the Bible, and a noteworthy because, although he was a wicked prophet, he was not a false prophet. A non-Israelite prophet. He looks like Balaam. $9.30. Can you believe that? Jeez. Lord, you told me to sell it. $9.50. That's left $300 on the table. And that would have made my profit. That would have made my day. And it went right to the 200, just like I said it would. Man, I missed that one. Okay. Yeah, could have kept that to the 200. I think that would have been a smart move. If we break the if we break this channel, and I might jump back in, or I'll jump in on a dip. But right now we're still bullish. We're above the 9 for the last 15 minutes. And the 9 crossed the 21. So I think the 200 is the resistance. Okay, we're pulling back again. Need to be very smart about this. I would have got out there and had a totally green day today. It would have made up for those 2 bad trades if I'd have held it just a little bit longer. Four or 5 minutes longer. And we got 21 minutes left. So I don't know. I don't know if we're going to break the 200. This could be just like a regular flush out day. I notice when I listen to these guys on CNBC and Schwab, when we have a red day, they all of a sudden start, we told you so, and then the next day, we're green. Okay, we're getting ready to squeeze again between the 21, although now the 9's above the 21. So we have another squeeze in play here. Get ready to squeeze. The 6405s are cheaper with more volume. At Randy's favorite number, 420. Slash ES is at the 200. $4.20 at 490. Let's go. I got the 6405s. And we have a wall. So I'm going to go fanny pack shopping tonight. We're back to 410. Nope. There it goes. After I get done here, I'm going to go cook me a burger. Yep, I agree. Some news would be perfect right now. It's got to hold this 50. And 275. Let's go. 2.75. These are 6405s. The good news would be Zelensky and Putin will meet. I think Putin might ask for too much. Ah, darn it. Didn't hold. Fuck. This is a hard day for me today. We're getting that volatility right now, and it's looking at 250. So let's give it a little bounce here. I don't know if we'll get it. This could get nasty. 275 and $2. I don't think it's going to happen. It's just been too nasty of a day. Garbage. So they call them waist packs instead of fanny packs. $165. Okay, less than 5 minutes. There's 250. I'm going to sell it here because I don't know if it's going to pop. Wow, looky, 260. $3. I did it. Now watch me sell it and it'll pop. 370, 410. I'm out. I'm out. I did it. I'm even. I made up for my two bad trades. May I have another good grade, please? I had to really get into it. Like, I'm not into it every day, but I mean, I really had to be disciplined. I'm quite impressed. After being addicted, I am addicted to trading. That's fact. I overtrade. I don't know if I was by myself, I don't know if I'd be so. I'd probably be more at ease. And I wouldn't spend all day here. I'm happy. Oh boy. 1 minute left. What a day. These days like this wear you out. Yesterday was all fun and games. There's 410 again. 460. We broke the 200. Schwab. You guys frozen stiff. Look at there. 560. Well, there's no way I could have held it for right now. But you can still sell them after hours, so maybe 640. Well, Jimmy's going to go and go shopping for, what do they call it? Belly bags. There's a fanny pack. Okay, well, thanks a lot, everybody. I'm going to take some time off here and go cook a hamburger. That's all I'm going to have for lunch, and some cottage cheese. Thank you, Rob. Thank you, Magnificent. Thank you, Randy. Thank you, Richard. Thank you, Ricky. Oh, Michelle was in. The two Michelles are here today. Tag teaming. In this corner, we got Michelle 1 and 2 against Washboardjim. You're welcome, Michelle. Number 2. Take her easy. The Dow Jones was down. NASDAQ, the NDX, NASDAQ 100 was down 320 some points. Everything else was flat. So really it's not that bad of a day. All in all. So tomorrow should be a good day. SPY bouncing up after hours. See you later, O. Let's have a good day tomorrow. Hope we learned something today. Bye-bye.